1, 2. It works. Hey guys, 1, 1. Welcome to Baltic Honeybadger 2025. So we have a small delay. I call it Giacomo's deviation because he's here actually. So round of applause against all the odds. No, you still have a couple of minutes. Like we have the show is staged here. So just quick recap. We have 3 stages. This is the main stage, which is going to be live streamed and recorded. Then there's I think one of the favorite stages is Cyberpunk stage, which is not recorded at all. No audio, no video, nothing. You're prohibited to film it, so there's going to be hardcore cyberpunk talks. It's going to kick in 20 minutes. And then there's a workshop stage. So enjoy Baltic Honeybadger. I mean, it's going to be interesting. Cheers.
The chaos isn't necessarily a bad thing. All of nature is chaos. Every 10 minutes, Bitcoin seems to have governance because a new block comes out.
When I first got into this space, I thought that Bitcoin was an interesting kind of proof of concept thing.
After being swatted a year ago, I set out on a mission to start my...
I think spend money on Bitcoin. As Bitcoin comes and becomes a more prominent part of everyone's lives, this is one of the things that we have to get used to. We have to get used to having more personal responsibility over our stuff.
Finally, 4th edition of Baltic Honeybadger. After 3 years, we're fucking back. So 3 years ago, I did come here how Bitcoin changed itself.
Speech is a fundamental one.
And now's a great time to build.
How do you guys make money? This is discussion for my process. First of all,
Keeping the people poor is also a strategy.
online is great. We get all that students and all that bullshit that happened for years. We need prisons. That's the key. And if you're building true freedom, it's incredibly difficult to do that with asexual traders. Keeping up with all the reports, I always took the report is really hard to use all the data. Bitcoin is for everyone.
Wow. 1, 2, 1, 2. Yo. So this is working. You guys can hear me? Who's been to a Baltic Honeybadger before watching this? Yeah, most of the hands. So how many people here first time? Holy crap. So, that's awesome. Well done. So for those of you who don't know me, my name is Daniel Prince. I'm the host of the Once Bitten podcast and author of the book Choose Life. I've had the pleasure of hosting this podcast for the last 5 years, and I've had the most amazing guests on, and some of them are here today. And one of those, although he was just a little bit late, is Giacomo Zucco. So please bring Giacomo up to the stage. Give him a great round of applause. Thank you, Giacomo.
Thank you, everybody. Sorry for the delay, but clicker, thank you. So I also had to change the presentation last minute. Anna knows that that's what I do. The reason is that I was looking forward to have fun with you. This is an insider OG conference, so every year we We meet here to have fun together and speak among ourselves. But this time I wanted to do something different. I think that if we keep preaching to the choir, keep speaking among ourselves, talking to ourselves, we are not going to break out, basically. So I decided to change everything. And this year, this is not a presentation for you. I'm sorry. You can leave. The important thing is the recording, so we can actually break out. So nobody in this room is the target of the presentation. The goal is to go beyond the bubble, to go outside of the echo chamber, and to finally, with this speech, reach mass adoption. Thank you. Well, but you don't have to clap. We will add that in post-production for the people outside. So the problem is which target? So who is the target of this speech? And I was thinking 2 days ago while traveling, what could be the target? And then I realized, he hit me, it's bull market again. And you know what that means, right? Even the ones of you that are new to Baltic Honeybadger, you know that bull market is the time that all Bitcoiners are getting girlfriends. Everybody. Even the ladies, sorry, girlfriends for you. Girlfriends for everybody. So I realized that's my target. So now we'll change completely the style and the tone of the presentation. I will drop these matrix nerd colors that are not appealing to girlfriends around the world. I will move to a white presentation, very clean, almost, I don't want to say Steve Jobs likes, but we're very, very close, with shitty AI pictures. And it will be a mainstream presentation for the ladies. So, hello, ladies. My name is Giacomo Zucco. I am married, sorry. But there are many other Bitcoiners. I'm the Plan B Network President, life coach, dating consultant, sex symbol. And the title of the presentation is Digital Gold. There must be some, sorry. Okay, Digital Gold Digger Guide. What to know before trying to date a Bitcoiner. Bitcoiners are built different. They are not the usual dating target you may think. So with this presentation, I will try to guide you with 21 simple rules on dating Bitcoiners. And maybe I will also try to teach you something about Bitcoin in the process. That's not the main goal. So we are here for dating, but maybe something about Bitcoin will transpire from the presentation. So first rule. You are used to have a trade-off, a choice between dating for love, some handsome, poor guy, or dating for the richer, some old, ugly guy. And usually you cannot have both. You have to decide. With Bitcoiners, you finally can have both. You just have to learn the 4 years halving cycle. Basically, you will have 3 years every cycle to focus on personality, on kindness, intelligence, and then 1 year where he will start flexing, like buying new chairs, stuff like that, crazy stuff like that. So you can have both, right? You can live with, you can be with a spoiled, arrogant, rich, ugly old man, and also with a handsome, poor guy. You just have to time the market well. The second point, ladies, is that you may be used to do small talks with different topics. I mean, maybe you are very good at social interaction, but with Bitcoiners, that's a little bit different. Bitcoiners may seem to talk about different things. They may seem to talk about war, poverty, technology, privacy. But actually, there is just one topic, which is what the fuck happened in 1971. Everything else, even if they are working with you and you're looking at the building in Riga, oh, this architecture is nice, but that's not very nice. Yeah, that's because fiat money, basically when President Richard Nixon, maybe you don't know that, ladies, but President Richard Nixon temporarily eliminated the conversion between the US dollar and the gold reserves, so creating the final stage, or the one to the final stage, the final one is CBDC, of fiat money. So whenever Bitcoiners around you are saying anything, just talk about the fact that fiat money is increasing the time preference of society, corrupting everything from food to culture to movies to economy, and creating wars and crime and everything else. So it's one topic. You don't have to sweat it with a lot of different stuff. Just go there. What the fuck happened? There is a website for you, ladies. www.tf happened in 1971. There are a lot of charts about productivity and wages and everything like that. So still talking about social interaction, you may be used to in-group courtesy expressions. Like, let's say that you are dating a Bitcoiner and you have to go to the bathroom, you have to go to the toilet. You may be used to say something like, sorry, I'm going to refresh myself. Something like that, right? Well, in Bitcoin, we have specific courtesy expressions. For example, if you have to leave to go to the bathroom, what you say is, sorry, I have to launch another Bitcoin treasury company. So you have to learn, you know, the habits and practical in-group expressions. So some context for you ladies about this. That was actually, before it was something different from a courtesy expression. It was, there was a reason for that. For example, Bitcoiner used to think that it was hard for institutional players like pension funds to buy Bitcoin directly. There were no ETFs there, so people started to create traded companies so you can buy the share and get exposed to Bitcoin if you are a pension fund. That's brilliant. Then ETFs came, but still, a publicly traded company, they will have more access to credit than you do. So if you want to leverage that access to credit in order to borrow fiat and buy Bitcoin, that still makes sense. Then let's say that at this point, we lost it. It's a little bit out of control. So now it's more general than that. Whenever you don't know what to say, what to do, you just launch a treasury company. That's it. So don't overthinking, ladies. Just launch them. So wherever you go with your new Bitcoiner boyfriend, you have to bring your iPhone and MacBook because we will need it because our Graphene OS pixels and CubeOS think about it will not work anyway. So again, a little bit of context for you. Bitcoin is based on privacy. The main point of Bitcoin is privacy. Even if somebody may think otherwise, the main point of Bitcoin is to have a secret private key that nobody else can see. And if they can know the connection between your identity and your public key, they can just hurt you until you give away the private key. So it's all about privacy. It's all about privacy. So we like to have these kind of tools like Pixels with Graphene OS operating system or CubeOS. They are very good for privacy. I've been a little bit unfair. Well, I just noticed now that this guy looks like the Bitrefill CEO. That was not intentional. Oh, sorry, Sergey, that was just AI, but it came out to you. And so it's unfair to say that they don't work. They do work unless you need to answer to emails, navigate on a map, or get a notification. So, or not overeat and explode your phone. So we still may need your MacBook and an iPhone with us. So rule number 5, don't wear vibrant colors. That's not only expensive, but also completely useless because we cannot see anything but red with the lenses anyway. Red or yellow lenses. I was actually banking on the fact that you were coming on stage with the lens, Daniel, but he didn't. So there may be some background here as well. Bitcoiners understood that they were right about the economy and central banking, and the experts were wrong, like the central bankers. And now Bitcoiners are basically getting used to that, and they start thinking that they may be right about something else where the experts are wrong. That includes a lot of different subcultural trends about health. For example, there is this idea, which I think is reasonable, that we evolved over millions of years to get blue light only during noon and not during night. So if we get that on the eye during night, hormone cycle will be disrupted and we will not sleep well. And then it just became a trend, so we just wear them even at noon, which doesn't make so much sense, but still it's trendy, it's nice, it's cool. So rule number 6, we don't watch sports. Maybe you are thinking that in order to please your new date, you want to bring them to the game, but what we do as Bitcoiner, we don't watch sports, we watch Twitter fights. There is a reason for this. I can also give you some context about this, but I'm a little bit late, so I will, let's say that from now on, I will just give you the rule. And if you need some details about the rule, you can just book my dating consulting service. It's expensive, but it's there. I will give you the contact at the end. Trust me, ladies, it works. And so let's go to rule number 7. Maybe you're worried that even if you are a beautiful woman and great personality, you are not, you're not a teenager anymore, and you're worried about the DiCaprio rule of 25. So DiCaprio is always ditching the girlfriend when he gets 25 and getting a new one. Maybe he's breaking the rule ultimately, but doesn't matter. So Bitcoiners are not exactly like Hollywood superstars. We're a little bit different. So you can relax and don't worry too much about the rule of 25. Actually, for Bitcoiners, it's mildly more interesting when you're 21. And then when you're 22 is already irrelevant because we just focus on 21 and the powers of 10 multiplied by 21. And you will be back to be interesting when you are 210. And when you are 2,100, you will be really a catch. So relax. It's not all about being 21. There are other options there. The comic is nice. I put it in ChatGPT. Rule number 8: don't wear stiletto heels. I don't have time to explain why, but a visual will be sufficient for that. So that could be very, very dangerous. And now, since I was late, so we have to start the real conference, I moved to the most important rule of all, which is Rule 21. Ladies, don't hope for exotic August vacations. I know that you are already thinking, if I date a Bitcoiner, especially during the bull market, it will bring me to Ibiza, it will bring me to Fiji or to Mauritius. I will stay on the beach with a cocktail, with a nice bikini. Sorry to disappoint you, but the point is that, you know, every freaking summer, Bitcoiners will bring you to freaking Riga for Baltic Honeybadger. Just one last slide. Was very short, I know, but you know, mainstream audience, they have a very short attention span. What about all the boys out there? This presentation was, I hope, very welcoming to the general public and very mainstream, and I'm sure that this will reach mass adoption of Bitcoin. But there may be some boys out there. Normies are not all women. So I was being a little bit sexist here. So what about the boys? I have one good news, one bad news, and another good news for you boys out there, normie boys. I'm speaking to you. So, or gentlemen, maybe you're not so young anymore. So the very good news is that now Bitcoiners are a diverse and very large group of people, and you may find a lot of beautiful, intelligent, strong, fascinating women in Bitcoin. So that's the good news for you. There are a lot of female Bitcoiners. The bad news is they are all taken because of statistical imbalance. And sorry, I got the best one. But there is another good news. Bitcoin is for everybody, and the movement is now so diverse and rich that we also have a great LGBT representation. So don't worry, there is space for everybody. Thank you for coming to the mass adoption speech.
Well done, Giacomo, as always. Absolutely excellent. And, excuse me, yeah. Thank you. Thank you for reminding me. And thank you, Lauren, who's back there, my daughter who's in the crowd here, that saw your slide. And I suddenly texted her. It's like, shit, I forgot my blue blockers. I got you, Dad. So thank you, Lauren. Round of applause for Lauren. Now, it looks like... well, we do have a panel, hopefully, come and set up in a second. Are we going to get the chair set up here? And Giacomo has absolutely rug-pulled me with 6 minutes to fill. So you turned up late and finished early, mate. I mean, what the hell? What are we... I mean, I'm dying up here. But it's funny because I was listening to Giacomo, and when he started this talk, my mind went to my other daughter, who's 19, my oldest daughter, who's at the moment across the pond in America. And I woke up the other day and I got this message, this angry message, 19-year-old female angry message, with a copy-paste of a tweet. And the tweet was from a male Bitcoiner that said, "We're all getting girlfriends." And she said, "I hate it when men Bitcoiners do this. Don't you ever do anything like this," because she's now on Twitter and she gets to see what I tweet about all my crazy stuff, right? So I'm like, whoa, hang on. It's just a meme. So I had to call her and explain to her that it is just a meme. And yes, as Giacomo has explained, all of a sudden you get these bots that just get spun up out of nowhere. They all end up in your Twitter DMs. How's your cryptos trading going? It's all really, really badly worded, and the profile picture is always just the most gorgeous looking female that you've ever seen. So that's the context for the normie audience that Giacomo was trying to reach there. Now, I'm hoping in the meantime of this blathering and trying to fill in some blanks there, we have got a few of the panel members ready for us. This is going to be a panel on, well, topic of the day, again, from his slides, Paper Bitcoin Summer. Who's enjoying their Paper Bitcoin Summer? No hands, excellent. Absolutely brilliant. So all of the live stream, I just want to double check that for the live stream, 0 hands went up for Paper Bitcoin Summer. So we're going to have this interesting discussion. I was just talking to Preston about this earlier. So there's going to be a real, hopefully, spicy debate, but we'll never know until it happens. Could we please start welcoming to the stage some of the panel on the Bitcoin Summer? Here we go. Adam Back. Where are you, Adam? You're the first name up there. No introduction needed for Adam. Thank you for coming again. Sander Anders. Do we have Sander? Is he ready? If not, I will move on to the next one. Preston, why don't you come up? Preston Pysh. Do we have Amab Naskar in the house? Stephan, you could be the next up. Yeah. And yeah, right, okay. I'll get you guys, you all got your microphones? All right, we're good to go. Over to you, Stephan.
All right, let's do it. So it's Paper Bitcoin Summer, everyone. Let's talk about obviously the topic of the day. I think there's been a lot of debate back and forth about some of these questions, like is it, you know, how should we think about these things? I think it's obviously, you know, the obvious question will be like, what does it mean for, you know, Bitcoin? Is it somehow challenging the decentralization, some of these aspects of it? And I think some of the obvious questions people might have are things like, oh, well, if you're buying this company at, you know, whatever, 3x MNAV, why are you paying $3 for $1 of Bitcoin? I think that's probably the obvious kind of question. So maybe we should start with some of those things. Like, why should someone pay $3 for $1 of Bitcoin?
So the rationale is the same as any business, which is that it has annual earnings, and you're sort of it's like if you're buying a rental property or something, right? It's generally priced by the interest rate, or a corporate bond by the interest rate. So you've got, you know, the prevailing interest rate, the low risk interest rate, the treasury bonds or something, and then people are benchmarking businesses against that. So if something, you know, if a treasury bond that pays, let's say 5%, people might pay 20 times the annual dividend for it. And they would do that with any company, you know, a company making widgets or electronics, and then in different sectors the multiple is different because they are, you know, in software it's a bit higher, in financial services it can be high, in some other businesses it can be low, and it's just the way that market prices it. It's what people think about the future upside. And in the case of a Bitcoin treasury company, of course its earnings are, its objective is to increase Bitcoin per share. So the question is, you know, how many Bitcoin can it accumulate? And I think the way, you know, the way I was looking at it, which is where I came up with this months to cover metric, or days to cover now, because some of them are quite fast and it's more precision to say days, is, you know, people would say, why would you buy MicroStrategy at 2 times MNAV? And and it has been in that region recently. And so in January 2024, about 18 months ago, if you bought it for 2 times MNAV, then in 2024 they achieved 73.5% increase in Bitcoin per share, and sometime in Q2 this year they crossed over the 2 times mark. So if you bought it in January 2024 and you held it through to May or whenever that crossover point was, now their increase in Bitcoin per share has paid for itself. So at this point you paid a Bitcoin and you own enough shares that there is a Bitcoin in those shares if you multiply the number of shares by the Bitcoin per share. And after that, you can just hold it and they continue to increase Bitcoin per share. So it's creating a Bitcoin return for you, if you like. They call it a yield, but I don't really consider it a yield because, there's nobody paying an interest, right? It's just in effect of the corporate actions they're doing. So that's my reason for why you might want to do that, because, your risk is, well, how long do you have to stay in market and they continue to hit their targets for you to be de-risked by, the shares you're holding that you paid a Bitcoin for containing a Bitcoin. In the case of MicroStrategy, it's about 18 months. In the case of MetaPlanet, it's about 5 months. I think in the case of H100, it's even lower, right? And Sander can talk about that. And so after that, you're holding an actively managed sort of Bitcoin position, which is working for you, which is the interest is to hold, an allocation of actively managed Bitcoin because it increases your Bitcoin holding effectively. It's like a Bitcoin derivative that's active.
I really want to cover this question because it gets to the heart of what is economic calculation. Why does anybody pay a multiple to own a business? Right? If you go out and buy any business in the public markets, what are you paying approximately to own public equity? You want to invest, you want to go buy a business, what are you paying? What's the multiple? We're talking MNAV, you're paying $2 worth of Bitcoin to own $1 of Bitcoin on the balance sheet, but that Bitcoin is growing, okay? How much is the appropriate multiple to pay? Well, I can tell you right now, in public markets, if you go out and you buy stock in the S&P 500, you know what the multiple is? It's 30. It's 25, 30, 35. So what does that mean as far as the return that you can expect to get on a multiple of 30? Well, it's about 3%. Okay, so if you invest $100, you can expect to get $3 back 1 year later based on the multiples of public equity right now. Okay, it's really that simple. So the real question is why in the world is the entire planet willing to pay a multiple of 30 and get a 3% return and wait literally 30 years to get just the principal back? That's the real question, because that's how the entire market is priced today globally, okay? It's pretty absurd when you think about the multiples.
So something I want to throw into that.
But this idea of multiples is just basic economic calculation. Okay, so if you're getting a 3% return in public equity and the debasement rate is 10% or 12%, you're losing 8% of your buying power by buying public equity right now. So when I see something like MicroStrategy, and what was the number, Adam? 78% growth?
73 in 2024.
73% growth in 18 months. And it's Bitcoin, it's not dollars. What are you willing to pay that for? Well, the rest of the world is willing to pay 30 times for fiat, and you're only paying 2 times for that. So, where I'm getting frustrated is this is a business, and people don't understand, well, how is he doing that? How is he capturing so much more Bitcoin? Well, it goes to the whole issue at hand, which is the 40 years of fixed income getting bid because central banks continued to bid it for 40 years straight. And nobody understands that that's unwinding, and it's unwinding because you have Bitcoin treasury companies that are unwinding it. It's really that simple.
So something I want to throw into this is, I think maybe there's, as you guys know, I'm bullish on treasury companies. I'm going to be an investor and advisor also. But I think maybe some of the bewilderment or the bewildering factor here is most people are used to thinking of things in terms of like income statement, right? This company, how much does it earn? How many dollars or whatever fiat, how much do they earn per year? Whereas this is almost like we're playing a balance sheet game here. So isn't that like a little bit, it's kind of a slightly different way of analyzing it and understanding it.
So Warren Buffett would say that to value a business, you got to almost look at it like a bond. Okay, if the business is producing free cash flows consistently and it has an enduring competitive moat, you can value that equity very similarly to the way that you would value a bond and just look at the coupons that you're receiving and then the face value that you get back. And so when we look at a traditional business and you're talking about income statements, going back to this multiple of 30, okay, you're paying $30 to own this business, and that business makes $1 of earnings per year. So what happens is that $1 comes over and sits on the balance sheet. That company can invest that in new assets. It could buy Bitcoin. It could buy other securities. It would be marked as a marketable security on the balance sheet. And then after year 2, they made another $1, and now they have $2 sitting on that balance sheet. And so when you're valuing what's flowing onto the balance sheet and what's being able to be retained there, it's your retained earnings, right? You're figuring out what is that growth rate that retained earnings can grow at. When you look at a Bitcoin treasury company, that's exactly what they're doing. The balance sheet is growing. Whether people understand how it's growing, and I would say that that's why everybody's up in arms about all this, is because they don't understand how he's doing that, right? And what he's doing is he's over-collateralizing, securitizing Bitcoin and issuing fixed income, like 5-to-1. That's how he's doing it. And if that doesn't make sense or you don't understand that, I don't know what to tell people, but it's very clear, and where it's coming from is the 40 years of fixed income getting bid. And that's something else that people don't understand. So my frustration with all of this is that you have to understand 3 main things to really wrap your head around a Bitcoin treasury company. Number 1, you got to understand Bitcoin. If there's one thing I've learned in 10 years, that's really, really difficult for people to wrap their head around. The next thing is you actually have to understand security analysis and economic calculation, which is a little bit of what I talked about in the first response. The third thing that you have to understand, and you have to understand all 3 of these things. You can't understand 2 and not the last one, or 1 and not the other 2. But the third thing is you have to understand that the fixed income market is so broke, so insanely broke, and it got there. 2020, do you know what the 10-year treasury was trading at? 50 bips. 50 bips. So if you had $1 million that you saved through retirement, do you know how much money you made if you invested in a 10-year treasury? Nothing. Because 50 bips is nothing. Right? That's how broke the fixed income market is, and it took 40 years for it to get there. So these 3 things are how they're able to put the Bitcoin onto the balance sheet. They're providing the service or the product that they're actually providing, these Bitcoin treasury companies, is a real fixed income yield to people who desperately need it. So if you're 60, 70, 80 years old, and all you want is fixed income, congratulations, Michael's doing that, and Adam's about to go into the market and do it. He's securitizing Bitcoin. He's giving them a 10% dividend if he's doing preferreds, okay? And that 10% dividend is far superior than anything that's issued into the market. And the irony for me is it's actually backed 5-to-1 with Bitcoin. He doesn't have to make a promise that he's going to go out and hopefully be able to pay the 10% back. It's already sitting there 5 times over collateralized, and the rest of everything else in the market isn't over collateralized at all. It's based on a promise for the company to go make money in the future. And that's a real, I'm looking at all this, and it's very frustrating, because what they're doing is actually providing a huge service to a market demand that is obviously there. That's how he's outperforming NVIDIA for the last 5 years. He's outperformed NVIDIA for a reason. But I'm going to stop talking because I've talked way too much. This is kind of a pet peeve
I think
talk.
it's a great explanation. Yeah. I think it's really well said, because, as you said, it's so difficult to have a good enough understanding across these different domains, right? You have to sort of think, okay, I understand enough about Bitcoin, and am I sufficiently bullish on Bitcoin? What is my long-term view on Bitcoin, right? Because if you didn't have that long-term bullish view on Bitcoin, all this treasury company stuff, it wouldn't make that much sense, right? It makes sense because you have this fundamental view that Bitcoin is going up, as well as you understand some of the, let's say, accounting and finance principles around this, and understanding, okay, there's debt, there's equity, there's different forms of debt and different forms of equity. What are some of the principles and ways that you can manipulate these aspects of it? Now, maybe where the debate could be held is exactly how much of a premium should be justified. And maybe there is a dynamic where maybe the smaller treasury companies can justify a very high MNAV premium because they are so small, they can grow very quickly. Whereas by the time you get to strategy, MSTR size, they're not going to grow so dramatically. Like to your point, Adam, as you said, they had 73% yield in the year 2024. So it's difficult, maybe for them, it's difficult to justify a very high premium, because ultimately, if they've already got 600,000 coins, and let's say the MNAV at some point gets to 3 or 4x, do you really think they're going to get 2.4 million coins? So what do you guys think? Do you think that that's the dynamic? It's as a company is smaller, they can justify a higher MNAV, or how are you thinking about it?
I think it's true for all growth companies in general that you can justify a higher premium. And in our situation, we hold around 765 Bitcoin at the moment, buying around 10 Bitcoin a day. And the last month, we have increased our Bitcoin per share with 150%. So I think in our case, as a smaller Bitcoin treasury company, you can adjust and justify for a bigger MNAV. And more importantly, the most important metric is Bitcoin per share. And I think if you can grow Bitcoin per share quickly, you also naturally in the market get a higher MNAV, and you use that higher MNAV to raise more capital with different metrics, and therefore also increasing Bitcoin per share faster. But I agree that over time that has to go down. Same way in venture capital, you have the high growth in the beginning when the risk is higher, and when the company gets more mature, you naturally get a lower premium until you do IPO. And what's different here is that you take a Bitcoin treasury company public earlier, because you need to be in the public market to access the tools to actually raise on a premium. I'm not saying it's impossible in private market, but it definitely helps being a public market and get the liquidity and get the distribution from a public company.
Now, the other question that I think would really be fascinating, and I still see a lot of room for argumentation here, is the question of how exactly is this market going to develop? Is it going to be like a winner takes all, winner takes most, but based on the different jurisdiction? Or is it more just like, let 1,000 flowers bloom, and actually there can be many, many of these treasury companies doing the financial engineering side of it, not merely hodling, because what we're talking about here is using equity and debt to accumulate Bitcoin. So where are you guys at on this question of exactly how big can this market get, and how much room for the treasury companies that are doing the financial engineering play? Like, how much room is there for them?
I think the question, one of the ways to phrase your question is, how scalable is this strategy? And if lots of companies with a lot of capital do it, will it start to erode the MNAVs or erode the effects, or ultimately converge to one, which is what some people think, right? Now, I think 1 times MNAV doesn't make any sense, because they are able to increase Bitcoin per share. You can illustrate it simply with a convertible note structure, or some of the other structures that Preston was talking about. So with a convertible note structure, a company can raise 150 million, use that to buy Bitcoin today, and let's say they have a 50% conversion premium. So once their share price trades 50% up, if it does, then the person who made the investment can convert that into shares. And so they're able to buy Bitcoin today and yet suffer only 2/3 of the dilution. So immediately you can see, even if they started with a 1 times MNAV, now they've bootstrapped an increase in Bitcoin per share, and they can keep doing it. They can sell some shares at the market once they have the premium. That also adds, that reduces the debt ratio. The converts convert, then they can do it again, and the convert may not even be the most, the strongest way to raise. So the fixed income products like the preferreds are perhaps even more attractive for the company, because they're not even creating conventional dilution, right? And now I do think a lot of this is predicated on an arbitrage, which is an arbitrage between, so there's a price dislocation between the current price of Bitcoin and the eventual addressable market for Bitcoin, which is, how Finney said in 2009, like 2 days after the network started, that maybe it's $100 to $200 trillion, and that doesn't seem like a bad metric today. You can look at macro metrics of sort of types of assets with monetary premium between real estate, bonds, the stock market, which is more correlated to M2 monetary expansion than anything else, and see that there's a lot of monetary premium. People are just desperately trying to protect themselves from inflation. And so if Bitcoin becomes a sort of natural way to protect yourself from inflation eventually once it's fully deployed, and nobody really knows, where that saturates and you get to full hyper-Bitcoinization, what level that's at. But until that's the case, there's an enormous arbitrage. So my argument is it's extremely scalable because, it's some multiple of $100 trillion, and that can absorb, an allocation of cash from all of the cash-rich companies in the world and take decades to chew through. So from that point of view, I think it's very scalable. Now, in terms of the ability of companies to attract investors, I think, there are clearly per country differentiators. So, firstly, there's a kind of, football team, home team kind of, people want to cheer for the local company kind of thing, right? Or they know them in the community. So you get a local kind of brand awareness. And then you also have sometimes some country-specific tax advantage or specific reason. So I think in France, there's an advantage for buying domestic stocks, like some tax advantage if you use a PEA, a type of tax structure. And so there can be country-specific things. And then the other thing is some of the companies have different strategies. So BSTR is active in a cautious way. Others are passive. They just store the Bitcoin. Or they're using different instruments in the market. So they're heavier on ATMs. Like MetaPlanet in Japan is like pretty much ATM. Technically not an ATM, but something ATM-like. And that's all they do, effectively, right? And that works very well for them. But perhaps in a different market, they need to use different strategies because of the market structure. And then I think within a country, you've got differentiators. But I do think as you get lots of companies doing it, it will be hard for people to attract investors if they can't get noticed because there are too many. So I think then you have, also hybrid companies that do have an operating business that is growing. But I think so far the market has not been very sophisticated about valuing hybrid companies because the metrics are, like the MNAV itself is the market cap divided by the Bitcoin NAV. And, if a third of the company is based on its enterprise value, that's going to get lost in that metric, right? And it's hard to determine what is the enterprise value of a company if it's, if its public reporting is summarized across the whole thing. The market hasn't had the opportunity to value the Bitcoin strategy part of the company from the enterprise value, and so it's not really knowable. So, that is a complication with non-pure plays. And then I want to pick up on something Sandra said about the scalability, like small companies can grow faster. So I think, the degree to which a bigger company like MicroStrategy can still grow quickly, it comes down to how scalable the way they're raising capital is. And so you can see with the latest type of preferred, the STRC or Stretch, they were able to sell a lot of those and to get an ATM on top of them so they can sell into the market. That could be scalable for them to a certain extent. But I think another factor is, their average cost of Bitcoin is 75,000 and Bitcoin is, quite a bit more, like 50% more, 60% more now. And so that means, for a new entrant to match them, their cost basis is higher, so their metric, they have to work harder or be faster to match the growth curve. So they do have that advantage, which is some low-cost basis Bitcoin. But otherwise, yeah, it's a lot of capital to raise. But, if they can surprise us and they can raise, if the Stretch product just chews through fixed income demand, fixed income markets are large, maybe they can actually make it happen, right?
Did you have something to add?
Yeah, just to add on how big this market is. When we talk to investors where their main job is to find good companies to invest in, as Preston said, they are now allocating to companies that they pay 30 times earnings, where they now can start to find companies that buys, in my opinion, one of the best or the best store of value. And on top of that, we'll have multiple use cases in the traditional financial world. In the future, then you can ask yourself, like, how many billions or trillions will be allocated to this market over the next 5 to 10 years?
One other topic that I see, and maybe this is kind of online haters or whatever, or there's kind of a sense of maybe they see it like, oh, you Bitcoin treasury companies, you're just trying to like hype it up and dump it on retail sort of. That's like a sentiment we're seeing. How would you guys respond to that? Is it just like, is it a matter of like hyping it up to the retail investors? Or do you know, how would you characterize or respond to that and say, well, like, I presume in your view, as my view is more like, no, there's a real kind of business model here that you're doing this play. But how would you respond to that? Is it kind of extractive to the retail investor per se?
I'll start off by saying, if you're investing in a Bitcoin treasury company, there's more risk than just owning Bitcoin. Like, period. Can you outperform Bitcoin? Yes. That's the debate. So is the risk worth it? Well, that's up to the individual. Do you actually understand the operations of the Bitcoin treasury company? I've had a lot of conversations with people. I would say if I talk to 100 people, 99 of them have no clue how a Bitcoin treasury company actually puts more Bitcoin on the balance sheet in a safe and healthy way. And that doesn't mean that the treasury company will operate in a safe and healthy way. So if 99 people that I'm having a conversation with don't understand the three things that I talked about earlier, don't know how to conduct a health assessment on the company of whether what they're issuing is actually over-collateralized, how much it's over-collateralized by, what the perpetual drag of the preferred stock is, like all of these things. If you don't understand how to do that assessment, should you own a Bitcoin treasury company and have more risk than owning Bitcoin itself? No. It's that simple. You shouldn't, because you actually don't understand what you're buying. Now, if you're just a speculator and you're going out there and drawing like head and shoulders patterns and stuff like that, and that's how you invest, well, have at it. I think that stuff's a bunch of pie in the sky thinking. It's not actually like a long-term buy and hold where you're actually looking at the fundamental value of the business. I think you're just going to get tore up, and you're going to, again, underperform Bitcoin because you don't actually understand what you own. So I think that it's really important for people to understand that Bitcoin treasury companies can outperform Bitcoin. I mean, Michael's a perfect example. Has he outperformed Bitcoin today? Yes, he has. Do I think he's going to continue to do that? Yes, I do, especially if you're holding it long term. As long as he continues to act in a responsible kind of way and he's over-collateralizing everything that he's issuing into the fixed income space. That doesn't mean every other treasury company is going to act that way or do that. And so buyer beware. Actually understand what you buy and what you own. Because if you don't actually understand, you're probably going to lose money. It's that simple.
Yeah, I think another factor is the analysts who work, in the US, it'd be Wall Street analysts, and similar in other countries, initially were not understanding treasury companies or not covering them in an accurate way. I think, for example, the last MicroStrategy earnings call, there was only one analyst that got it within, some distance of right. The rest were wrong by a factor of 20 or something. And that's just because they are applying, metrics that don't really add up for a treasury company. But I think, the analysts will react to that and get more accurate. So I think probably we'll see more accurate Wall Street coverage. I think the accounting rules improved in the US with the FASB accounting, so that might start to help. And I think, in terms of the type of investors coming in, there are, the largest shareholder of MicroStrategy is an extremely large blue chip investment firm, right? So it's professional money, in fact. And I think a lot of the money that has come into H100 has been like high net worth and professional investors as well, right? In the private placement side of it, I mean.
Yeah, we have more or less only raised from professional investors and funds. So I don't see that argument. You can sometimes use that argument against ATMs, but most people that invest should assess their own risk profile and only invest in what they understand. And like you can only protect them by the financial regulation we already have in place.
All right, so go on.
Something that's really important, when you hold your own keys and you take custody of your Bitcoin, you have absolute total control of your money. When you invest in a Bitcoin treasury company, and I said, can it outperform that? Yeah, it can. But again, it comes with the additional risk. You now have to conduct an assessment, and I've mentioned this when I did an interview with Efrat, that what is the proper sizing? Let's say you can understand everything about a Bitcoin treasury company. Now the question becomes, well, how much of that in my portfolio should I own? Because I don't actually control, like I don't have custody of a MicroStrategy share, right? I'm beholden to the execution and the operations of the owner and the manager and the board of that company. It's very different than holding your own Bitcoin, okay? So the sizing is really the question, if you actually do understand it. What's then the appropriate size? We're not even talking about the nation state potentially wanting to institutionalize and take custody of the Bitcoin 10 years from now because they realize they're so in debt up to their eyeball. Like, that's a risk, right? That is a risk. So is that better than Bitcoin? Even if you outperformed for the last 10 years? I would argue no, right? But I also fully believe in free and open markets. And if you want to go out there and potentially outperform Bitcoin, I think you should have the right to do that. But I think you need to go into it with your eyes wide open, and you got to understand the risks associated with the potential, not saying you will, the potential to outperform Bitcoin.
Well said. I think that's pretty much all we have time for, but I think it's worth understanding how these things work, and understanding that, I think a common reaction has been sort of, that's not like in line with the ethos of Bitcoin or this kind of thing. But I think it's worthwhile sort of understanding a bit about how they work and, what are the dynamics of it, whether you partake or not. So with that said, that's all we have time for. So everyone, please put your hands together for Preston, Adam, and Sander.
Thank you, guys. Excellent discussion. And here, Matthew, before I forget. There was actually, it was a very timely piece in the FT yesterday on the plane. For whatever reason, I just wanted to pick up some fiat propaganda and just see what they were talking about in the Financial Times. And on the front page, it was, why are so many companies investing in Bitcoin? So I flicked straight to that page and read it. And it's very interesting to see that is now hitting the mainstream and the conversation is hitting the mainstream. But what was worrying to me, in that particular article, they were talking about a fund that had just raised $888 million to invest in some biotech company. I don't know exactly what it was. I can't remember the name. But I remember the name of the guy that was running it. His name is Bob Diamond. And I was talking to Preston about this. This all feels very, very frothy to me. Now, Bob Diamond, for those of you that aren't aware, was the CEO, chairman of Barclays, who had to resign in 2013 amid the LIBOR scandal, where they were fixing all of the London interbank offer rates. So this guy's still around, and he's raising almost $1 billion, and he's not putting it into a Bitcoin treasury company. It's going to be into Hypecoin, which is his firm's own coin, which when you look at, you follow the money, there's all these umbrella companies. There's going to be a shitcoin casino out there as well. So Preston's last point, if you don't understand this stuff, and I certainly don't, just hold your own fucking keys. Bitcoin in self-custody, that's it. So Matthew Mezinskiks is going to come up here and he's going to talk about the trend is your friend. And I don't know if that's about Bitcoin treasury companies or not. So Matthew, thank you.
Thank you, it's not. Okay, everybody. Welcome back to Riga. Thank you. All right, so this is going to be pretty broad macro about exponential growth. TradFi, gold, silver, stocks, bonds, it's all exponential. You might be surprised to hear that Bitcoin is not. Bitcoin is not an exponential asset, and I'm going to talk about that today. All right, this is a great book. You should absolutely read it. I'm sorry, it's too small on my screen. Too much text for a second slide, but I'm just going to give you a summary here, and then we're going to do a lot of numbers. The time between the computer age and the information and digital age was no more than about 30 years, to be compared with the thousands of years between the stone, bronze, and iron ages. The clock by which we measure time on our watches and digital devices is very misleading. It is determined by the daily rotation of the Earth around its axis and its annual rotation around the sun. This astronomical time is linear and regular. But the actual clock by which we live our socio-economic lives is an emergent phenomenon determined by the collective forces of social interaction. It is continually and systematically speeding up relative to objective astronomical time. It's an important sentence here I'm going to talk a lot about. We live our lives on the metaphorical, accelerating socio-economic treadmill. Major innovation that might have taken hundreds of years to evolve 1,000 or more years ago may now take only 30 years. Soon it will have to take 25, 20, 17, and so on. And like Sisyphus, we are destined to go on doing it if we insist on continually growing and expanding. If we don't do it, we collapse, in other words. The resulting sequence of singularities, each of which threatens stagnation and collapse, will continue to pile up, leading to what mathematicians call an essential singularity, sort of mother of all singularities. I will come back to the singularity. It's not the main focus. All right, I'm going to graph out this. Go back to that line. We live our lives on the metaphorical, accelerating, socio-economic treadmill. I'm going to show you it right here in the first slide. Presentation could be done right here. This is the price of gold since 1800 in dollars. I have 4 trend lines there. The first one is from 1800 to the founding of the Federal Reserve. The second one is from the Federal Reserve until 1971. The third one is from 1971 until 2008, the GFC. And the fourth one is the GFC until today, all right? They stop at those points, okay? So where the, you know, I know it's a little bit hard. This is old, no AI here. This is old school JavaScript. When one of those new lines starts, the other one stops calculating. You can project, but it stops calculating. All right, so very simply, long story, everybody knows gold was pegged to the dollar and the pound sterling for hundreds of years. We actually had more of a silver standard in the US at the beginning, but it was bimetallism and thus Gresham's law. But silver was preferred at the beginning. By 1900, it was fully gold. In any event, it was pegged, okay? So it's really an academic thing. As you see there, gold barely grew in price during that time. In fact, it was about an 829-year doubling, if you wanted to know. It's an 829-year doubling. That was the price of gold in the 1800s. When the Fed came along, of course, separately, Roosevelt in the 30s devalued it from $20 to $35 an ounce. But if you just academically calculated the trend until 1971, and actually gold was starting to go up to the $42 an ounce that they still leave it as today on the books, it's a 52-year doubling. From 1971 until 2008, it's a 20-year doubling. Okay, it's 3.5% CAGR, in case you want to know. And from 2008 until today, it's a 16-year doubling. It's a pretty good graphical representation of what Geoffrey West, the author of Scale, who I just showed you, was talking about. Faster and faster treadmills. And he says in this book, he's a theoretical physicist, like his life's work is in scale, in scaling systems. You have to jump from a faster and faster treadmill. Inflation is actually not the only thing in the book. I mean, he's about technology and systems and growth. Too much to go into here, but you can see it's a faster and faster treadmill. Now, the last one, the current one from 2008, most of us Bitcoiners know, we're probably gold bugs at the beginning, became Bitcoiners, hasn't really been that great. It's only 4.4% CAGR. You can project that out. All right, this is not TradingView lines on charts. These are exponential regressions. Project it out to 2050. What's that trend line price? $6,600, roughly. Sorry, $500. That's like a doubling from today. So Peter Schiff hates this chart. It's not a great actual, coverage of your monetary inflation or your purchasing power debasement. But anyway, that's what gold does. It's clearly a set of ever-increasing treadmills. All right, next one's stocks. S&P 500. S&P 500 started in about 1955, but there are a lot of analysts that have taken it back to 1800. I'm using one here. It's probably even too high. It says 2% per year there from 1800 to the founding of the Fed. But it's a 35-year doubling, much faster, in fact, than gold. The reason it's probably too high is because there's survivorship bias. Like there's a lot of companies that went bankrupt. Railroad companies went bankrupt all the time here. I don't think they're really being picked up in this old stock market trend line. But in any event, it's actually better to be in stocks than gold, theoretically, if you could buy a basket, which you couldn't at the time. 35-year doubling or a 2% per year compounding. All right, from the Fed until 1971, doubling time gets shorter still, 15-year doubling. from 1971 until 2008. Doubling time gets shorter still. 8-year doubling, we're now at 9.6% CAGR. This is 9.6% per year. You graph this out. It's a straight line on log scale. That's exponential growth. This is all exponential growth. 2008, interesting, a little bit of a different thing. We sort of like sliding down a muddy hill and revving the car up faster. We start from a lower base, you see there. The red line is now lower, 50% drop in stocks in 2009. But we went faster still. So the current non-dividends reinvesting, if you reinvested your dividends, you get about 2% more, probably. But it's about 11.5% per year if you did not reinvest those dividends. 11.5% per year, 6-year doubling. Again, a faster and faster treadmill. You don't even really have to talk about inflation. Yes, it's there in the background, but there's also other things. There's technology and new innovations, new discoveries. It's just what happens. It's actually what happens. All right, now let's look. Oh, sorry. This one. So if we can project the last one out until 2050, what is it? $94,000 or point index in 2050. That's 15x today, so much better than gold, which is only 2x today if we project on a trend. This one's 15x. And some people might, the stock market, by the way, is 6,500 right now. So as you see, S&P is 6,400. This is through July. 15x until 2050. You might look at that like 94,000. That just seems insane. Could that happen? It could totally happen. This is exponential growth. The number was 1 back in the 1800s. I mean, it's just exponential growth. There's nothing special about it. This is geometric, exponential compounding growth. It could totally happen. It could even happen faster if the thesis goes where we have to grow even faster to keep up with things. All right, here's the Fed itself, the balance sheet of the Federal Reserve, very famous in Bitcoin space. This is total assets from the Fed going back to the founding. Only 3 trends here, okay? So Fed was enacted without quorum in December 1913. They opened their doors in 1914. Trend line of the Fed from 1914 until 1971. 10-year doubling, rule of 72, 7.6% CAGR roughly, doubles every 10 years. A little bit of a, you can see actually 2 bulges there. You see this World War I and World War II. It still is a misnomer that the Fed helped the US get into World War II. Those were more JP Morgan and traditional Wall Street. Fed only owned about like 1% of US Treasury bonds or war bonds at the time. More in World War II, 10%. They've actually maxed out in like 2020, close to 30% of Treasury debt. That's that, you know, that famous national debt number, 36 trillion, whatever it is right now. The Fed at that time owned nearly 30%. Now they're down to about 18%. In any event, a little bit of a sidebar. They grow pretty fast. 10 years, that's actually the fastest we've seen during this period, 10-year doubling. Okay, now 1971, another little interesting trend happens, okay? What happens? They actually slow down the growth rate from when we went fiat, fully fiat, from a 10-year doubling to about an 11-year doubling, all right, 6.7% CAGR. This is also interesting that it's a little bit lower, but it's also interesting because to a T, to a head, to a person, any talking head that you're going to see on CNBC, Bloomberg, any financier, successful economist, or someone, you know, from people that like somehow people listen to, like Nouriel Roubini or, you know, Stiglitz or Larry Summers, whatever. They were learning under people like Milton Friedman. All these people were learning about economics and monetary policy during this time. And if you look at the R squared there, it's literally 100. It's almost a perfect correlation. It's almost perfect correlation. It's rounding to 100. It's not exactly 100. That would be like a machine. But it's like these people learned their economics when all you had to do was basically increase the Fed's balance sheet at 6.7% per year. You get a trend like that, line like that, and you know, it was the great moderation. Things just seemed like that's all that we had to do. Obviously, that was not the case. Greenspan was a big part of this, and then, of course, Ben Bernanke bailed out like almost the whole financial system, leveraged financial system in 2008. So we moved back up to this 8-year doubling. We're back to the faster growth rates. So it's a little bit different, Federal Reserve's balance sheet, but this is what it is. Now, let's project that last line out to 2050. Okay, this is the beauty of trend lines, simple exponential trend line. Let's project it out. $87 trillion balance sheet by 2050. You might look at that number and say, that's impossible. It's not impossible. It's totally possible. Depends on how things go, but it's totally possible that there could be an $87 trillion Federal Reserve balance sheet by 2050. Today, it's about 6.6 trillion. That's a slower growth rate slightly than stocks, by the way. Remember, stocks were 15. All right, now since we're in the Baltics, I'm going to give a shout out to our Norwegian friends, the Norges Bank. It's a unique one. They have their oil fund. A little bit different of a timeline here. This is the old kroner, just simple, from 1877 to World War II. They grew at a 15-year doubling. They devalued and pegged to the sterling after World War II. They did a 9-year doubling from World War II to 1991. Some different things happened in 1991. Two things. First of all, they depegged from sterling. They went free floating. And also, the oil fund actually came on the Norges Bank balance sheet. So they managed the oil fund, some subsidiary, I believe, which is now not called the oil fund, of course. It's like the green fund. But it was quite an achievement, actually. This is something good for your people. As people might know, the oil fund is basically a pension fund. It's real assets that the Norwegian Central Bank owns. There's a very small portion of monetary base, like printed money, is a portion of this balance sheet. This 20 trillion kroner balance sheet at the time, which is $2 trillion. Most of it is real assets, like owning stocks, bonds, etc. They had a gangbusters growth. From 1991 to 2008, they grew at 20.8% per year. That's the balance sheet. And by the way, when you see these numbers, like the balance sheet of the central bank, the balance sheet of the Norwegian Central Bank, just think, is my balance sheet increasing that fast? That's what you should be thinking about with this stuff. So a pretty gangbusters balance sheet. But then after 2008, they kind of also bucked the trend. So it's not completely scientific, all this. They actually fell back. I would be slightly concerned maybe, or wondering why my performance is not doing as well since 2008. Because as you saw, the stock market's still growing faster, at least the American stock market. Also, this is in kroner, slightly devalued than the dollar over the years, so that would change the calculation a little bit. Anyway, it's a 6-year doubling. It's still pretty fast, still pretty good for them, for the Norwegian people, 13% per year. So anyway, that's another way to look at this. All right, so I just showed you 4 charts of exponential growth. And by the way, Jeffrey West, the author of Scales I talked about, he calls this super exponential growth, okay? This jumping on a treadmill faster and faster. I know it's a little bit different from the Norges Bank here, the Norges Bank. But this is the trend. This is how it works. We generally have to go faster and faster to keep up with progress, or it collapses. So keep in mind, all these straight lines on log scale, you put the axis, the left axis on log scale, exponential growth is always a straight line. That's the whole TradFi world. Stocks, bonds, gold, it doesn't matter, you name it, it follows this exponential trend line. Now let's look at Bitcoin. All right, lest you think I just started charting this stuff. I've actually been following this. Oh, sorry. Missed my cue there. It's even better, the 2020 trend. 2008 trend to 2050, 23x. So this as well, it's still pretty good for the Norwegian people. Even better than the stock market at the moment. But yeah, they double every 6 years. Anyway, this is exponential growth. This is TradFi. This is how it looks. Okay, so now, finally, you see straight lines on log scale in the past few charts. Let's look at Bitcoin and draw a trend line over that, the best fitting trend line. You might notice something. It's not a straight line. It's log scale of Bitcoin price since my data, May 22nd, pizza day, 2010. Lest you think that I'm just drawing stuff, again, this is not on TradingView. I've actually been tracking this for about 7 years now, and it's been following this curve for 9 years. It was a little bit fast in the early years, but since 2016, if you looked at different ways to calculate this, it's almost the exact same line. All right, so it's extremely strong, 96% R squared. It's a good fit. So you might ask yourself, what's happening here? Everything else in the TradFi world grows exponentially, compound interest, a straight line on log scale. What is happening here? Well, let's look at the growth rate now. Remember I told you the growth rate's all those 5% per year, 10%, whatever. Norges Bank gets 20% per year. What does the growth rate of Bitcoin look like if we graph this? It declines. It declines. All right, now on a curve, I know people, you could buy Bitcoin at sub-penny or mine it, relatively for free in 2009. You'd get way higher growth rates and doubling times of your investment. But on a curve, on the average on the curve from 2010, the price of Bitcoin has doubled every 8 months at the beginning, but this has slowed down. All right, so now you can see in the tooltip there, 41.7% per year. That's the current CAGR of Bitcoin right now, of the curve. Not the price at any time, but of the curve. That's a 2-year doubling. 2050, it's a 3.3-year doubling. So here again, we have sort of a query, little enigma. All the other charts I showed you in the TradFi world, their doubling time shrinks. Their growth rate increases. The treadmill gets faster. Bitcoin does the opposite. It is growing super fast, but it is doing the opposite. Now, lest you want to not believe me or go back believing people that tell you Bitcoin is an exponential asset, don't get too upset. I can still show you the growth rate of this curve until 2050. That's the projected price of this curve, which has been incredibly stable since 2016. All right, you see that 205x is well better than any of the other assets. So don't get too worried that I tell you the growth rate of Bitcoin is declining, but that's how it looks. That's how it looks. All right, so we now have a question. All right, going back to the whole idea of Jeffrey West was talking about exponential growth, super exponential growth, is it sustainable? The first 4 slides I showed you, that's how it looks. This is now growth rate, not value, but the left axis is growth rate. Okay, so compound growth rates, they're straight lines across. If you grow at 5% a year, you're continually growing at 5% a year. Then we get to 7, 10, whatever. That's how, this is the treadmill in growth rate terms, compound growth terms. That's what super exponential growth as defined by Jeffrey West. I just showed you this curve, the green line declines. So this is exactly how Bitcoin looks. This is what a power curve is called, a power regression. It's the only financial asset that I've seen and most people that follow this power curve stuff have seen. There's no other financial asset that does this. So there's a logical question that's going to come here. At some point, these are actually going to cross. That's interesting. What does it mean? Is it the singularity? Is it the Bitcoin standard? My answer to you is that I don't know. I don't actually know. I wish I had. We'll leave this one a little bit more philosophical. I don't know the answer to this question. But if you want to know the actual time, roughly, the central banks are already growing. The Norwegian central bank, can be growing at 13, 14% per year. Federal Reserve as well, pretty fast. Let's just say 10%, all right, which is not even as good as the S&P 500. Bitcoin, as I told you, it's 41% per year, but declining. The growth of the curve is declining. It will get to 10% by 2070. So that's one date. But I don't know. I don't know what this means, but it's almost undeniable that this is the math of Bitcoin, all right? Again, don't get upset. Don't worry if you love exponential growth. People tell you Bitcoin is an exponential asset. This is so bad if you're telling me it's a power curve and it declines in growth. Don't get upset again. We can measure this as another way. This is one of my sort of headline slides in my research. Also, since 2018, I've been tracking the growth of the monetary base. That's basically the central bank money. It's most analogous to Bitcoin. Okay, it's about 26 trillion right now. You add gold, you add silver, you get a number that I'm calling like the TradFi base money. It is 44.6 trillion at the moment, 44.7 trillion. That's the green line. It's so slow in growth, actually, compared to Bitcoin that it almost looks flat. But again, it's a straight line on log scale. Bitcoin, you can see this nice curve. It's a sustainable curve. That's another word I don't think I've used yet. It's a very sustainable curve. We're 5.2% right now of TradFi money at 2.3 trillion market cap. When will we reach 100? May 2043. So this is another metric based on the power curve, based on exponential curve for everything else in TradFi, which we will cross. I think about 100% of the TradFi world, which is about $156 trillion, getting close to this famous 100 trillion, even over it. And I would say this is indeed my pessimistic case, all right? I think that it's going to grow faster. But as I said, I don't want to say that definite, because remember, all those other exponential curves, they also grow faster. So it's hard to complete. It's hard to predict the future. But these are pretty solid mathematical trends. So that's sort of the background information of how the math looks. All right. So having said all that, let's sort of now give my opinion, because the other things were literally just math. We have a little time. All right. Here's another metric. All right. FedWire, which is the monetary clearing institution of the Federal Reserve. It's a payment system. This is the base money of the central bank, which is there's close to 6 trillion. It's a little bit less than 6 trillion now in base money that the Federal Reserve prints. It's literally the printing press. $2 trillion is in hard currency, 3.5 is in what they call the bank reserve or the account of each bank. This is what that means. It's clearing it. The value is $3.5 trillion, but the velocity is enormous. This is a flow number. So the Fed clears $1.1 quadrillion a year. That's 1,100 trillion. Bitcoin's trailing 12-month, which is a smooth number, is 7 trillion. It's probably, you could say it's maybe 8 trillion now based on the increase in the price, but this is trailing 12-month at the price at the time. So it's less than 1% of what the Fed does. But this is the payment system that is most economically analogous to Bitcoin. So we have a little bit of time. We're still growing very fast. My opinion, it's been this for a while now, the power curve is 95% of Bitcoin's growth. It is what Bitcoin is. When you see the price of Bitcoin, I look at it and I like to say it's the adoption of Bitcoin. It's literally a picture of the adoption of Bitcoin, and it's a nice sort of asymptotic declining growth rate, sustainable growth rate, by the way. All right, so I think at the moment still, and I just showed you an economic stat just above there, Bitcoin is less than 1% of what banks clear in the United States and worldwide as well. They hold some bank reserves worldwide. It's less than 1%. So mathematically, and just in general, I think what you see, the Bitcoin price action right now, 95% is based on that curve that I showed you. All right, again, why the power curve? They're sustainable. I just don't have enough time in this presentation. Cities, organisms, also Bitcoin, grows in power. A quick little thing to say, I think you might understand it, is again, it's pretty interesting if you read this book. He's really studying scale across a lot of different systems. You know, economies, even nation states, on some level, are unsustainable. We write about it all the time in our newsletters. They're unsustainable. But cities are eternal. Cities are forever. Cities do not grow exponentially. We don't just explode skyscrapers into the sun because of all the growth in the utopian novels. They actually slow down. The rate of growth of cities over the last few hundred years has slowed down on a nice power curve. The same exact growth rate of Bitcoin. Cities grow in power. Organisms do this as well. That's why Godzilla doesn't work. It would collapse on itself. Cities are eternal. They're sustainable. And that's the best back of the envelope comparison I could give to Bitcoin. Economies, nation states, TradFi, it must step up on this faster and faster curve to keep going. If it does not, as some people say, whether they sort of understand the math or not, it will collapse on itself. You have to, if you have this compounding interest again and again and again, all these straight lines on log scale, you actually have to step it up. Super exponential growth, as Jeffrey West calls it. He was not thinking about Bitcoin, or the singularity. I'll touch a little bit on that here. He was not thinking about that. He never wrote about it in his book. But the brass tacks to me is this. All right, you have TradFi, which has ever-increasing growth rates anchored by compound interest, which is the core of the banking system. So ever-increasing growth rates in TradFi. That's exponential. And then you have Bitcoin. It has a declining growth rate structure. It's just what it is. Over time, on a curve, the growth rate of Bitcoin declines. It used to double every 8 months, now it doubles every 2 years. It's soon going to double, well, soon, by 2050, it's going to double every 3.3 years. So in my opinion, TradFi will either go power, that is, move to this sustainable curve, in which case the whole global debt structure would have to change, or Bitcoin will go exponential. It's not impossible that Bitcoin could go exponential, but it cannot be both. All right, so the Bitcoin vision, I think, is the former. In either scenario, Bitcoin will be okay. But the Bitcoin vision is if the world adjusts to Bitcoin, not Bitcoin adjusts to the world. The world moves in exponential, Bitcoin moves in power. But if it is the latter, if Bitcoin, whether through fiat monopoly or certain corporate structures, has to move exponential with interest rates, you will have this question to contend with the Bitcoin system. We have a limited amount of Satoshis, but we would, if Bitcoin went exponential, that means if it grew like every other asset in the world, you would always have more and more compounded fiat interest rates on top of a limited number of Satoshis. How could that work? Would it work? Just going to leave it as a question. And then close again with scale from Jeffrey West, all right? Estimates from the theory suggest that we are due for another paradigm shift within the next 20 to 30 years' time. He wrote this in 2017. Again, he's not thinking about Bitcoin. This is a little shorter than the estimates from Fitz to data by Johansson and Sornet, who suggest a number more like 35 years. The theory cannot, of course, tell us the nature of the change, so we can only make wild speculation as to its nature. Right? We move from one paradigm shift to another. It could be something as relatively mundane as driverless cars and associated smart devices, or something as dramatic as the kind of science fiction fantasy of Kurzweil and the singularists. Most likely it's none of the above, and if we are able to make the paradigm shift, it'll be something totally unexpected. It's a good book. Thank you.
Thank you, Matthew. Excellent. One thing I will just add on, one Bitcoin is one Bitcoin. Very important metric for you guys to remember, and I know you already know that. We're going to get another panel up here. It's another interesting topic that's been kind of hitting the news of late. Obviously, Max is very much deep into this with Debify here. And this is about lending, the idea of lending your Bitcoin, putting up as collateral to get some fiat in return. So we're going to get the speakers up. If we can get Max onto the stage, Max Kai, please. Founder and co-founder of the Baltic Honeybadger. Paolo Guarnerio. Thank you, Paolo. Ambroid. Ambroid. Here he comes. He is coming. Round of applause, ladies and gentlemen. We have Pascal as well, Pascal Eberle. And Preston, you're back up, brother. Preston Pysh is going to be moderating this one.
So we had a conversation yesterday, and if any of my questions are similar to yesterday's, I apologize in advance to the panel. But for everybody in the audience, where I would like to start is we had this conversation last year about Bitcoin borrowing and lending. And what I'm curious is from last year when we were here on stage, what has changed, or what do you see kind of evolving that is different that we can kind of update the crowd on that's happening right now in the space?
I kick it off? Okay, so I'm the banker officially from Signum. We obviously see a lot of demand in lending. I think it's quite natural, right? People who have a stack in Bitcoin, they want to put it at work, so to say, and then there's different ways how people can do that. And one of the ways that we see a lot is that people just take out a loan with Bitcoin as their collateral, and then either reinvest that money or buy a house or use it for whatever other expenses they have. And this trend is definitely continuing to grow.
Yeah, so as expected, it's going as expected. It's growing. The demand is growing, and rates are lower.
Yeah, demand from borrowers, but also I think the perspective from lender is changing. More like institutional lender are understanding that Bitcoin it's a very good collateral, and they're starting to understand the risk. And starting to offer liquidity on different platforms, custodian banks, but also non-custodian platform like Debify.
Yeah, well, I think more platforms, just in general. There are more and more businesses launching lending space, some lending products. I mean, there's like almost every exchange or service that used to do just buying and selling Bitcoin, now they're talking about launching their own like lending, which is great. The only issue is that most of them are custodial, which is not great. The second thing is that there's clearly, because of the supply, there's lower interest rates comparing to last year. Last year it was like 15-16% on the average. Now the market average is probably something between 10 and 12. Another thing, I guess, there's more non-custodial platforms on the market comparing to the last year, and there's more coming in, so which is great. And I would say also one important step forward in getting better transparency on the lending product is that more and more custodial lenders starts to developing or starts to using proof of reserve concept. which actually doesn't prove a lot, but I mean, proves something. It proves that your address where you deposit your collateral, it has the Bitcoin, right? But it doesn't prove how the key management is happening, how they are doing the custody, who's behind that custody. So, I mean, it's good. It's a step forward, definitely. So, yeah, I think these 4 points.
On the institutions kind of being more open to it now, what is driving that? Because last year when we were sitting here, that definitely was not the case. It seemed like it was very retail heavy. If you had a conversation with a bank, it was kind of like, did you just say Bitcoin? Because if you did, get out of here. But that seems to have flipped and conducted a 180. What's the driving factor? I suspect I know what it is, but I'm curious what you guys would say is driving that, because it seems like an international theme that's changed.
I mean, in my eyes, it's clearly the U.S. administration stance that changed and the proliferation of the ETFs, right? I mean, if you have Larry Fink coming out with a Bitcoin ETF, and you're a financial institution saying we don't do that, then you look kind of odd. So I think there it really flipped the narrative. And yeah, I think also there's juicy returns in it, right? Many banks see that. We had, for instance, one large 50 million syndicated loan that we did that was Bitcoin backed lending, and there's many lenders or institutions who want to take part of it because it's really a good deal for them as well.
Also, the proliferation of Bitcoin treasury companies, like that's all the rage, right? So that's locked to publicly traded companies, though. So if you are a private startup that still does have a Bitcoin treasury, you still can unlock it, right? You can borrow against it nowadays, against that Bitcoin or against the other crypto that you've hold, such as Ethereum or whatever. So the perception of, yes, we can actually use our treasury somehow to fuel our growth, that has changed. So I think specifically Debify is very good for this use case where a startup can safely unlock their more capital to like fuel the growth more. Yeah.
I think from the lender's perspective, institutional lender started to understand that there is now this collateral called Bitcoin that they can price 24/7, even during the weekend, that they can liquidate at any time. It's a highly liquid asset. Nowadays, there are so many institutional grade infrastructure that allow them to liquidate Bitcoin if needed. They can use derivatives to hedge their position. It's an asset that they can self-custody or they can rely on multisig, such as Debify, to protect it. And that's very appealing for them. So I think we will see more and more institutional lender jumping in, and I think that's a very good thing for borrowers because rate will decrease.
I guess, yeah, ETFs and treasury companies, number one. Then the price is growing. More and more Bitcoiners are getting wealthier. Obviously, less incentive to sell and more pressure on providing these services to your customers or potential customers. And also infrastructure. I mean, there's different custody solutions on the market at the moment, and I mean, we're getting there. I think last year the main idea from institutional perspective was just buying and holding, and second step after that, you know, exploring different opportunities, how you can derive utility from that, and borrowing and lending is number one after buying and holding.
So maybe a hypothesis where you mentioned these wealthy Bitcoin holders, right? Like these older whales, so to speak. So this is taking a play like from traditional wealthy families where you have this stock portfolio or bond portfolio and you borrow against that. You don't actually sell it. You borrow against that. You live off of the borrowed money and the growth of the portfolio is sustaining you. So this could be occurring right now, like we could be seeing the first glimpses of that with wealthy Bitcoin holders holding the Bitcoin, just borrowing against it, living off of the borrowed money, and having the implied power law growth over time, sustaining this, and just, you know, them staying afloat.
So I'd imagine a lot of people in the audience that have been in Bitcoin for a while are very familiar with all the borrowing and lending platforms that have blown up through the years and how dangerous the space has really been. And, you know, at the heart of that is this idea of a custodial service provider that is not fully collateralizing and making sure that each of the loans are over collateralized versus a non-custodial one where it's very obvious that the funds that are being put in deposit are fully over collateralized and your counterparty is good for what the loan is set for. How do you see that space changing, the custodial versus non-custodial moving forward? What are the driving factors for one versus the other? Do you continue to see custodial lenders being the dominant factor in the market in the coming 5 to 10 years? And I'm just trying to get some of your opinion. Like, are we just going to continue to repeat the same mistakes over and over again, or is the market going to learn from all of that? And I know there's like 40 questions in here, but feel free to go in any direction you want. I'm really curious if the institutions are understanding the importance of non-custodial solutions versus custodial solutions moving forward, and like what that might mean just internationally. You know, is the U.S. figuring it out? Is Switzerland figuring out? What's the main point of view from our institutional representatives here?
Well, if I go first, so I mean, one advantage I would say in defense, so to say, of a bank, or at least in Switzerland, right, is that as a Swiss bank, because you are regulated as a bank, you have clear protection of the assets of the client, meaning that they are bankruptcy remote, you cannot rehypothecate them. So a lot of the mistakes that we saw previously from custodial lenders, they're not even possible by law. So, I mean, the trust that you then have to put is basically in the Swiss banking regulation. I think that you could obviously strengthen this even more by having true non-custodial setups, right? Because this is the great thing about Bitcoin. The technology allows you to do that, so why not doing it? It would be better for all the parties. So far this was not possible because if you lend against, let's say, shares, right? They're just shares, you have a depository, so you cannot really have that in a non-custodial setup. So it's something that was not possible so far, but that will now be possible with the technology. So I do absolutely believe that, in my eyes, this is the clear way going forward, that even the centralized, or let's say regulated custodial lenders should at least explore.
So I maintain the opinion that in a market expansion, greed rules people, and in a contraction, paranoia rules people, right? So said differently, custodial solutions are expanding more in a bull market because they're black boxes mostly. You don't know what's happening with the money. It's somehow somewhere being rehypothecated, whatever the law, So the bear market does expose the meat and the bones of this, and so far, in the last bear market, we saw this with FTX, Celsius, all of these good stuff, right? And non-custodial solutions mostly survived, right? HODL, fucking untouched. It didn't give a shit. It just kept on chugging, right? So I maintain that. We'll see with these custodial solutions, they'll suffer in a bear market, and the non-custodials will just keep chugging along.
Yeah, I think at the end of the day, probably we will see both custodial and non-custodial models succeed. I think there will be borrowers and lenders that will still prefer to go on the custodial side, but for sure, I think there will be more and more also on the institutional side players that will understand the benefits of multi-sig and the non-custodial model. I mean, as Pascal said, clearly the custodial model offer. I mean, it needs to offer certain protection. I think we see more models that rely on the tri-party setup, where you don't have like the native multi-sig protecting the collateral, but you have like a proper legal setup to avoid, the borrower or the lender to misbehave. But there will be always like a trust component. So I think if someone really wants to go for the custodian model, they need to make sure that the platforms or the lender offering the service is it's a reputable one. And but at the end of the day, I think non-custodian, as of today and in the future, will always offer like a high level of security for both sides.
Can I hijack? How do you find reputable?
Well, that's not easy. That's not easy. I think it's important to understand how the platforms operate the custody, like the security measure that they use, the fact that, for example, they legally cannot rehypothecate, that the assets remain off balance sheet. So even in the case that the bank or the platform goes bust, the collateral can be transferred to the borrower. But yes, there is a trust component. So of course, extremely hard to know for sure.
Yeah, that's my argument, right? Because you are this very reputable market maker and a fund, and you're running this exchange as a subsidiary beneath you, and it's illegal to fund this exchange or like siphon money out of this exchange to fund your losing strategies as a fund. But it happened, It was a super reputable company. Everyone loved it. So we are coming back. I don't know. Maybe some of you know what I'm talking about. So trust but verify, right? You've got these solutions that you can be a paranoid fuck and you will be able to use it because you don't have to trust anyone because it's all out there. It's all in a multi-sig contract on chain. And it's a very different use case where I will pay this premium as a borrower to be sure that this money is not tampered with.
I'm fully with you here, right? If we as a bank, we say, hey, your collateral, we put it aside, it's really there as a collateral, it's not there so that we can speculate with it. Why would we not be willing to actually represent that also on chain? I'm fully with you.
I guess regulation is also driving custodial versus non-custodial because in many countries still, banks they need to have full custody of the assets. That's number one. Number two, there's not many solutions on the market that institutional players can come and use them for a non-custodial setup, but it's changing. And number three is demand. I mean, the price will grow and more Bitcoiners will demand to have safer solution. I mean, doesn't matter that you have proof of reserve, doesn't matter that you have like legal structure inside. Nothing can beat the multisig and the TAC because like in Bitcoin code is a law, which we like, and I mean that's how you solve that issue. But of course I hope there will be equilibrium at some point where we'll have like equal amount of options in both custodial and non-custodial lending. But I guess as we'll see Bitcoin, reaching new all-time highs, there will be less and less people willing to use custodial services because it will be like the cost of opportunity will become higher and higher. Yeah, I mean, you can disagree.
He does have a good point, though. Everything does get way more degenerate in the bull market. Yeah,
of course. He said yesterday, people are retarded, right? I mean, we forgot in bull market that there's also a bear market, and you need to be prepared for both, right? It's easy to be successful or best trader in a bull market, right? And when the bear market, that actually proves how successful you are. So yeah, I agree with you. But in general, I mean, there's also other things.
It's like a sinusoid, right? Where in a market expansion, the degeneracy grows. And in a bear market, it's the fear and depression that grows, right? So, yeah.
I mean, in an ideal world, we will have, and I think you mentioned that yesterday, right? We will have like a setup where banks were like custodial exchanges. We rely on multi-sig simply because it reduces the risk also for them. Because as a bank, as a custodian, I don't want to lose the assets of my clients, right? I'm not talking about previous company that were actually stealing, but as a reputable custodian, I don't want to lose my clients' assets. So, and I think multi-sig offer that additional security. So I wouldn't be surprised in the future, where probably also regulation will be more clear, to have banks that will distribute the keys across different parties. And I think that will, just add additional security for both clients and banks.
All right, I want to talk about what I suspect everybody in the room is most interested in when it comes to borrowing and lending. And that is, I'm a Bitcoiner, I have $1 million worth of Bitcoin, but I want to go buy a house that's $500,000, and I want to, you put my Bitcoin to use, but I don't want to sell it. I don't want to sell half of my stack to go buy a house. So if you just look at that simple math setup that I just gave you, they're looking at that option and they're saying, okay, I can go borrow against my Bitcoin, but it's only 1 year in duration, and it's, call it 10% interest rate on that loan. Versus I can go into the legacy finance, I can put 10% down I can basically post $50,000 on the house through the traditional banking system, and my loan is 7% or 8%, somewhere in that ballpark, which is a few basis points less, and it's fixed for 30 years. And so as a Bitcoiner, you're holding this amazing thing, but yet you're like, man, I just don't feel like I can borrow against it based on the setup and the math today. So I guess my question is how do you guys, how do you see this unfolding? Because I think there's going to be a way to do it. As an example, let's say you do that, but you're also able to post an additional 10% of Bitcoin as collateral, and maybe it reduces your interest rate by 1% or 2% or something like that. It seems like somebody's going to come up with a model that works. And one other thing that I want to put in here that you guys can address is you're dealing with something that's hyper liquid, which is Bitcoin, versus something that is super illiquid, which is real estate that like never gets marked. So you also have this kind of dynamic that's in the mix, and from a borrower's lending platform's standpoint, that's something else to consider when you're thinking of the overall risk issues with kind of combining these two things together. So where's this all going is really my question.
So I think maybe 2 points. One is already today, I think, at least, when you work with a bank, we all know as Bitcoiners, banks are closer to the money printer. So the advantage, let's say, of actually going with a custodial lender that is a bank is that you get better rates. That's just very simple, right? I mean, banks can offer the interest rates are between 5 and 9% depending which currency you draw the loan for. You have an LTV of 40%, and then at least in our case, we don't have a time limit, so it's basically like an overdraft limit, so you can take that out on an indefinite basis, and you have flexible repayment or drawing limits. So that offers a lot of benefits. I also think that probably the non-custodial lending might go into that direction if this is what the market demands. So that's number one. I think a little unfair advantage for the banks who are close to the money printer. And then number two, if you talk about real estate, I think it just makes a lot of sense to actually combine Bitcoin and real estate, even though, they're very different assets on the time horizon and in terms of liquidity, but I think it de-risks everyone, right? I mean, if you're a bank and you give out a mortgage, if you know that there's a sliver of Bitcoin in it, it actually de-risks you from, in case that this house loses in value, because you have an extreme liquid asset that you can always measure. And as a lender, I think it's the same point, right? I mean, if you have even if you're not a Bitcoiner, but you take a mortgage and part of this mortgage is actually reserved for a Bitcoin investment, it will help you a lot that in case that the house burns down or whatever, you have some Bitcoin left, and then that helps you repay the loan potentially, or even the interest, or it lowers the interest. So I think there will be a lot of interesting kind of convergence of Bitcoin flowing into existing credit products, be it mortgages or even in project finance or other areas, that will be beneficial for the lender and the borrower.
So, you love this topic, don't you?
I think everybody here loves this topic.
Yeah, you keep asking about it. I was thinking about it a bit, and there's different ways to approach it, like buying a house against your Bitcoin, right? Like if you want to do the simple thing, it would be waiting for the next bear market. Then there will be a product built which will allow. I would imagine that the BFI by then will have like 3 to 5 year loans against the Bitcoin, right? I think that's fair to say that in the next bear market, this will be a thing. So that's the simple solution, right? Just do a 5-year loan against the Bitcoin. You know, you'll eat a higher interest rate because I will only lend to you with a very high interest rate for 5 years. But you will very likely outgrow, just from the collateral value, you will outgrow the interest, right? So then at the end of the 5-year period, you will sell off only a portion of the Bitcoin and you will keep the rest, right? And you can repay with Bitcoin. So that would be option 1. That's like super primitive. The second option that I just thought about is you can say sell off. You've got this hypothetical situation. You've got $1 million in Bitcoin. You sell off 200K. You keep that in USDC or USDT, and you start lending against that on HODL HODL or Firefish or Debify. And you are generating revenue for yourself, which can pay the mortgage directly. And you can just do that with a portion of the money. And you can borrow against the 800K left that you've got, which will like pay for the entire house. You've got a bit in mortgage, and you just keep paying it off with a 200K that's active portfolio that you're still using for lending. So you can be on both sides of this trade and profit from it.
Yeah, I think we are still very early in the sense that in the next few years we will see more and more products around lending. I think for both custodial model and non-custodians, I see also a future where maybe I can use my Bitcoin and my tokenized equity of strategy by Stalker on Debify. Who knows? Like, I mean, there are so many products that will be available to the borrowers, and I mean, we advise also a lot of banks in Switzerland, and there is a strong interest to, as Pascal said, combine Bitcoin with other collateral just to de-risk the overall portfolio. So I think as a borrower, the future will definitely offer a very interesting solution.
The main issue, I think, is that you already mentioned liquid versus illiquid assets and regulation. I mean, real estate is like, it's regulated in every part of the world differently, and it's really hard to scale that type of solution. I mean, banks could be one of the options because they have all the possible collaterals available, and as they will be adding Bitcoin as a collateral, that will be just easy for them to be in one system. And again, there will be infrastructure for that, but I'm not sure that there will be like a single solution. I believe it's going to be fragmented market by market, because there will be like one Bitcoin plus mortgage provider in, let's say, UAE, one in US, one elsewhere. So I think it's really hard to scale that type of stuff, because again, it heavily depends on the local regulation, how real estate is regulated and how the market is regulated there. Yep.
What are you guys most excited for in the coming year, 2 years that's on the horizon in this particular space?
The bear market. I love bear markets.
Same answer as Willie yesterday. Yeah,
I'm 100% in agreement with him.
Why is that?
Because nobody cares about me in a bear market, and I just get to be left alone. Like nobody asks about Bitcoin, and you know, I can just chill.
They say all the buildings happening in the bear market, right? Yeah.
Yeah, it's true. I'm also kind of excited for the bear market because it will show who has a better strategy and who has the better tools, in a way that there will be a cleansing in some way. But I'm also excited for more and more institutional capital being deployed to the Bitcoin-backed lending, because it means effectively for us, whether we're private individuals or we are corporates, it just means there will be more and more money available and the rates will go down, and effectively at some point we might even have the same rate for Bitcoin-backed lending than the assets that you mentioned, like real estate, and there will be no need to overcomplicate things, you know, commingling real estate plus Bitcoin in one agreement. You can just go with the simple first option, you know, borrow against your Bitcoin for 5 years, pay the same interest, buy yourself a house, and that's it.
I mean, when you just think about it, if you're over collateralized and you have something that is deep in the liquidity that Bitcoin is, and it's mark to market all day long, and that's your collateral, versus what, you know, you made the comment earlier that they're sitting closer to the printing press, therefore you're able to get the cheaper rates. But when you just look at the practicality of it, that should be way less risk. And if we're pricing, you know, the cost of money by risk, and you're looking at this and you're saying it's a higher rate, that just doesn't make any sense. Do you think that in the future we are going to have, Max, you're implying that we will. I'm curious if everybody else on the panel agrees with that. And then, like all things in Bitcoin, when do we expect that to happen? Are we 5 years out? Are we 3 years out? 10 years out? What is the timeline when something like that could potentially occur, if at all?
I think it will happen, and we are, I would say, relatively close. Probably, I would say, between 2 to 4 years. As you said, Bitcoin is the perfect collateral for any type of lender. So I don't see why a lender will not want to lend to a very low rate, because basically their risk is extremely low. Maybe I'm too optimistic.
And what's going to be the thing that drives it there? Just the people with the dollars. Now that you have the legislation and the policy in place to start tokenizing sovereign debt into dollars, the people that are controlling those are going to say, oh, I can go over here and lend in an over-collateralized mark-to-market, 24/7 market, and I can get this rate versus these other things that I can do, and they're going to say that's where I want to go. And so that influx of dollar liquidity is going to be the thing that drives down the rates to make it more competitive. Is that it?
Well, you've also got to understand that volatility is just a polite way of saying it tends to fucking crash, you know. So most lenders, they don't like liquidation events. They don't like these unforeseen circumstances. So that's why you're pricing everything higher in Bitcoin terms.
I think it's clear that Bitcoin will become, or I mean, TradFi at some point will realize that Bitcoin is the pristine collateral. How far that's out, I don't know. I'm probably a bit more bearish. I would say 5 years plus still, because we still need to see, I guess, much more adoption, and then also, you know, dampening volatility will help, because TradFi is just so scared of volatility. And then I think it will become clear that, you know, this is the safe haven asset actually that you should price or look at risk reward, and that's the effective hurdle rate then as well when it comes to lending.
I would say 5 to 10 years, and it's very optimistic, because I think that, you know, all other ways of collateral, they're on the market for centuries and tens of the years, and Bitcoin being a collateral as a concept just for the last 5 years, I guess. and being as a collateral as a concept for TradeFi just for last 2 years, probably 2-3 years. So like we need to have some time in a way that if you compare it to real estate been there as a collateral for centuries. Stocks has been there as a collateral for tens of the years. So I mean, just give it a time a little bit, but effectively we'll be there.
Maybe within my lifetime, yeah.
No, I love your point, and this point's really salient because it goes to this idea that they really don't want it to be liquidated. They want to continue to get it back. They want to be repaid in what they were posting originally and not in this other thing that was posted as collateral. Because I think historically, if you had to repossess something, and let's say it was a house, as an example, you go and repossess it and there's no HVAC in the house, it's tore to pieces, and you're kind of left with this thing. But with Bitcoin, you know up front exactly what you're getting. You're getting it instantaneously. It's not like there's anything that's encumbered it or impaired it other than its comparison to fiat. So to your point, I agree with, but you have Bitcoin treasury companies coming on the scene, and what do they want? They want Bitcoin. And so I guess this is a really, and we got 1 minute left, so this is too big of a question for 1 minute, but if they, in a bear market, if they started lending out dollars in the hopes that they're going to have further compression and they're going to be able to get Bitcoin at a fire sale price because it got liquidated, this kind of seems like a ripe place for very savvy people that understand it. Do you think that that might become a market for borrowing and lending?
I think the first company that will figure this out, not selling the collateral and having an opportunity and I would say an advantage not selling the collateral during the liquidation events and just keeping Bitcoin in like long term, they will become eventually very rich. That's a very good strategy because you're basically buying, you're having an option to buy Bitcoin through liquidation somewhere
at a fire
in the future.
sale price, yeah.
And the borrower also paying you basically a coupon for 12 months. So it's a very smart strategy.
Actually, one of the liquidity provider that we are in process to onboard, they actually understood that because we did a lot of like analysis on historical price of Bitcoin, and it basically showed that if you do not sell the collateral during this liquidation period and you either keep the Bitcoin or maybe sell it at a later stage, you're going to have a very decent profit. So I think it's just a matter of time that more and more lenders will understand this.
Watch out. Okay, we're 40 seconds over. Thank you, guys. It was a pleasure.
Thank you.
Well done, guys. Thank you very much for the insights. We are going to stay on schedule here. Short break, yes. I've got the green light from Max there. We're going to have a short break, but 12:30 we'll be back here for the next panel. And just one final thought, if anybody cares, in my opinion, on the last panel there. There's a very important question you need to ask if you're looking to loan your Bitcoin. Where does the fiat come from? If you're giving up your Bitcoin, if you're giving up the most pristine asset that you have a loyal title over, you own the keys, and it's in your hardware wallet, and it's in your possession, and you're going to give that up for fiat currency, where does the fiat come from? Understand where it's coming from. Who's supplying it? Because if something goes wrong, when the bear market does come, your Bitcoin's going to get rugged, that institution might go down, and if that institution is a bank,
yourselves back into the room as we're going to continue our beautiful conference. Please get back to the main stage, and we're going to welcome the first panel. But first, we would really love to see a bit more faces here to give ourselves some more jolly vibes. We know the weather in Latvia is amazing, but let's grab the coffees, let's take a seat. It's going to be a really beautiful panel about building communities. We're going to have people from Israel and from other countries visiting us here on the stage, so please get back in as we're going to start very, very soon. I don't really see much more faces here, but I think that's okay, and let's just continue. As the next panel is going to be about building communities, I thought what a community is, and community is like-minded people who pretty much know each other or have heard about each other, or they are united in a similar mission. And with this, I thought I should introduce myself as well, as I feel like an adopted child of this community, as I've joined quite recently. I'm Charlotte, I'm here from Latvia, moved back from Berlin after a while. I do work in fintech and in financial technologies, not really in blockchain, but here I am trying to get the best out of it. So With this being said, I would like to welcome to the stage our next panel, Efrat Fenigson. She's an independent journalist visiting us from Israel. Please come to the stage. She's been, let's give a round of applause. Thank you. While you're choosing the seat, I'll just say that she's hosting her own podcast for around 11 years, and she's been announced as one of the top tech leaders in Israel. A little fun fact, I saw you were managing Mindspace many, many years ago, and I used to work in Mindspace in Berlin. So that's sweet. Anyhow, enough with bonding. I will give you the liberty to introduce the rest of your panelists today.
Thank you. Thank you so much. Thank you. So the podcast only exists for 2 years. I have been podcasting for a long time, but not this specific podcast, which is called You're the Voice. And if you haven't watched my latest episode with Preston, you should. It was awesome. Okay. Our panel, Building Communities, I want to invite our many panelists. Mike Peterson, founder of Bitcoin Beach, the spark that lit El Salvador's Bitcoin movement. Yeah, wherever you want, just grab a seat. Abubakar, woo, where are you? Yay, Abu. He's a builder, investor, and funder with Recursive Capital and B-Trust, and connector in West Africa's Bitcoin ecosystem. He holds the glue together in Africa. KeyPleb, give it up for KeyPleb, founder of Code Orange and co-founder of Bitcoin Indonesia and Bitcoin House Bali. And Mir Lipani, hello Mir, come along. She's the Hub's director at Plan B Network, part of the vibrant Lugano community called Satoshi Spritz Lugano. It is the best community. I just had the pleasure of being there for 3 weeks. It was amazing. And Mir previously organized 50 Bitcoin meetups in Milan, like in her career. She's been in Bitcoin for a long time. And Eric, come on Eric, author and founder of Epoch VC, venture capital, investing in Bitcoin startups. So let's dive in. I know everyone thinks that Bitcoin treasury companies are the most interesting and important topic these days, but come on, communities. That's where it all starts. That's where the real deal is happening. So I want to start with what made, and because we're so many, I'm going to just direct some of the questions to you. So let's start with KeyPleb, with Mike. What made you realize that building a local community around Bitcoin was necessary and possible in your own region?
So for me, it was very necessary because I moved to Bali in November 2022, and I joined the community. But it wasn't the same. It wasn't the toxic maximalist community over here. It was crypto community. And I thought, you know what, there must be a solution to this, right? Where are all the toxic maxis on the island of Bali? There's none, so I had to create a community, right? It was a necessity from my personal perspective, but of course there is a massive necessity of Bitcoin in any countries in Southeast Asia, especially Indonesia. Double digits inflation, we have censorship problems like internet shutdowns, things like this, so there's massive necessity there for people, and that makes me feel good about myself when I do this sort of orange pill giving to others, right? So just meaningful work, and it was a necessity for my sort of personal mental health even, right? Because all the crypto things is not the same, right? And we want to be amongst maxis and stay toxic, right?
Correct.
Exactly.
Cool. Mike, what about you?
Hello? Oh. Yeah. So when we started in El Zonte, actually our project did not involve Bitcoin. We were really focused on the youth. El Salvador at that time had the highest murder rate in the world, mostly related to the gangs that controlled the country. And we were trying to keep the youth out of the gangs by basically mentoring them, encouraging them to stay in school, paying them and to clean the beach or the river, just giving them basic jobs to keep them out of trouble. And I remember that same time as we were trying to buy a truck for the project, trying to do other things, we had the funds in the US, but just even getting them into the country was such a pain. And as a Bitcoiner, I kept thinking, man, if we could just use Bitcoin for this, it would be so much easier. And then I started looking at, these were little things that were impacting me. I was looking at the people around me, how the lack of access to the banking system was impacting them, and how that was actually creating the problems, creating the lack of opportunities that was driving people into the gangs, that it was really holding back the economy. And so we had the opportunity, somebody came to us and said, hey, we want to donate to your project, but we want to donate in Bitcoin. And this is the one thing, you cannot convert it to fiat. We believe that the true value will come from actually teaching the young people there, from showing the people in those communities that are unbanked how to use Bitcoin as money. And so for me, that was like an amazing opportunity. We've already been seeing this problem, and then to have somebody come and challenge us in this way. Obviously, it was a lot of work to get going, but it's been amazing to see the impact it's had on the way people think in that society.
Absolutely. I want to move to Abubakar. Infrastructure versus inspiration. What comes first? The physical tools like wallets, nodes, workshops, or the mindset shifts that give the people the reason for wanting Bitcoin in the first place?
I think the reasons... Is this on? Okay. I think the reasons have to be a prerequisite for you to have the right tools. I think very so often we get, at least as community builders, the reasoning from folks on the ground saying we don't have the tools yet to build. And I get that, but the truth is, even if you do have the tools, without that mindset, you're either going to misuse the tools or they're not going to be as practically useful as they could have been if you knew what the intention was in terms of the use and the value and utility. So for us, really on the ground, it was basically Africa 4 years ago had no developer ecosystem. The only ecosystem we had was roughly like 5 Bitcoin developers on the continent and a handful of fintech startups that introduced Bitcoin into their flows. So technically weren't even Bitcoin companies. So what we saw really wasn't, we had a large 10x boom in all the tools that we had. What we really had was the small handful of us banded together to realize that we need to get more of us, but not just more of us, like identically. No, we need to get people that are way better than us, way smarter, way better executors as well. And that's how it sparked the whole conversation around getting more developers. And the thinking then was the easiest path would be getting them to be trained and then have them work in Bitcoin companies outside of Africa to kind of bootstrap the whole ecosystem. Some of that worked. Obviously, having the bear market didn't really help with that thesis because all the entry-level jobs were pretty much fired. So that was kind of the downside of that. But the separate good thing was we were able to effectively create a pipeline that was much healthier than the path we took, which was honestly chaotic, just having the balls to contribute. And it became a situation where people now understood from that mindset shift that it is possible, not only through the programs that we introduced because we started thinking differently, but because the output from that program helped to reshape the landscape in terms of what are the priorities, how can we actually solve these problems. So we had to go from bottom up essentially in terms of the thinking and rewiring the entire infrastructure. So that bled into companies being built because of the developers that came out of that. And then from then on, we had a thriving ecosystem in terms of circular economies, which picked up later due to some of the incredible work you guys have been doing. So that's why I say it has to come from the mindset shift, and then everything else falls into place, because the best way for you to have an effective pipeline is to make sure each part of that pipeline, the entry point, the middle point where people get taught all the way up to grants, are as healthy as possible, and that way they can kind of collaboratively work hand in hand.
Makes sense. Eric, your outside perspective on this, what do you think that is more important? How do we build the communities around developers, around cities, etc.?
Yeah, so one thing that I think it was left out of my bio because of probably another talk, but we founded out in Denver, Colorado, the space, and there's 90 members involved at this point, and I think there's a lot of parallels with what you're just saying. When we got this thing started, we were just like, we want it to be really cool. Like that was kind of our founding thesis. We just want this to be cool. We want it to be what people want. And so what does that mean? And we just took people's perspectives, and we had like a founding group where like we could get grants, we could raise money, and we've had support from companies to get it started, but it really came down to what is the motivation that's inspiring to people. That's how you bootstrap a community. I gave a bunch of motivational talks. One of our slogans is grow a pair. That's one of the things that gets people involved. We said, like, be the change that you want to see in the world, and this is a community designed for that. It's really tricky doing it bottom up because it's, I guess, like the common thread is, you want to consider the incentives of everybody that's involved. And you want to say, what's creating value? What is valuable to people? And you look at the particular situation you're in, and you look at the resources that you have, and you say, okay, so we have a competitive advantage with something. And like, us being out in Denver, one of our primary arguments when we were talking to different sponsors and getting people to support is, valuable companies come from the developer community. And in Denver, Colorado, there's actually a massive amount of developer talent for like Ethereum. And we're talking to people and we're like, we're going to turn all these people into Bitcoiners. And here's how we're going to do that. And that was one of like the primary narratives that helped get a lot of this started. Now, like during ETH Denver, we just host Bitcoin events. And we have a bunch of people showing up at all these things. And there's like major companies that want access to that developer talent. So when we think about the incentives, like our organization isn't controlled by anybody. Nobody owns it. We have a board. We have a nonprofit associated with our organization as well. And that was probably the number one thing is we're like, we want it to be cool. We want it to be something where we're not making money off of it. We just want it to be something where if you want to participate in the organization, you can get value out of it in some sort of way. And that's usually like, I can start a company, and we've had multiple companies get started through the organization. Or I can meet people that will give me a job. Or I can be attending private type events or public type events where I'm getting educated within this community. And we deeply ingrained a lot of our roots into the broader community of Denver. So we're part of like the arts district, and we have like Bitcoin art, and we're like the Freedom Art Gallery, and people show up and then we like cram Bitcoin down their throats. And there's all these things that we do to come off as just a broader organization, and then we like, Trojan horse Bitcoin into it.
So you started with being cool, but then you
We're still cool.
Continued thinking, what's the value for them?
That's right. Yeah, we're still cool. That's our North Star.
Great. Okay, Mir, what's working? You've built something with a strong local identity. What project or tactic surprised you with its success? Something that maybe others can learn from?
Absolutely. So I've been involved in growing two communities, one in Milan, the other one in Lugano, which are in two different countries, even though we are Italian speakers in both countries. But what I've noticed is that there are some patterns, something sort of a blueprint that is working everywhere, and some other parts are not definitely adaptable. So for sure, you want to be super consistent. You start early with a community. You are going to get the results in probably 2 years if you're lucky. So you start early. You adjust to the fact that during the first time you're going to be like probably 4 or 5 people, but those are going to be the key players in the future. And also you want to adapt to your community. Your community is growing with you, so you start with the needs of that community. You don't want to impose something else. And adapting and growing, I mean also at the beginning we started informally, and then we decided to do more like formal events, an academy, and the academy is growing with the people, so the level is adjusting to that. So you always want to keep that in mind. And at the same time, you want to, like having somebody growing a community, somebody that really knows that community, that place, that territory. So, for example, we have Satoshi Spritz in Lugano, which, I mean, also already the title says Satoshi, which is for Bitcoiners, no shitcoin. Spritz, which is a popular drink, so you know that you are going to meet other Bitcoiners informally. So those are informal events for Bitcoiners, and this brand works only in Italy and Italian Switzerland. I'm talking about growing other communities somewhere else, for example, in Japan, and we were like, maybe you should call it something like sake, Satoshi sake, or something like that. This is just like a random idea, but you want to really adapt to like the habits of the people there. You want to talk with them, and also, I mean, if they are like, their habits during the day, maybe somewhere the hours for meeting each other is completely okay. 6 other places they prefer during the weekend. So you want somebody from the territory really knowing that part of the world, and that's fundamental, because otherwise it's something that we are imposing. We have this idea about a community, but community is going to grow along with ourselves.
Well, that's really good advice, I would say. Wow, that's great. I was thinking about it as well, right? But the most successful tactic that we came across is really just having this blueprint. So anybody listening over here, best advice really would be just to select the location and space. It always has to be the same, right? So same time, same place. So let's say every second Friday of the month at 6 p.m. I think basically everybody knows that next meetup next month will be at the same location at Spritz or Bitcoin House or any other. So these are the two tactics. Really just try to keep it simple. Another thing is that getting a physical space is really, really valuable as well. Very important. You also mentioned or for example, there's a bar, a basement. I'm yet to go there, but I think it's just really, really nice to have a physical, like a beacon for people to come together. So that's, any community builders out there, it's really important to have a physical space and stick to the simple rules, what you just mentioned, and those tactics to keep it simple. Same time, same place.
You're also attracting international attention with your upcoming conference soon, right?
Yes, so there's a conference coming up on 5th of September, and there's going to be a Bitcoin Week Bali as well, beginning of September. Many of us here are flying there, right? So very exciting. Surfing lessons, book a holiday, right? It's going to start raining very soon. So
that attracts people to a community.
Exactly. You will see the Bitcoin House magic, what's happening over there. It's amazing. So yeah, see you at the conference.
Mike, what about you? Some wisdom, lessons, projects that work, and why?
I think what we always encourage people is to think smaller. A lot of times people, when they want to build a Bitcoin community, they're like, I'm going to reach my whole city or my whole country. And really to see the network effect kick in, it's best to start, we say even on a particular street. It's much better to have 4 businesses on one street that accept Bitcoin than 20 scattered throughout a major city. Because for people to really start using Bitcoin on their daily basis, they have to see it and it has to be available for them to use in the people they interact with on a daily basis. So when you start from a small hub, then those businesses start accepting Bitcoin. They can start paying their employees in Bitcoin who can then spend them in the neighboring businesses, and it kind of ripples out from there. So that was, I think, part of the reason, and we kind of just lucked into this, was in El Salvador, we started in a community that only has 3,000 people living in it, where most people's mode of transportation is walking or the bus. And so they're going to frequent their local stores. Those are going to be where they buy most of their things. And so we were able to pretty quickly Bitcoinize this small community. And then from there, the surrounding communities became curious, and they wanted to be involved in this. They saw the increased tourism, the increased interest of the press, all these benefits that were accruing to El Zonte, and so they wanted to replicate that. Where I think if we would have set out in the beginning we want to, bring Bitcoin to El Salvador in general, and just kind of did a shotgun effect of trying to onboard different merchants, it would have failed. And we've seen that in a lot of places where they do that. So I think it's really core to start in a small circle and let it expand from there.
Absolutely. And if you guys have not been to El Salvador yet, I highly recommend going to Bitcoin Beach. It's amazing what they've done there. Amazing. Abubakar, failures. What didn't work?
That's going to take the majority of the day, but I think just quick highlights across different aspects. On the funding side, it's one thing to be early. It's another thing for the space to be even earlier than you are in terms of your thesis. And it's another thing for you to also bootstrap an ecosystem from ground up, but also from scratch in terms of the mindset shift, making people understand the difference between a Bitcoin company versus everything else, but also making them understand what is a Bitcoin project versus a Bitcoin company. So things that haven't worked are, on the fund side at least, is trying to fund things that look like what a Bitcoin company could be without necessarily having a healthy pipeline to create entrepreneurs that understand how to create an actual Bitcoin company and getting them onto the path of becoming the companies that you actually want to fund. So making sure you're not too early in terms of that. Another thing is incentives around the type of companies you fund. So for Recursive Capital, we're the only Bitcoin VC in Africa. So the challenge for us hasn't been a lack of companies. It's been how do you create an ecosystem that's thriving, not just for us as a fund, but for anyone, and become the source of signal for any sort of external capital that's trying to come in. So being both a source of kind of signal for that space has been really challenging in the sense that the moment you start to invest in any single company, it's a source of signal that that's where the ecosystem is heading. So things that haven't worked in the past has been looking at our fund as a global fund versus an Africa first fund. Initially, the thesis for us was actually funding any projects around the world because we felt like it had consequences everywhere else, especially in Africa. But that didn't work too well given the fact that the actual niche and the building that's required is at a local level, to Mike's point. And that's the best way you can actually build it from the scratch and to make it as sustainable as possible. Now, on the developer side, so many issues. First, like I mentioned, getting developers jobs, it sounds good, but the problem is the moment there's a bear market, they're the first to be kicked out because they're the easiest to get hired. And things that worked actually, which was surprising to a lot of people on the ground, was a more sustainable path was the open source route, which was always seen as like, you know, the pauper version of trying to have a job. But the great work we've done with Beatrice has been not only re-architecting how people think, but even the entire pipeline of sustainable funding for developers, all the way from starter grants to help them figure things out, all the way up to long-term grants that are like a year long. So we've had a lot of successes going from a handful of folks that were employed to over, I think, roughly 40 people working on open source. And I'd say roughly half of that is all funded by Beatrice. The rest is kind of like scattered, but still from the same pipeline. So those are things that work that didn't also work. And the last one really is around community building. I think what didn't work is, to Mike's point, trying to, and it's kind of doubly, it's kind of twofold, trying to copy everything else that worked in other parts of the world that you assume you have the same base problems, but they kind of don't manifest in the same way. You might have shared problems, but they don't manifest the same way. And trying to just replicate that. Another thing was trying to, again, do big things initially. And then the last final point, which I think is still a growing problem that we see, OpenSats and some of the other folks, is people that try to do developer communities or even circular economies, their biggest issue is trying to get a whole lot of funding to do small things that they could do without funding, and they always miss the most important thing in the Bitcoin space, which is proof of work. And the truth is you can't get funding without the proof of work. And for a lot of people, even on the dev side, they feel to get that proof of work, they need the funding, but it's actually the other way around. Your biggest advantage in this space is proving a point, which is that you can do this work. So that's one of the things that still going to take a while for people to understand, but I believe with all the work we've done in terms of establishing fine lines in terms of reporting, the requirements, like we don't even accept an application if you have no proof of work, so you're already dead in the water. And the idea is to make sure we incentivize that. Over the last 12 months, we've seen it go from a large majority of the applications having no proof of work to a lot of them starting to have proof of work. In fact, some actually withdrew their applications and decided to go do the work and then come back.
Got it. Eric, do you want to add something from your perspective on the challenges, the failures, or what's missing in this space of building a community? Is it for startups that you want to invest in or developers?
I think the startups is very challenging. Yeah, it's because to like do that effectively and competitively, there's a lot of resources that need to back something like that. You know, you go left foot, right foot, and you kind of just start making things happen, and you build from there. And you know, I don't think any goal is too small, but it shouldn't be, to Mike's point, like the primary focus when you're getting something going. It's for us, I think the number one thing that we really wanted to do is we said, okay, who's our customer? And it's community members. And what can we do? Because we have members that are paying on a monthly basis to be members. So what can we do that can replace something in their life already, as well as have the Bitcoin aspect? And that was kind of our mode of thinking. We're a co-working space. So a lot of people come to us for co-working. We've had multiple normies just from our neighborhood come in and say, yeah, I don't know anything about Bitcoin, but this spot's awesome, and you guys are really fun, and this is better than other co-working. So can we join, and I can learn about Bitcoin? And we're like, hell yeah. And like we try to be something that can offset a lot of other aspects. There's kind of this, and I don't even know where this came from, but it's like the third place thesis where people have a third, you have your home, you have your work, and then you have like a third place in your life that you can go to. And we were kind of thinking about a lot of it from that. It's just like, what do you want? It's like, why do people join country clubs? You know, why do people join a gym? And we think about it from that perspective of we're kind of offering this third place for individuals that are, you know, kind of more our demographic, people that are more intellectually aligned, people that are curious, typically nerds. They want to learn about economics. They want to learn about technology. And we're just always having events, like, and we think kind of from first principles around that. You know, we have an annual soiree. It's almost like we're a fraternity having a formal, and people love that. Like, that's something. It's just we're kind of just this third aspect of their life, and Bitcoin's ingrained in it. But it's a lot of other things to people, and I think when you think about it from that perspective, that was kind of caused a bit of virality that allowed us to get enough members to be sustainable pretty quickly.
Mir, he touched on something that you guys are working on. Can you share a bit?
Yes. Well, I told about gym. And in Lugano, we have a co-working with a gym and soon a restaurant. And there's an apartment too. So it's a co-working, co-living. And we're trying to create a citadel for our community. It's already in place. It has been since November. It's working pretty well at the moment. So we are very proud to have the POW space in Lugano. And we have the community. The community was forming already since for like 2 years. So I think it's important what you were saying before. You want to stick with a time and also with a specific place all the time, all the week. And we are creating this place because I strongly believe that a space is so important. Physical space, meeting each other there. There's something magic that happens all the time. I mean, between peoples, but also between like their projects, their ideas circulating. And trust me, the best things are happening in the gym during lunchtime and not in the co-working. And of course, in the co-working, we share ideas. There are like this strict time where we are all together sharing our project. But the free time when the mind is wandering, when we are together as human beings and not like focus on our work is where magic happens. And magic means relationship, but also incredible project that people are just starting, new startups and new ideas circulating all the time. I'm such a big fan of physical spaces. We live in a moment where like we can work for almost everything remotely. We don't need to meet every day in a physical space, but there's such a big difference still. And the energy that is exchanged in a physical space is so important. So I will totally, I mean, that should be the goal, if possible, for every community to have a physical space where they can meet each other. And start before with the community probably, because it will take time, and then you will find a place, a space specific, and you can change that, but it's better if you don't change it because people tend to go there. It's very symbolic for a community meeting in that specific place. And also don't underestimate how much, I mean, the competition nowadays is between working at home by ourselves and not other co-working. When you are growing and building a co-working for Bitcoiner, the competition is not other places. You are already verticalized, you have something powerful. But you're competing with people staying at home and not connected with each other.
Yep.
So I think it's super, super important to like retain people in that space too.
Agreed. KeyPleb, just before we wrap up, how do you stay sustainable without becoming dependent on external funding? How do you sustain your community?
So we sustain our community by donations and grants. This is primarily, at least for now. I just had a chat with Roxy from Plan B Network. Later we will start charging people for courses and study cohorts, but to really bootstrap and drive this adoption must be free and open source, must be free therefore, especially in the Global South. People make $300 per month. We cannot charge $50 for a course to do that, not yet at least. Yeah, we'll find a way. So donations and grants, but also later we can monetize and perhaps selling t-shirts as well. There's t-shirts for sale, so we'll monetize that as well.
Okay, so just to wrap up, a quick fireside. If you guys had to choose, would you rather train 10 new devs or orange pill 100 new local leaders? And why? Quickly, Mike.
Orange pill 100 new local leaders, because I feel like the actual spending of Bitcoin and using it as money is what is really going to protect Bitcoin and drive it forward.
Yay.
I would go on the dev route, obviously. And I think the simple answer is because we need a critical mass of the billions of people around the world that use, rely, and depend on Bitcoin to be building Bitcoin.
I can't train devs, but I can be very persuasive. So
you can make them cool.
I can make them cool. I can, yeah. I can dress them up.
That's a big thing for devs.
Yeah, of course, I will choose to have 100 to orange peel, and I think I will find at least 2, 3 between them to like start being dev too. So I'm very positive on that.
I choose 10 devs because if somebody joins our vibe coding on Nostr workshop and then they vibe code some kind of killer Nostr application, then it's a game changer. Or BitChat, a new BitChat, or white noise, or anything like this. So it's that's what I choose. 10 devs.
Awesome. Guys, right on time. Thank you so much. Give a hand to those beautiful panelists. Thank you for doing what you're doing.
Thank you, Efrat.
Thank you.
Thank you very much, guys, for coming here, for sharing your point of view. I hope everyone here perhaps learned something, maybe got inspired a bit. I think communities are really still important, and some people might think it sounds like a bit cliche. However, people need people. People want to find where they belong, and that's why beginning of a lot of things are exactly those communities. If you're wondering why I'm still talking and not inviting the next panelist, is because the stage is being rebuilt. However, I can talk a bit about the next presentation. It's going to be about mining, and I really enjoyed what this person wrote recently on Twitter. Most people, so I'm going to quote him, most people miss the real story behind Bitcoin mining. It's not all machines and megawatts. It's men and women showing up every day, solving real problems and rebuilding pride in forgotten communities. Beautiful. I think with this, I will invite Kent Halliburton on the stage. He's the CEO and co-founder of SAS Mining, and he's going to talk about, or at least the name of his conversation is going to be about Bitcoiners must mine. That's a statement. Please.
Thank you.
Thank you.
Yeah. Not that we should mine, or maybe we can mine, but we must mine. That's what I'm here to talk about. Before I do, I just want to say how grateful I am to be here. It was about 6 years ago. I was living in Portugal. My wife's Portuguese, and so lived there for 6-7 years. And I used to go to this place called The Block and work with this guy. And he'd just come back from the Baltic Honeybadger, and the passion and excitement that I could see from having been here always put a little note in my mind of like, okay, someday I'll get to be here. And it's wild to me that I get to not just be here, but get to talk to people that have inspired me on my journey. So grateful for that experience. But why Bitcoiners must mine? I'm going to get into that. But before I do, I want to first address a point that I don't think I've heard many people talk about, but Bitcoin is a 0-to-1 innovation. We've heard that a lot. What I haven't heard very much is that it's actually 2 0-to-1 innovations. And the first one, we know and love and appreciate the fact that we can send value anywhere on the planet in an uncensorable way because of the decentralized ledger, the blockchain. The second, though, is when we created the first block, we also created the ability for anybody to participate in money printing, right? We decentralized the money printer. So as long as you obeyed the rules of the Bitcoin network, you could generate and create your own Bitcoin. And that simple fact is actually quite profound. So when I say Bitcoiners must mine, I think it's first important to define what a Bitcoiner is because I've not actually heard a definition for this. So this is what I'm going to use throughout the presentation, although it may not be agreed upon. But what I see is Bitcoiners are people that have chosen to save Bitcoin instead of fiat to build a better future. And I think the key distinction there is that word save, because something seems to happen psychologically to people when they start to save in Bitcoin. And that's the point at which they cross the Rubicon and start to see the world differently. And the reason for this, I believe, is because having lived outside the US for about 11 years in 3 different countries and traveled fairly extensively, I've seen that people use savings for the same thing over and over again. And what are these things? The big life events, right? And a lot of this is driven by biological needs and urges, but the first one is just that buffer that allows us to handle situations of emergency, right? And I won't touch much on that because that's just kind of the first step in savings, in my opinion. The bigger ones are actually things like housing, marriages, our retirement, education, all of these events, what they have in common is the fact that they actually help propel us forward in our lives and in our future and help to build out the future generations. And these happen regardless of the cultural civilization. These seem to be fairly common. So savings is fundamental, and hard savings gives us something truly important to stand on. So I try to think of the moment in time when I was saving dollars, right? Coming from the US, that was the focus. I was saving dollars, and it just felt like instead of having this hard ground to stand on, it felt like I was in a hamster wheel, right? And spinning around, trying to keep up with it all. But having chosen to save in Bitcoin, it feels like I'm standing on this firm foundation, and that firm foundation gives hope. And I think that's super important. You know, hope.com is something Michael Saylor purchased. You hear that word come up a lot in Bitcoin, and it's because it orients us towards the future. And there's something really important about being oriented towards the future, and it's because it's extending our time horizons. And when we extend our time horizons, you know, most of us believe that we're more than our five senses, and that aspect of ourselves that's more than our five senses, it's timeless. And so the more we extend our time horizons, the more we align with that aspect of ourselves, and that puts us in our best behavior, I believe, not only as individuals, but also as societies and civilization, right? And so we start to protect the future generations when we think in this way. So there's a prototypical journey that most Bitcoiners go on, and I think we've all, well, most people I talk to have been on this journey, where you buy a few sats on an exchange, you see it go up in value, you buy a little bit more, that was a good thing, and then pretty soon you start thinking, wow, this is maybe too much to keep here, maybe I want to store it myself, so you get a hard wallet, and then maybe after having a hard wallet, you start to feel a little better, and now I'm going to get a node because now I want to be able to transact and not be censored, and then pretty soon you start to think, well, maybe I should get a multi-sig set up so I can be really secure, and then the last stage in the journey, I think, is mining. And arguably, it historically has been the first stage in that journey. What am I talking about? Little known Bitcoin acquisition history. So I rarely hear this point talked about, but if you meet an OG, and an OG I define as somebody from the 2009 through 2012, early 2013 time period, if you meet somebody there, you see that they have a fondness for mining, and it's because you couldn't run Bitcoin at that time without mining. And so that was the primary way that people during that time period acquired their Bitcoin. And something fundamental shifted around 2013. And I personally believe, although I'd love to talk to a Bitcoin historian about this, but I personally believe that it was Coinbase. Coinbase opened up and made it an easy to use user experience for people to buy Bitcoin. And suddenly, the timeline shifted. We had a split. Now most people started to acquire their Bitcoin by buying it instead of mining it. All well and good, but there's been some unintentional consequences. And these unintended consequences are, it's divided buyers and miners. Now, I will ask you, just quick show of hands, how many people are miners here in this room? That's more than I typically see. A few. How many people are buyers? Most of us, right? So you go to any Bitcoin-only conference, and what you'll notice is there's not many miners. If you go to a mining conference, there's not many Bitcoiners. Our community is divided. And I think that that's led to some unintentional buyer amnesia. And what I mean by that is mining has sort of become this odd thing that's kind of left off in the corner, and because it's unknown, it seems like some people in our community sort of almost have a fear of it in an odd way. And this misalignment, because we as a Bitcoin community aren't mining, I would argue is part of the reason why downstream of this, we have more mining centralization. So before going into the mining centralization, I do want to talk for a minute on why this happened, because I think it's fundamental if we want to actually move forward and try to address it. So the first one I've already mentioned, which is convenience. The second one, so these are a little out of order, but the second one I'm going to address is supply and demand. There is a fundamental driver if you want to buy a big amount of Bitcoin to go buy it rather than mine it, because when you mine, it's a bit at a time, right? You're spreading it's like a DCA process, so you can't buy in bulk in the same way. Now, I personally think that the mining community has also let down the buying community because we've not actually delivered a platform to make it as easy to mine as it is to buy. And the reason for that is just self-interest. People have said, hey, cool, it's better if I mine for myself than try to help others. You know, the picks and shovels hasn't gotten so far in our industry. And the last point is a bit subtle, but you know, exchanges, their primary revenue stream is making money off of the exchange from Bitcoin to fiat, right? They take a cut of that. And so they don't have a lot of interest in driving people to mine either. So they're totally happy taking that revenue stream, and frankly, mining is a competition for Bitcoin acquisition. So let's talk about mining centralization, because this concerns a lot of people, including me. And I would argue that we have actually allowed the mining centralization to happen. And the reason for that is because we as a community have been buying instead of mining to acquire our Bitcoin. Had we been mining, we would not have allowed the mining centralization issues to happen, because we would have felt the network threatened and we would have worked to try to avoid it. Now that's a counterfactual I can't prove, but I am going to make a couple points about mining centralization that I think are pertinent to that thesis. So miners are primarily chasing fiat on the Bitcoin network. Now that may sound odd, but if you're a publicly traded company, you have a fiduciary responsibility to return dollars, not Bitcoin. So by definition, you're using Bitcoin as a proxy to get more dollars. And that's a lot of the hash rate on the network. And you can see that there's other centralizing forces that have happened. So this was as of just a couple weeks ago, but about 47% of the hash rate on the network was aggregated in 2 mining pools, Amp Pool and Foundry. That's just two necks to choke to be able to double spend a Bitcoin transaction, shaking the whole faith and confidence in the entire network. That's not much. That's worrisome. Now, there are solutions in place. You know, Ocean mining pool. There's other Stratum V2 mining pools spinning up to try to separate this a bit better. But the other one is the hardware. The supply chain right now for mining rigs is 65% dominated by Bitmain. Again, single throat to choke there. So the solution is we must mine. There's no way around it. And I think there's actually 3, instead of just sitting here and finger wagging at everybody, I actually think that there's 3 reasons. 1 is economic, 2 is moral, which I've done a lot of moralizing already, but 3 is strategic. And I'm going to go through each of these. So the first one is the daily cost to mine a Bitcoin. So we've got a nice calculator on our website that portrays this, but this very simple fundamental fact of how many sats you're getting for the energy you consume, turning that into a price point is something that I display this to many people, and they're kind of surprised. They're surprised to see that for $40,000 less, you can be dollar cost averaging through electricity into a Bitcoin position. And I think the reason why is because a lot of people have conflated dollar acquisition for Bitcoin acquisition. So when you get into mining, you have to make a decision. What is my money? What am I trying to get? And unfortunately, people have analyzed this and tried to put together Bitcoin acquisition and dollar acquisition, trying to trade cycles, and it's really confused people. That's the fault of the mining industry. But if you're a Bitcoiner, you want more Bitcoin. So if you want more Bitcoin, how should you be looking at this? Well, easy. Am I getting more sats by buying or by mining? That's it. And so from that standpoint, it actually doesn't make a lot of sense to talk about ROI. I mean, you've got a 0 to 1 innovation here. It's the only way to generate new Bitcoin. And I will say that again because it took me about 2 years being in mining to make that realization. It's stupid simple, but Bitcoin mining is the only way to generate new Bitcoin. So why would we put dollars into something and then evaluate how long it takes for dollars to come out? You want to see what is the price of the Bitcoin that I receive. So trying to get people away from an ROI mindset and instead a comparison to the exchange price mindset is part of the journey here. The second one that I actually think is more important right now, as the walls of the surveillance state have been closing in on us, is the wild sats, right? I don't like to talk about them being KYC free too much because of the regulatory eye of Sauron that might come down on us. But the reality is, this is a hardware-based experience. You're converting electricity through hardware into Bitcoin, and as a result, it's not in the banking sector. You know, it's not subject to those regulatory walls. And if you're able to get more sats for your dollar, well, it's a shorter time frame to fiat independence, right? Which I think is what most of us are working towards for ourselves and our families. So the moral case, alignment matters. And I've touched on much of this already, but you know, having our social layer here all participate in mining, that's going to put skin in the game for our social layer in a way that right now, just by being part of the ledger, we don't have that same skin in the game. And that makes our network less reliant on corporate profits, you know, the quarterly cycle. I've worked for a publicly traded company. Believe me, these publicly traded mining companies are making decisions that are not always in the best interest of the network when they're deciding when and where to deploy hash rate. Our network becomes more decentralized as the ownership spreads out, so that's helpful. And our community becomes more united. Things like the op return debate that flared up earlier this year would be much less likely to happen. So the strategic case to mine is probably the most controversial of the three ideas I'll throw out there, but I believe our behavior right now is being driven by Gresham's law. What do I mean by that? I mean that we are driven to get rid of our bad money and hoard the good money. And you can see this right now, I believe, because the liquidity profile for this cycle is fundamentally different than any of the other previous cycles. Regardless about what the actual number is on exchanges, and the best data I see is about 2.4 million, the balance has been drawing down for the first time this cycle as price has been going up. That's different. And I believe that that's a function of Gresham's law. And if you look at just this isn't Bitcoin's total addressable market, but it's global M2. This is the liquid money that's sloshing around the globe right now. It's 95 trillion. If you tried to price all of the Bitcoin right now and move it through that global M2, it's 360,000 times as much, right? So it would be trivial for all that Bitcoin to disappear, be locked up, turned into collateral for loans. It just seems obvious to me that that will wind up happening at some point, and that'll move us to an earn phase from a buy phase. So getting involved with mining sooner than later is a strategic angle. So Bitcoin is a ledger and a legacy. I love this picture. And at some point in my life, I'll probably make a trip to go see this particular cathedral. But I love this picture not because of the cathedral itself. This is the Milan Cathedral, but because of how much time it took to build it. This cathedral took 589 years to build. And I cannot imagine any project that humanity would set out on today with the time frame of 589 years to completion. Here's the thing, though. That's the time frame of our project, Bitcoin. If we don't have that mindset, if we don't align with that sort of a time horizon, we're not going to be successful. We're not going to be successful in separating money from state. And we're not going to be successful in securing the next generations. So I see this as not just a strategy to mine, but fundamental responsibility. So how you mine honestly doesn't really matter to me. I just want to see more of us doing it for all of the reasons that I've listed. Whether you're going to go get a bit axe, a hash rate heater in your home, whether your buddy down the street is hosting a few mining rigs and you want to throw in with them. But what we've created at SAS Mining is mining as a service. And it's a fundamentally different approach, and it's fundamentally different because when I came into this industry, coming from a rooftop solar industry, we're building hundreds of rooftop solar systems all over the US each month, and I realized that nobody had come in and optimized for the one thing that you have to optimize for if you're going to deliver mining, which is trust. There's no way for me to have possession of somebody else's equipment without that being a trust-based relationship. There isn't. So thought long and hard about how to do it and said, look, I could make money selling hardware. I could make money selling electricity. But if I take a portion of the block reward now and build my entire business based only on that, now I'm not feeding myself unless I'm delivering for my customers. So that's how we built the business model. And we do that, so no markups on electricity or hardware, carbon-free power in all the locations we are, Paraguay, Norway, the US, and I actually fly to Ethiopia in 2 days to go check out our next opportunity. But our customers own the mining rigs, they own the serial numbers, it's their Bitcoin all the way through, we never touch it, we just have the mining pool split off a portion of it to us as our revenue stream, and so we only earn when our customers do. So that's us at SAS Mining. And Bitcoin is hope. You know, Jeff Booth's book, The Price of Tomorrow, was probably the most important thing to move me from a rooftop solar career into Bitcoin mining, having that energy background. But, you know, there's a sort of an old saying from the 60s that we're riffing off of here, but, you know, plug in, turn on, and stack yourself out of the fiat system. Thanks so much.
All right. How many people are on their way running to mine at the moment? Wow, this is more hands than before when Kent asked about the miners, so that's good. Anyhow, we are continuing. I'm very old school. I like my notes like that. So the next one is going to be a fireside chat. It's similar to a panel, just more intimate. Probably also... Okay, I'm going to keep it to myself. Anyhow, the topic is Bitcoin banks, which is a little bit dear topic to myself as, like I said, I work for a company which is providing technology to banks, and I know how I hear in the industry how many banks are starting to look into crypto, blockchain, and some conversations are happening, so I'm very excited to announce our 3 panelists. Most of them are actually representing banks, but, well, 2 of them are, but the third one has a history with banks from my stalking duties. So firstly, Pascal Eberle, I hope I pronounce your surname correctly. He's Chief of Staff in Sygnum Bank. Round of applause. Sygnum Bank, just so you know, it's based out of Switzerland. I didn't know. So next one is the other Pascal, Pascal Huegli. Welcome to the stage. Round of applause. He is the investment manager at Swiss private bank Merki Baumann, auch aus der Schweiz. And then we have Stephan Livera. He is, well, his history with banks are a couple of years ago at Commonwealth Bank. And now he is running a podcast out of Dubai, if I'm not mistaken. But I'll leave the stage to you to look into the topic of Bitcoin in banks. Enjoy.
Yes, thank you. So we did this exact same panel yesterday. So we'll do for a smaller event, but we'll do our best to try and keep some slightly different flavor of questions. Obviously, you know, going into Bitcoin, there's kind of this early premise of, hey, be your own bank. But the reality for most of us is that you still need to interact with the fiat world. What are some of the services that you see Bitcoiners still need in the fiat world?
Yeah, I mean, if you're a private client, I think probably lending is a big part, right? What we see a lot of demand. So people who have a Bitcoin stack who want to lend against it and either reinvest or use it for day-to-day expenses or larger expenses like buying a house. And for corporate clients, it's clearly very similar. Like we have many miners, right? They earn Bitcoin, but they have their day-to-day expenses in US dollars or Swiss francs. And so as a bank, we just offer them basically on-off ramp and payment services.
Yeah, for us, it's pretty much the same, exactly. That for corporates, obviously, yeah, they have to pay their salaries of their employees also in fiat most of the time, and that's why they're then actually with us, with the bank. And yeah, I think something we see at the bank as well is even sometimes asset management services. You know, like even some Bitcoiners don't hold everything in Bitcoin, which might be surprising to some of you here, and they want to maybe diversify out a little bit. That's at least what we're seeing, and that's where a bank can help as well.
So let's talk a little bit about, where it can really make sense, like the business case to use, these fiat banking services, right? Because unfortunately, we don't live in the Bitcoin standard today where everything is priced and denominated in Bitcoin. People still have to use fiat for a lot, unfortunately. That's where it's at. But I think if you're a savvy Bitcoiner and you understand where the trends are going, right? That if you believe, hey, we're bullish on Bitcoin, it depends on your view. Now, I've been looking at power curve or power law. You might have seen Matthew Mezinskiks talking about some of that earlier today. And so if you believe Bitcoin is just on this big growth trajectory, and meanwhile, your fiat is debasing over time. So what are some of the services that people can use to best, optimize or best take advantage of that? Like if you have this fundamentally bullish Bitcoin view, what services do you think it makes sense to use for the Bitcoin hodler who is aware of these dynamics?
Well, I can maybe, point out two things. I mean, one thing you already mentioned is really the lending borrowing case, and that's where we see some interest from our prospects and clients as well. We really think, okay, I have this stashed Bitcoin. I don't want to sell it all. We've heard it already on other panels. And then you can obviously use some non-custodial solution as well out there. But usually with some of the people, especially if they hold bigger amounts in Bitcoin, it's a trust issue as well. You might not want to go to your startup that has just been around for 1 year or something. You want to maybe go to a bank which is obviously fully regulated, and this way maybe the trust factor is something that plays into this. And I think this is something that we're seeing. And then, as I said, the same is probably where you feel like you have a lot of Bitcoin and you feel like it's all just sitting around idly, and you want to make it work for you. And then maybe what we're seeing as well, that you don't go all in with all your entire Bitcoin stack, but you start to separate it up and divide it up and say, okay, this stack is really cold storage that I do myself, but then with this I put some into the bank, and to also provide or to generate some yield on top of this, and I think this is what we're seeing with banks coming online, that they're, again, maybe more trustworthy, at least when it comes to these yield products. We all have to be careful there for sure, but that's where I think it makes sense.
I also think it's definitely the lending case, right? And as you said, it's prudent to not give your whole stack away, but just take a part of it that you want. And then also, if you decide to lend, obviously you have to be aware of the risks that you go. And I think a Swiss bank in that sense is trustworthy. Or one of the least, risky options in that sense, since assets are completely bankruptcy remote and segregated on a client basis, and there's no rehypothecation of the Bitcoin. Plus, on top of that, you get very attractive rates, right? Especially in the lending, I think a Swiss bank can offer between 5.5% and 9%. That's much less than you pay on decentralized platforms, simply because banks are closer to the money printer. And so that combination, I do think, makes sense to, not everything, but a part of your stack, make it work and put it at work, so to say.
And maybe just to add, one thing that we're seeing as well is the entire inheritance case. I see or have seen startups also now focus on this, even like some hardware wallet providers where they just want to make it as easy as possible that you can inherit your coins also further down the line, But with bank, obviously, we can make sure your Bitcoins are custodied safely. At the same time, you get like a statement every year to pay your taxes if you're still in a country where you have to pay taxes, which is probably most of us. And then at the same time, you get like all of the inheritance plans secured further down the line, which is also maybe something that can be quite valuable to people who have a lot of Bitcoin.
Yeah, one comment I think I might just throw in to add to what you were saying is, I think we don't have to think of it as like a binary 0 or 1. It doesn't have to be like, I put all my coins in this one thing and trust everything to that. Whereas I think maybe that's what may have happened in past cycles, where people, maybe they put all their coins with, I don't know, Celsius or FTX or whatever. And if you had all your coins with one operator and things just, and it wasn't a, obviously it wasn't as reputable and didn't have the same legal structures and security structures, and in some cases was just literally fraudulent, like the FTX case. And so I think it's understanding those elements of it, and also like, what is your view of Bitcoin, right? Like, my view is actually Bitcoin is challenging more like central banks and government control of money. Like, for me personally, I'm okay with the idea of Bitcoin banks per se, but I still obviously have the not your keys, not your coins mindset. So the way I would think of it is more like, yeah, keep most of your stuff, in your hardware wallet or your multi-sig, and only put in what you need to do, let's say, a loan or whatever services or transactional services or even trading services, whatever. That's how kind of how I'm thinking about it. And then, I just think it's getting away from that binary mindset of like the zero, like either all or nothing. That I think can be, once you get away from that mindset, it can open up more opportunities, right? Like, that's why there's so much excitement about paper Bitcoin or whatever, or even lending, because again, if you have that bullish view, there's an opportunity there, isn't it?
Yes, for sure. And maybe just to add on as well, I think it's maybe banks also play somewhat of a transitionary role, because like if I'd like to myself maybe do everything on chain, like trust minimized as possible on like real layer 2s, for example, and stuff like this, the whole lending, and then also maybe reaching into fiat and stuff. And obviously at some point, maybe it will never be possible, because with some things you just have like a central sort of counterparty that needs to be present. But then I think the further we go down the line, maybe in 10 years time or 20 years time, more will be possible on like trust minimized layer 2 solutions, and then maybe people don't turn to banks anymore. But nowadays this is just not the case, and that's why I think we see demand for banks like us to provide these solutions.
I think also, especially, it's not just private individuals. And I think as a private individual, I would encourage everyone to do self-custody, right? It's just great to see this technology work for you. But if you think about corporates, right, many of them, they have strict governance requirements. They cannot just work with a decentralized counterparty. So they need to have actually regulated counterparties. And so just, it enables basically this whole group of clients to participate in the ecosystem or get exposure to Bitcoin. And in that sense, I also think this role of Bitcoin banks, they also help basically drive then the further evolution of Bitcoin and towards the end goal of hyper-Bitcoinization.
Yeah, I think that's a really interesting point to make there, because maybe for many of us, when we're thinking about Bitcoin, we're thinking about it as an individual, right? But actually, where is a lot of the capital of society? A lot of it's in businesses, and B2B, the B2B market is actually really, really big. But we as consumers, let's say, we're often thinking in the B2C context of like me as an everyday retail guy on the street buying a water bottle or whatever. That's kind of the retail transactions we're thinking of. But actually, our economy is made up of these big, capital structures. And as you said, there are certain legal and regulatory and rules that around that. Now, of course, we could challenge some of those legal and regulatory rules, and maybe that changes over time. But it's just interesting and important to note that as Bitcoin grows up and becomes more adopted, there needs to be tools and services and products that work for entities, businesses, and even states, even governments will start to use these things. I'm curious as well where you guys see, like, there's kind of, in crypto land, there's kind of this kind of DeFi, crypto side of things, or even what you were touching on, Pascal, around like doing loans on chain, or even like, like Debify and HODL lend and this kind of thing. And then on the other side, you've got, let's say, the TradFi style of doing, just fully custodial loans. Do you see these worlds merging? What does the merging of these worlds look like?
Yeah, I mean, in the end, I hope that it will be merging. I guess it already is to some extent, but again, it probably starts out with like real trusted solutions, because people are sort of used to it, and that's why even to my or in my feeling, I would encourage people to maybe look at the bank, who's been in the business for quite some time. They have all these risk management tools and stuff, instead of going to this very, very risky early startup. And obviously for some it might be the solution because they are the risk takers, but it's not for everyone, And then I guess further down the line this starts to merge, and this is exactly with what we've seen with Debify, like these companies that are hitting up banks and telling them, okay, look, if you integrate us, you can take off a lot of, or we can take away a lot of your headaches as well that you have in your back office and with managing stuff. And this is where banks then maybe the more open ones are then like, okay, yeah, this sounds interesting. And there I see a convergence of these things happening for sure. I just take it probably takes a couple of years to really materialize, but we are seeing it.
I also think that there will be kind of a merging of the, let's say, two worlds almost, that it's just a natural evolution of the maturation of the field, right? So you will have the, let's say, the non-custodial, non-regulated solutions that potentially some of them have to get more regulated in order to serve the clients. Whether this is good or bad is for everyone else or themselves to judge. But just to be actively in the market, right? MiCA, for instance, now lending and custody of digital assets is regulated for the whole EU, and that will happen in many jurisdictions. And then on the other side of the fully custodial service providers, I think there's a lot of benefits that you can get from, you know, because technically it's possible to do multi-sig, so why not do it, right? It makes it safer for the borrower and for the lender, and so it's a no-brainer in my end that this is a natural evolution where the centralized players will also take advantage or incorporate this technology.
So let's talk a little bit about what that might look like. So as you were touching on, multi-sig, I think Debify is an obvious example. It's like, as I understand, I mean, you guys correct me, I think it's 3 or 4 multi-sig, and the customer holds one key, and I think, is it Debify holding another key, and then the banking partner can hold one of the keys. Is that, are you guys familiar with that setup? Or yeah.
Well, not in detail, but yeah, in the end it can work like this. You know, you can have the bank, you can even have the client, or maybe the client can have some law firm that he trusts as well, or something else, a trustee or something, hold the key. But I think there's many variations to this in the end. You know, this sort of collaborative custody thing. And I mean, technically this is very easy, and I'm no lawyer at all, and so just take this with a grain of salt. But as far as I'm informed, there's also the regulatory side again, as of now. You know, that the regulators, when they're looking at this, they have like this old sort of regulatory saying that there needs to be a custodian which sort of holds all the keys, like this real centralized structure. And now with this more collaborative thing, they don't even know how to deal with this, you know. And I think there we need to sort of see a mind change as well happening. And as we all know with regulators, this takes time because they need to understand it. They need to kind of think through and see, okay, yeah, we see the points. It's actually even more, it's even safer than the thing that we have right now. And so this is sort of a sea change that will have to come underway, and I think it's only just starting, but that's the reality as of now.
Yeah, I think, you know, many of us are familiar with 3 out of 5, I guess, in the institutional space. That's probably the model that we will see more than the 2 out of 3 that you see more on a peer-to-peer level, just because you will have, naturally you have the borrower, you have the lender, you will probably want to have a trusted, you know, third party like an auditor or accountant, whatever, and then tech provider as well, and so you probably rather move into that direction. But yeah, as you said as well, I think there will be different models that cater to different needs, basically.
So when it comes to your customers that you, well, I guess, obviously, I'm sure you have many different customer types, but where would you say, like, the typical maturity level is for them? Like, would they be comfortable using hardware wallets or not so much? What's the experience you've seen there?
I think we see, like, the whole spectrum, right? We have clients that basically transfer in Bitcoin from their hardware wallets. We have other clients who bring fiat and get the first-time exposure to Bitcoin through our services. So and both on the corporate and the private side, actually, which is quite interesting, right? So you see sometimes corporates and you're like, they're big companies and they have like, well, we have a hardware wallet here with a couple of hundred Bitcoin. You're like, what the heck?
Oh.
No, not even multi-sig or anything. So then, you know, yes, that's a quite interesting risk profile they had so far. So it really depends on the type of client you have, I think.
Yeah, it's the same with us. As you explained in the beginning, it comes down to your personal philosophy and ethos that you have. And so I guess, yeah, with our clients, we have some of the older people in Switzerland, and they couldn't care less, you know, how their Bitcoins are stored in the end. And they're probably even, as I said, they trust the bank more than anything else. And that's why they're keeping it with us. But then with the younger folks and maybe the ones coming out of the Bitcoin sphere itself, they're obviously more keen to this. And are maybe, as I said, they divide it up themselves and just have sort of a fiat or a Bitcoin fiat stack in the fiat world, and then the other ones is still cold storage with them.
Yeah, okay. And now when it comes to, I guess, running professional grade custodians, I know you can probably touch on this from the Signum perspective. What are some of the things, what are the main demands? Is it usually things like, oh, it needs to be a qualified custodian, or you've got to have like this SOC 2 report, or like, what are some of the typical requests or demands that either the professional, businesses will need in order to be comfortable?
Yeah, I think there's clear industry standards. You have the SOC 2 that you mentioned. You have ISAE audits or other kind of these kind of certifications that you need to fulfill and regularly. Where you also have, or at Signum we have external and internal pen testers that come in and check the systems and the safety, let's say. So I think that's just it's very basic, let's say, in the institutional space. That's a kind of.
Yeah, in the end, I was just amazed. I think it was discussed yesterday as well. The Bybit hack, that happened a couple of months ago and stuff. And there, I was also informed then by our sort of core team, who manages custody. And I really don't want to piss here on Bybit, but from what I've understood, that they told me there were sort of like consumer grade hardware was involved. And this is something I think at the Swiss bank, at least I can speak for both of us, this would probably never happen. That you use sort of consumer grade hardware to ultimately store your assets, even though the problem was bigger, with Bybit. But this is something I was told. And here, I mean, for us, it's really, we use like these HSM, hardware security modules. It's called somewhere deep down in a bunker in Switzerland where you actually store this. And so, I think this is also demanded, by the type of clients that we have, that it's really institutional grade stuff that they're dealing with in the end.
I'm thinking probably some of that just hinges on what the actual use is, because some of these, for example, in the Bybit case, maybe they're doing very regular transactions. So in that case, like, it needs to be more readily accessible and not kind of in the bunker sort of thing. But again, you would segregate, right? And I think the Bybit case, as I understand, there was like a special part of that was like the difficulty of securing, shitcoins like Ethereum, that, the hardware wallet was not able to actually. So I guess it's a bigger, broader debate because of like they weren't quote unquote clear signing. They didn't know exactly what they were signing. But then the broader debate is like actually because of Ethereum and the EVM and stuff, they couldn't actually verify what was happening there. Whereas in Bitcoin land, we would have like a PSBT and you would see, do you want to send XYZ number of Bitcoin to this address, yes or no? And that's what the hardware device says. Whereas like in that, I think it was they're using Gnosis Safe or something, and it doesn't exactly, it's just like a byte string, and you can't really verify exactly what that is doing. So it's a bit of a complicated one there. But yeah, as you said, it's kind of, there are different demands at different levels of, what level of security and, let's say, guarantees or assurances and audits and controls that people will be looking for. But I guess we've only got a little bit of time left. So any last quick comment on, I guess, where you see the opportunities with Bitcoin banks?
Well, yeah, I mean, as I said, if you are sort of a Bitcoiner, who thinks like, okay, maybe at some point in time I might be my own security risk as well, I want to diversify, then obviously I think a bank, especially in Switzerland, is probably the right place to go. But yeah, I mean, in the end, it's really an individual edge case. Everyone has to decide for themselves. This is something I think which is obvious. You can't push anyone into anything. But yeah, I mean, the needs are diverse, and that's where we can cater to as well.
Quick comment. And then
yeah, for sure. I think everyone should self-custody and get the true ethos of Bitcoin. At the same time, I think Bitcoin banks are good for Bitcoin as well, because it will help proliferation and enable much more people and corporates, especially, to get into this asset class. So everything is good for Bitcoin.
Yeah, that's right. All right, everything's good for Bitcoin. Everyone, please put your hands together for for Pascal and Pascal.
Thank you, gentlemen. So the next conversation, on more like a presentation, is going to be a bit dramatic. It's called Bitcoiner Kidnapping. When I read this, I thought to myself, like, I don't want to bash any place, but you know, people talk now that in London it's becoming more dangerous, and a lot of people are moving to Dubai where it's more safe. It's just a conversation which I'm hearing here and there. And then I thought, okay, if that's happening in London, so where do Bitcoiners go? And if they're being kidnapped, so where is it safe? But hoping that the next panelist or presenter is going to answer this question to me.
Just one presenter.
Yeah. And with this, I will introduce Alena Vranova. She's a founder at Glock, and I saw on her X profile that she's branded herself as personal freedom lover. I'm guessing it's also somehow connected with your topic about kidnapping. So Bitcoiner kidnapping, Nostr fixes this. Welcome with the round of applause.
Thank you. Alice, please play the game. I have an Alice in the back that's pushing the buttons. And as she's preparing the video, I would just start in every week. There's a Bitcoiner, at least one in the world, that gets kidnapped, tortured, extorted, sometimes even worse. And that's not a nice situation. We knew all along that the $5 wrench attack is going to be one day a prevalent thing that we will have to deal with. But nobody's ready. People don't want to think about it. It's not a nice discussion to have. People don't want to prepare for that because then they have to think about it and discuss it. But I think it's super important that we do address this topic, because I don't want us, after going such a long way, creating all this beautiful technology and having this amazing community around us, I don't want us to go around the world scared or anxious. I want us to be strong, resilient, and better prepared. And that's why I'm today here talking about this. Behind me, you can see all the cases that are documented. These are over 200 cases of kidnappings of Bitcoiners and crypto people alone in the past 10 years. And what seems to be like a problem for the Bitcoin OGs is not really the case. We have seen cases of kidnappings for as little as $6,000 worth of crypto. We have seen people murdered for as much as $50,000 in crypto. So if you're thinking that, oh, I'm not an OG, I'm not a CEO of a company, I don't have hundreds or thousands or millions, I'm not a Satoshi, then you may be not nicely surprised one day that actually there may be bad people trying to get onto your money. And so who's actually at risk? There's estimated 700 million Bitcoin and crypto users. Some estimates go up to 1 billion worldwide. About 80%, and this is just a guesswork, 80% of them at least went in one way or another through KYC on a regulated exchange, meaning they left their home address with that company. We have currently more than 18 million Bitcoiner and crypto user identities leaked online. 2.2 million out of that contain home addresses. It's just a question of going on the darknet, downloading the Excel sheet, prioritizing by either location or transaction history. I don't want to bash companies that are the cause of this, because they have to be compliant with the law, they have to collect KYC data, although I'm thinking that it's not really necessary to conduct business in the digital age, but they do. They're trying their best to protect this data, but they fail. And we knew that all along. I like to say, don't collect what you can protect. So that should be a mantra for these companies, but it's not. So we have to deal with the actual situation that, okay, I have used an exchange in the past, I may be exposed. But not only that, people that never touched a Bitcoin exchange, but they are advocates. They love to talk about Bitcoin with their friends, and they have been talking about Bitcoin since forever. And now their friends talk to their friends in the pub, and they may say stuff to people that are not so good, right? Things are changing as price of Bitcoin is going up. I've done a nice graph. It's published on glog.me on our blog post, a graph that shows beautiful correlation between the upticks in Bitcoin price and the number of kidnappings. It just goes hand in hand. The more popularity Bitcoin gets, the more exposure these kidnappings get in the media, the more criminals get inspired. Who are the attackers? The attackers are either just ad hoc petty criminals who see you transacting with your Bitcoin wallet in the pub, and they drag you in the taxi and start beating and demanding what you have on your wallet. But there are also very highly organized criminals that do kidnapping as a service. And so there's a lot of groups that have organized level and then just soldiers in the field that go and execute. We saw recently France with a huge uptick in kidnappings of crypto-exposed people. So, is this still going? We're still nowhere the end. Or maybe we're gone again. Please, Alice, let's move on. I don't want you to be depressed. Hey, let's do something about it. And so I started thinking, what do I do about this? Okay, I started prepping myself because I'm exposed. I've been in the space for a while. And I said, okay, I have all these super wallets, multi-sig, passphrases, whatnot in place. But what do I do when someone is threatening with physical violence, me or my loved ones? What do I do next? And I said, okay, I better get trained. So we pulled together with my team a counter-kidnapping training tailor-made for Bitcoiners and crypto guys. Yesterday we had one. I think it was a great turnout. Thanks. Some of the faces I see were there, so it was really, really good. Because technology itself is not enough. Having all the tech in place, we Bitcoiners love to overestimate the importance of technology and underestimate the human factor. So I think the combination is really important to match. And now I think I'm in power of this, yes. The other thing that I did was a physical security checklist. I started for myself to go through what I have done, what I need to do. Is there everything that I could have done to prevent people from finding me, locating me easily? So please go ahead and download the checklist and just fill it out for yourself. Print it out, okay? Spend a beautiful romantic evening with your loved ones at home to go through the file. I think it's a fun topic. Do that. And then as I was going through all possible scenarios, I was thinking, okay, the last point that I came up with on the file was, how do I get found when I most need it? And I was researching the market for all potential, panic buttons and tracking devices, and all I found was like persistent surveillance gadgets. Companies that harvest your data, that trace you continuously. And I was like, that's nothing for a Bitcoiner. Like, we don't want to create yet another honeypot by trying to avoid the exact same problem. So that's why I started to create Glock. And I was imagining. I imagine stuff, and then the coders, poor guys, they have to do it. I imagine something where I can just push the button, and it starts sending an alert saying, hey, someone's following me or something like that to my friends. And they get a notification saying, hey, Alena is right here and she needs your help. I was thinking to leverage the power of our community and of our relationships with our family or our relationships with our bodyguards, but mainly the power of the web of trust that we have, and create something that would be really privacy first. And so Glock is getting born. It's still in the process, not released, but I would like to introduce you the way we are thinking about the design and how we would like to create it. Privacy first. I don't want my developers to know anything about our users. I don't want to be a honeypot. And so the entire important information, user information, their location, everything is stored locally on the local database, encrypted with an NIP44. And the user only starts sending out his location data on demand when he really needs it. So it's all full user agency here. There's other solutions in the market that you can go and purchase right now, but you should know that the company will collect your data, maybe even sell to some advertisers, pass on to law enforcement, and that's not what I wanted. By the way, in the preview here, I keep seeing the video. If you could change it so that I don't have to turn back, that would be lovely. Thank you. It should be resilient. With an alert messaging system, you want something that just sustains and helps and works when you actually need it. That's why we chose Nostr, because Nostr has this beauty of resilience built into the core design. Using relays of Nostr to deliver alert messages is a superpower. It's something that allows us not to run centralized servers and to have fallback scenarios. So the user sends an alert. If relay 1 fails, there's another 10 relays that can deliver the alert, which is lovely. And there should be a strong system notification. I hope we will succeed with that. Creating a neighborhood watch kind of feature is something that inspires me to think beyond Bitcoin, and this is where I'm thinking Nostr can help non-Bitcoiners and people outside of this little niche to get more secure in their lives. There's a lot of crime uptick in Europe. Bad stuff happening. It's the statistics of crime, especially in western part of Europe, are really, really dire. And so I'm hoping that people will adopt this technology and just simply meet as neighbors in their city, in their town, and set up neighborhood watch with the use of Glock. Yes, we're using, it's obviously invite only. I will explain a little bit how it's gonna work a bit later. We want to open source it, of course, and what is really important is to have a strong background operation. So basically constantly scanning for alerts from your friends via the network. We're using split key cryptography that allows us smoother user experience. Basically, the user logs in with his Nostr key. If he doesn't have a Nostr identity, then we just simply create one. But then we create a system key that is basically independent from it, but connected. It allows the user to send alerts without having to confirm in his Ember, for example. It allows us to achieve a high level of trust and security. We also use a button key and finder key, or button mpub, finder mpub. A button key is something that basically creates the alert, and then you have, we create a group upon opening the app, and in this group you can invite your friend, your wife, your colleagues, whoever you want, and you share finder keys with them. These finder keys allow them to listen to your alerts and decrypt your alerts. So they're listening to your system MPUP, sending an alert, and decrypting using Finder and Sec. Shortly. I'm not a technical person, so just we'll drive over this quickly. So this is it, the user onboarding. We use this local system key pair. Once someone signs up to be a Glock user, he also announces to the Nostr network that, hello, I'm on Glock, so that we find it easier to find these new users of Glock. We use an encrypted, gift-wrapped 378 event for this. And then basically we can invite easily some other users. They accept. Yeah. I lost a little bit of my thought of stream of thought. Automatic watcher group, yes. We create the first group automatically. In the future, we would like to have the possibility to create more groups. Why? Because you may want to have special groups for different occasions. So I'm thinking maybe we will move and use this not just for the high tension, high risk situations, but also less of risky situations where we just meet in an event like this and we create a group for our team and say, hello, guys, instead of trying to reach everyone, where are you? Just send the alert button to your group of pals in the event and just meet right away and have the location distributed easily. But the primary focus is, of course, the high security alerts. So the way we send alerts, we invented a new kind number, which is 694. It corresponds to the BIP 39 word list and specifically to the word find. Just for the nerds, I hope you appreciate. Once I want to send the alert, I press the button, my device geolocates me, takes the GPS, encrypts the GPS location, and puts it into the alert 694. Optionally, there could be some comment if I have more time to actually add some comment. If not, just the 694 goes out, and everyone who knows my system key and knows the Finder key is listening to these alerts constantly, so they pick them up. Whenever I am out of the risk, I can just press the button again and the same event happens just with another tag that says stop, and the alert is stopped. Contact management. We are adding new users by, first of all, we look through the database of Nostr users, and we need to also see whether the user is on Glock or not. That's why previously I mentioned that when you sign up, you also send out a gift-wrapped information to the Nostrverse that, hey, I'm on Glock. So when we find out that, oh, this is also a Glocker, then it's quite simple. We just give them an invite and he accepts the invitation to watch over me. If the person is not on Glock yet, then it's a little bit more complicated. We just send an invitation through the usual way of sharing an invite. The person downloads Glock, and once he's on Glock, then he can accept the invitation. A little bit more cumbersome was the deleting of some watcher, because once we delete someone from a group, I don't want you to watch over me anymore. Then just trying to force the user to forget the shared Finder key is not possible by the nature of this. So what we do is a key rotation. Basically on the background we create a completely new group and all the existing watchers in that group minus the one that's uninvited get automatically included with the new Finder key. That's the gist of it. For the nerdy audience here, this is the kind numbers that we're using, but I think I can skim through it really quickly. The most important three I mentioned already. And this is the roadmap, basically. We are now at the point where we started the trainings. We provide a one-on-one consultation if you ever need to talk about how to digitally prepare yourself and harden your devices, how to set up, Linux or Graphene OS on your computer to not be found easily online, up to the preparation for physical OPSEC, how to secure your residence, your offices, how to behave in general, how to stay vigilant, how to spot surveillance and and apply some counter surveillance, how to act in the case when someone is trying to take you from the street, how to act right after that, how to survive captivity and how to deal with this post captivity trauma and situation in your family. All of this is there available. We have people who have been in hostage or dealing with hostage situations and very high risk volatile locations for over 20 years, who have been training mostly government people who travel to such locations on avoidance mainly of these events. Then feel free to contact us and talk to us about it. I am hoping, I'm looking here at Francesco, our project manager, that we are able to release the app for beta testing soon-ish, maybe September. So I would love to ask you for help. Please sign up for beta testing. It would mean the world to us if you just give us feedback, give us error logs and what's not working, or give us just feature requests, how you imagine this should work. We are preparing more in-depth OSINT services, but this is a little bit down the line. And whoever knows me knows that I love hardware, and the hardware is coming down the line as well, but I will not talk about it today. So please feel free, or just go to glog.me and sign up for the beta testing. It's right on the main page. Yes, done with scanning. Okay. And I want to thank you for your attention. And I would love to say one final thought. We cannot rewrite the history. We cannot undo, that I'm here with my actual name, or you cannot undo that you've been talking about Bitcoin so loudly, or that we have purchased your house in your actual name and have your name in the public registry. Those things are difficult to undo, but what we can do is redo the future and the future outcomes. And so I would like to leave you with my imagination or variation on the $5 wrench attack. And I'm hoping that you will also pardon the $50 wrench, because that's what happens with inflation. So thanks a lot for your attention.
Thank you so much, Alena. While we are again rebuilding the stage, I just wanted to check if we're still here. If you guys are awake and with me, please give a little applause. Wonderful. Amazing, amazing. So do you know what's keeping you away from lunch right now? It's me. It's me and some 4 or 5 other people. But not to worry, food is going to be enough for everyone. This next panel and final before the lunch is going to be really exciting. And I will, I guess, introduce the moderator, and she will introduce the rest of the panel. I think it's the best. The topic of the panel is state and Bitcoin, obviously. Susie Violet Ward. She is co-founder and CEO of Bitcoin Policy UK, and also she is Bitcoin journalist at Forbes, I think, if that's not changed yet. Please welcome with a round of applause to the stage, Susie. Thank you.
do I introduce everybody else? Okay, that's great. Okay, I didn't know how this worked. I didn't even know I was going to be the moderator until last night, so please bear with me. But this is actually a really cool panel. But I would like to introduce Mills, Zack, and Freddie. Is Nina and Nina? There we go. Brilliant. So the state and Bitcoin. So we know that the cypherpunk movement was about privacy. And we know that we need privacy to have a free society. So when the state starts getting involved with Bitcoin, and we've seen it recently with Tornado Cash, is there a conflict there? Can we have privacy? Can we have the state involved? And if you think about the fact that they want to actually have a Bitcoin strategic reserve, they're clamping down on our rights. I mean, I don't know how many of you are familiar with the recent online safety bill in the UK and all the other things that they're trying to do to actually stop us from having this privacy. And we know privacy is normal. It's become a dirty word. I find it really bizarre that it has, but you know, we really need to discuss that if we want to separate money and state, can that be something that we can do peacefully? So I think we're going to start by talking about Tornado Cash, just because it's one of the most recent examples of this. So what I would like to ask you, and actually I would like to ask all of you this question. So in light of the Tornado Cash ruling, do you think that governments could use a similar legal argument to restrict Bitcoin's privacy? Freddie?
Thanks very much, Susie.
Actually, no. I'm so sorry. I completely forgot. Would you like to introduce yourselves? Freddie, you can start with you and then you can answer the question.
I can introduce myself. I don't have to.
No, I think you should.
So thanks very much, Susie. Along with Susie, I co-founded Bitcoin Policy UK, lawyer by training, and I do policy work on the side as well. Should we go done?
I think everyone should introduce themselves. I'm so sorry.
All right. Yeah, I'm actually also a lawyer by training, located in Berlin, and coming from the structured financial side and entered into the crypto space in 2017, formed a couple of associations and had been involved heavily. And I also see that conflict, and that is one of the most pressing ones. I'm talking about it after this upstairs.
Hi, everyone. My name is Zack. I'm an associate at the Bitcoin Policy Institute in the United States. We are a nonprofit working to educate the U.S. government on Bitcoin and the surrounding technology stack.
And I get to work with Zack at BPI, Bitcoin Policy Institute. And I'm Mills.
Mills. So, Freddie, do you think we're going to see similar arguments when it comes to the recent Bitcoin privacy and the restrictions?
Yeah, I might actually even go slightly higher than the specific Bitcoin question. I think this is indicative of a problem that's becoming increasingly endemic in modern society. And we see this both in terms of politics and I think in terms of the way that our laws are beginning to intrude into people's private lives. There is a bifurcation, to my mind, between liberty and freedom, between the ability to transact and to speak and the ability to restrict that. And, you know, you've already mentioned the cypherpunks, and I return personally to the cypherpunk manifesto very frequently. And in the manifesto, it says extremely clearly, you know, we should not expect governments to give up their control of our lives and to give us our freedom. These are things that not only need to be fought for, but they need, unfortunately, as history has shown, they need to be repeatedly fought for again and again and again. And I think the Tornado Cash issue, which we were discussing just prior to the panel, and I'll defer to some of our US colleagues on this, that for me really indicates a piece of central government overreach. But the thing about governments is once they've taken an inch, they go on taking. And at some point we need to draw a line and say, you know, thus far, no further. And maybe the last piece of, again, apologies, because this is an American theme, I'm trespassing on your territory here. If we looked up the wording from Elizabeth Warren's original draft bill a few years back, and that wording was so broad that it would have made every single person who ran a node potentially a money service business. And again, luckily that wasn't pushed through. That piece of legislation is now binned. But that is the kind of incremental mission creep that they seem to be attempting to do. I'm interested in your views, guys.
Yeah, I jump in here. I think there's sort of two layers to this, and I'll start with a brief overview of the U.S. legal system for our European audience here. So, as far as the American regulators are concerned, basically a money service business is any business that is actually controlling and custodying user funds. And there's also an important distinction here, which is a money service business not only has to do all of the KYC, but they also have to register for licenses. And that is an extremely time-intensive and expensive process. So not only is there sort of the privacy issue there, but there's also the ability to run a legal business and not be thrown in jail, which we saw with the Tornado Cash developers and the Samurai Wallet developers. So that's kind of the groundwork here. But the question being, you know, to what extent is the U.S. government kind of pushing into financial privacy, right? I think there's certainly an angle where the money service business issue is sort of critical to get right, not only for KYC, but also for legal businesses to be able to operate in the United States. And so that's a lot of the work that we do at the Bitcoin Policy Institute. We founded the Peer-to-Peer Rights Fund to support the legal cases for Keone and Bill, the Samurai Wallet developers. Obviously, there was some really unfortunate news last week. For those of you who did not hear, the Samurai Wallet developers took a plea deal, basically pled guilty on the money transmission claim that carried a maximum sentence of 5 years. And then the Roman Storm trial, Tornado Cash, he was found, or there was no verdict, which basically means the jury failed to reach a guilty verdict on 2 of the 3 counts. But the one count that they did unanimously convict him on was the money transmission issue, which is, again, really the basis of kind of all the issues we're seeing here. So a lot of work still to be done there. Roman and his team sound like they will be appealing that particular decision. So hopefully we'll see kind of a turnaround in the case law there. But needless to say, the sort of encroaching, shadow of the United States is still moving forward, despite a lot of positive progress in the other direction.
What do you think will happen with that appeal? Do you think it'll be successful?
Yeah, so without going too far into the legal minutia here, because we do have 2 lawyers and I myself am not a lawyer, basically the regulation in the United States clarifies that you do not need control or custody, or if you have control and or custody, you are a money transmitter. And the legal theory that the Department of Justice, which were the prosecutors in this case, used was a step further than that, which was to say that merely facilitating the transmission of funds, so merely facilitating either control or custody of user funds is enough to trigger a money service business requirement. That completely diverged from any guidance, any legislation. All of the statutes, despite a slight lack of clarity, seem pretty obviously from our perspective to not include facilitation. And so, the hope being that a court higher up in the United States, there's basically like the district court, and then there's an appellate court, and then eventually it could go to the Supreme Court. So there's a couple of layers for appeal there. The hope is that the next court up will take the time to understand the difference between facilitating a transaction and actually like transmitting user funds. So I think there's hope there. There's also hope there's a market structure bill that's passing through U.S. Congress right now. And Section 109 of, it's called the Clarity Act, basically has a carve-out for non-custodial developers that would very, very clearly clarify this issue. And I think if that passes, there are some headwinds for that, we'll be in a much better place.
So good news for privacy in Bitcoin.
Yes. So sorry to dominate everyone here. I'll keep this short. The issue that I think we're seeing in D.C. right now, Washington, D.C., is that crypto interests have really dominated the conversation. And the Clarity Act, the market structure bill, is largely focused on shitcoins and whether they are commodities or securities. And from our perspective at the Bitcoin Policy Institute, like we've always been very clearly Bitcoin only. We were kind of like, okay, shitcoins are gonna shitcoin. Not much we can do about it. We'll stay focused until very recently when that provision was included. And now, from our perspective, like that's a top priority for us to educate U.S. policymakers on.
Thank you. That was a very comprehensive answer. Mills.
Do you want me to answer the same question?
The same question, yeah.
Because I would actually back up. I think thinking about the cypherpunk origins of Bitcoin, there is kind of an inherent disrespect of the state. And I'm friends with a lot of OG Bitcoiners, and sometimes, they'll give me a hard time, like, oh, you sold out, oh, suit coiner, whatever. There's funny memes on
I haven't heard that one before, suit coiner.
Suit coiner is really funny. But I think there's just we're in such a cool historic time right now to help the government make good laws. Like, yeah, it would be great if we could all self-govern and everyone function in a society, but I think the anarchist dream, the ANCAP dream is a dream in many ways, and that's sad. But I think there's so much momentum right now for us to do this well, to do this right, to hopefully protect the freedom. And I think you said, it's the tension between liberty and freedom, but there just has to be a provision made for education too, to understand what's so different about Bitcoin is that you are your own bank. And that is the fundamental difference, that you can actually own something. And there is nothing else that you can truly own. Like every other currency is someone else's, and you have it and you're using it. And that money transmitter, like the MSB language, like that is, yeah, you are in some ways. I'm not saying legally based on the provisions, that's not what we're talking about at all, but you have the freedom to actually hold it, to know it, and it is so different than anything else, and there has to be more education still to be done with lawmakers and with individuals, and I think that's one of the issues that just has to be explained as a big pillar that divides crypto and Bitcoin of custody, and people need to know how to self-custody and understand the importance of it, and I know it's intimidating, and I think we've come a long way in making that more approachable. There's been progress, but I think if we want mass adoption, if we want hyper-Bitcoinization, I think we're just still working on it. It's still in process.
With self-custody, it is the only asset that you can hold. We live in countries where we haven't really felt that much pain. So people don't really understand why it's important to hold it themselves, because they still trust these third parties. So how do you get past that barrier?
It's one of my favorite ways when people in America specifically kind of say, I don't see the need for it.
Right.
I don't have a use case for it. And I'll tell them, yeah, maybe you don't. Maybe the system that you grew up in, that you lived in, it worked for you. And so your system, at least from your vantage point and in your circumstances, is not broken. But think about all the other systems and all the other countries in the world where their systems don't work for the people. Their systems are very broken, and whether it's inflation overnight and your entire savings is gone in the blink of an eye, or you have to flee from terror and you have to smuggle money out, or
But people that have lived in a stable environment for the whole of their lives are always going to think that can't happen to them. So you can explain it and they can see that it's happening elsewhere, but they're not going to think it's going to come to them.
Yeah, and they might not. That's a sad state, but I think, the saying of people buy Bitcoin at the price they deserve, and I think the people that see the need and the use case, and I think it's still on us to continue educating for the freedom, the human rights component that Bitcoin does provide to so many people in so many countries. And I've a long time ago stopped trying to convince anyone about Bitcoin. I never really thought that was a worthwhile effort. If they're interested and they want to ask questions, absolutely, I'll talk about it. But it's not something to push on someone, but to find where their pain point is, whether it's independence, freedom, whether there's distrust of the state. I think that became something that a lot of people after COVID in America, that was an eye-opening moment, because they saw, oh wait, the government can just do this, and what do I do? But people still are, you have to kind of come to it on your own terms. And so whenever I'm talking to people about Bitcoin, I find out what they care about, and whether it's their family. And so, hey, well, generational wealth, let's talk about inflation. Let's talk about how, there's so many layers of taxes on money at every stage. Every time money moves, whether you earn it, you get income tax, then you pay for something and there's sales tax, and then, oh, you invest and you earn, well, there's capital gains tax, and then, oh, you die, well, there's more taxes. And there's just so many layers of every time money is moved, the government takes some, and then people understanding in the economic culture we're in now that Bitcoin is kind of resilient in a different way to that.
I hope they are starting to learn that. And I keep thinking about your term suit coiners as well, because I think a lot of people actually, I love it, it's brilliant. A lot of people, when I speak to people about the policy work that we do, and they think that we're asking for permission, but it isn't about asking for permission. It really is about educating them, because our FCA, they don't even know the difference between Bitcoin and crypto. So if you haven't got people that are there trying to explain the nuance, then how are they going to make good decisions? So Nina, the same question, could we use a similar legal argument could the Tornado Cash outcome use a similar legal argument to restrict Bitcoin's privacy?
Well, I see that there is a huge conflict between several regulations. Like, for example, we have GDPR in Europe, which is fairly strict and really trying to protect everybody's privacy. And on the other hand, we have the anti-money laundering regulation, which is doing quite the opposite, as we heard in the talk before here, right? So, us being KYC'd and our data being sent across with each transaction is creating a lot of risk for each of us. So the problem is that the privacy experts don't talk to the anti-money laundering experts. All of those regulations are built in silos, and that is actually what we need to break down.
It's worse than that, though, because the travel rule that you refer to actually was implemented in the traditional financial system before we even had crypto, and it was proven not to work then, and yet they're still bringing it in.
Yeah, and actually nobody talked about it, right? We started to talk about the travel rule when it was pushed into the crypto space, right, via Mika. That's when actually we all woke up and said, what? Are you serious, right? You're sending my personal data, address, date of birth, even the number of my passport along with any transaction. That sounds insane. But the history is actually that this rule was never proposed by the US to prevent crime. So rumors are that this rule is just in place because the US wanted to get delivered those data free house without going through the official route to get the data out of third-party countries. But that now turns against every one of us, right? And it's even getting worse with the new UN Cybercrime Convention, which actually, exceeds what we're seeing in the money laundering area by far, and nobody is talking about that either. So I think, me being a believer in democracies, I think we really must leverage our third power. We need to bring in the courts. Because at least the European Court of Justice has a history of invalidating data sharing agreements, right? So I think there is a chance, and we need to leverage that, and nobody is yet doing it. But I think, that's the way to go. We tried to convince legislators for years and years without any success. One of the reasons actually is that, the whole blockchain space is kind of sorted in tribes, right? This conference is, for the tribe of the Bitcoiners. And we are splintered. We are not speaking with one voice. And that is causing a problem. We have way too many associations out there trying to lobby for this and that. But we are not aligned like the financial services sector. They have strong voices, right? They formed like the European Banking Association and so forth. We didn't manage in the past years, and that's harming us.
That's an interesting point. Sorry, Freddie, do you have something to say?
Yeah, just picking up on a couple of issues from both of you actually. I think if you put it in a nutshell, politicians exist to make laws, and left to their own devices, those laws will more likely than not be bad laws. So, I mean, acknowledging your point that reaching legislators is sometimes hard, I'm still of the view that trying to effectively conduct damage limitation on the bad laws that they make is still a worthwhile enterprise. And we're finally beginning to see some traction on that in the United Kingdom. For the longest time, the United Kingdom frankly thought that Bitcoin and the entire space was just an amusing joke that would eventually go away if they put their fingers in their ears for long enough. That's obviously not happening, and we've finally got a piece of legislation that's currently going through Parliament which will actually recognize Bitcoin as a form of property which is capable of being protected by the courts in Britain. And you know, I'm a relatively libertarian-leaning person, but I still acknowledge that the state has certain key functions. There are 4 or 5 that normally come to mind, and one of those is the maintenance of a good and functioning legal system that allows for the protection of private property. And so getting that piece of legislation through Parliament is a big step forward for the industry in the UK. And once that happens, then you have an air of legitimization, which then could potentially attract more business. And once you get bigger businesses in the room, you have more of a voice and you have more chance both of fighting cases and also of influencing legislation.
That's a really good point, yeah, because we're driving businesses out, so...
Oh, yeah, everyone's leaving the UK. Why would you do business there?
You wouldn't.
Something, I don't know if you, I don't want to put words in your mouth, but something I think about a lot is that freedom isn't no laws, freedom is good laws. And that protects, and yes, to private property, like that's where the government needs to really understand and have the education so that the laws that are made are good, and we're spending less time dealing with these cases that take up tons of time because the law isn't clear or it isn't good and it's not protecting.
Yeah, I completely agree with that. There's a lovely quote by J.R.R. Tolkien about anarchy. I'm not going to be able to do it, but it's worth looking up. He says, the older I get, the more my thoughts tend towards anarchy, by which I mean not whiskered men with bombs, but anarchy in its truest sense, you know, anarche, there being no rulers. And actually, Tolkien probably would have been a Bitcoiner. Rules, no rulers, which is a nice thing to think of. Sadly, he died slightly too early, but there we go.
So we've got about 6 minutes left, and I just want to know what each of you think about whether or not it is possible to peacefully separate money and state. Mills?
Peacefully? I don't know. I think human nature is the X factor there, which it probably not. I think it was something that Willie said yesterday. Willie Woo said this that just stuck in my head of, you know, gold for 6,000 years was the best money. But there's something that gold bugs are really kind of like I've heard them be fixated on it. Like gold is also useful. Like it's a metal, it's a ring, it's a you know, something in a hardware. It's like it has purposes. And that's not money, that's a good. And Bitcoin just is so set apart in being the most pure, only being a store of value, a means of exchange too, but just simply being money and not being, you know, having another market or demand for it that could impact its costs. So I think in that sense, that would be really cool, and it would be really great if the state was not controlling that. And the reality of, are we in, Preston said this yesterday, that are we in the infancy of privatized financial sector? And the more things that can be privatized, typically it serves the individual much better if it's done that way.
Whenever I hear this question, I think about Alex Gladstein's Trojan Horse for Freedom. I think my general sort of way of approaching this question is to think about the incentives. And when we're talking about the incentives of any government, and you know, in my head, I'm obviously thinking about the U.S. government. They have a very clear interest in adopting Bitcoin, whether we like that or not. And I think to the extent that, you know, everyone will adopt Bitcoin, right? Everyone gets Bitcoin at the price they deserve, et cetera. That eventually Bitcoin just wins. And eventually we reach a place where basically we have Bitcoin, the US government has Bitcoin, and there's just nothing they can do to stop it. And so, yeah, I think...
They could centralize it, though. I mean, they're trying to do that. That's a risk.
Yeah, I mean, that's certainly something to think about. But look, I think we're seeing a trend right now of large institutions and governments also being institutions where it's become clear to them that their incentive is to adopt Bitcoin. We have the treasury companies, we have massive ETF issuers in the United States. And right now, right, Coinbase is kind of the happy place for those people. And I think over time, as is the case with, you know, anyone who adopts Bitcoin, there's a competition for people's Bitcoin where they custody it. I think there's certainly a world where, you know, the U.S. government chooses to custody their own Bitcoin. I think there's a world where these treasury companies begin to build infrastructure to custody their own Bitcoin. I think the incentives, as you know, everything comes back to, is to custody your own Bitcoin. And if everybody's custodying their own Bitcoin, then I think the sort of centralization concerns diminish pretty rapidly. So it's definitely something to be vigilant about. Almost all of our education that we do with policymakers talks about self-custody, node running, mining, all of the pillars of the network that make Bitcoin unique and valuable. And, you know, as much as it's easier to just go and put your coins on Coinbase, I don't think they're going to take purchasing and storing Bitcoin lightly. So fingers crossed.
Well, we will certainly see further adoption of Bitcoin, but, you know, let me put a question mark whether that is actually good for Bitcoin as such. I personally doubt that, you know, having all these big institutional financial players coming into, you know, this area is actually good. Because they will gain a lot of power, right? Simply due to the volumes that they can hold and trade and get rid of overnight. So I don't think that this is actually good for a decentralized asset to, you know, to be pushed into the institutional area. My personal opinion, right? And back to your original question, no. States will never let go of their own money. It's power. So you can put Bitcoin or something else aside of that as additional asset or currency, but I don't believe that, at least, I mean, I'm older than you are, so my generation will certainly not experience, you know, a big, strong state giving up on its own money.
And maybe a slight, I would tend to agree with most of the things you just said, by the way, but I'd also say that probably not possible yet, but more and more tech is being built, some by people at this conference, some by people in this room, that does enable people to have more autonomy over their financial transactions. So every one of us can take a step towards that world of separating money and state by learning how that tech works, learning how to adopt it. Hopefully some people here have been using BitChat already. The idea of using mesh networks and privacy-hardened operating systems, effectively constructing a parallel system that exists outside the existing rule set, is something that I think we can achieve. And one crucial advantage we have over governments is we move a lot faster than they do. So we can adopt and create and learn how to use these things far faster than they can pass laws.
Yeah.
So.
Yeah, that is a problem, isn't it? The technology waits for nobody, and they don't seem to understand that. Thank you so much. We've run out of time. It's been fantastic. This is a great subject, actually, and I think we could probably go on for a lot longer. But so a round of applause for our amazing panel. Thank you.
Thank you.
Thank you so much, guys. And with this, I am announcing a lunch break. Feel free to go outside, get some air, some sun, which is always very
Finally, fourth edition of Baltic Honeybadger. After 3 years, we're fucking back.
So 3 years ago, I gave a talk here, how Bitcoin changes itself. Speech is a fundamental right.
But now is a great time to build.
That's not going to happen without privacy.
How do you guys make money?
This is a special.
Wu was going to do a little keynote here, but instead they've decided to move this forward and incorporate him on a panel, which should be a much more interesting conversation. So I don't think we're going to have pictures of the panelists up, so I'll do a quick introduction. Being your moderator today is the star and the host of the You're the Voice podcast, Efrat Fenigson. I don't know if you guys have listened to her podcast. If you haven't, you 100% should. Efrat, please come up onto the stage. Thank you so much. I have been a guest. I have been a guest. Yes, that's true. Max Kai, you need no introduction. He's back. Max is back here. Thank you. Preston, you're back up on the stage to talk about this one as well. And Willie Wu is just making himself up here. So Willie, thank you. Willie all the way from New Zealand. Thank you very much, Willie, for coming across. And the title of this panel is Bitcoin's Institutional Phase, Trojan Horse or Tipping Point. And just to help get this one spiced up a little bit, did you guys see American Hodl's meme? No. Who's Trojan horsing who? No? That was very interesting. And his message behind that was, are we being Trojan horsed by the institutional adoption? So anyway, off to the panel. Thank you very much, guys. Give them a big round of applause.
Okay, thank you for being with us after lunch. I'm sure you would have preferred being in the sun, but we are going to be just as shiny. In the past 12 to 18 months, Bitcoin has entered a clear institutional phase. ETFs, treasury companies, mainstream stacking. But Bitcoin was not originally built for Wall Street. Bitcoin evolution is being shaped at the moment, not just by ideology, but by capital flows. As someone who truly appreciates self-sovereignty and freedom, me, I'm opening myself up to this inevitable evolution of Bitcoin in our fiat reality, and I'm learning much about it. So I'm keen to have this discussion with these three masterminds. The overarching question here is, are we seeing a Trojan horse or a real tipping point? And let's start with
What defines this phase that we're in? How would you personally define the institutional phase of Bitcoin? What triggered it? Who wants to go first?
Yeah, this works, right? Yeah, okay. So you can think of Bitcoin as a little Pac-Man, and we'll be eating these little dots. Gobble, gobble, gobble. Now the big cheese, you're digging into that, right? So I think the tipping point, I think it really was a tipping point, was last year when the BlackRock ETF came on board, and the high priest, Larry Fink, said, we're doing this ETF, and now you can talk about buying Bitcoin for the rest of the traditional world, right? That encapsulates $900 trillion of wealth assets. Bitcoin at this point is $1 trillion. And we always here talk about liberty, separation of money and state. That means that the government can't overspend and then tax everyone through dilution, effectively stealing from the poorest. That doesn't end until that Pac-Man gets big enough to displace the US dollar, flips gold, and becomes a monetary standard. And that's not going to happen until you get the large gatekeepers of capital opening up to Bitcoin and pouring that money in. And so it's a necessary step. With it comes risks. We can talk about the fragility of centralization. If big pools of Bitcoin get stored in one location, that might get nationalized and so forth. But that's a different discussion. This is always going to happen if we're ever going to, effectively change the way the world uses, what we use as money.
In short, I would just say that it's in Bitcoin's culture to be very skeptical at all times, which is a very healthy thing. And one of the main reasons why it's done so well to date. When I think about just an image of where we were for the last, since its inception until right now, I would say imagine two galaxies. If you've ever seen like these memes of two galaxies, they're like coming towards each other and then they're hitting, and it's just particles and debris and planets and whatever just kind of flying all over the place. I would say that we are right at that point where these two galaxies are starting to touch. You have this legacy system that has been pretty much gated off, and the flow of capital from that traditional system has been somewhat limited, pretty limited, as it flows into Bitcoin, and Bitcoin is really that counterforce. I would argue that all of the crypto tokens that are stable coins are actually a manifestation of the legacy system and not actually Bitcoin, and that those were like the early tentacles of the connection between the two, but now you're really starting to make impact. And I would say the thing that's causing that impact to really take place is the massive shift in policy coming out of the United States, which is then having repercussions all around the world, that they're also saying, okay, well, if they're doing it and their dollar, the king of the dollar that's dominated the planet for the last, however many decades, like there must be something here. And so that's causing the policy shift. With respect to, are they Trojan horsing us? I'll give you a real simple example. The last administration, when they approved the ETFs, they purposely did not allow in-kind redemptions. I would argue that that act of Gary Gensler and the SEC at that moment in time was very Trojan horse-like in its action. As soon as the new administration came in, all of a sudden now you have, they're pro-Bitcoin, they're pro-everything. Everything. But what I find interesting is I suspect, but I don't know for sure, that BlackRock and some of the larger banks that have the ETFs were actually the ones pushing for the in-kind redemption. And I find that to be extremely healthy and not a Trojan horse. And for people that don't know what the in-kind redemption is, it's, if you have $5 million worth of IBIT or some number like that. Is that the right number, Willie? Do you know? Is it 5? It's like a $5 million threshold and higher. If you have that many shares of IBIT, you can actually go to IBIT and you say, here's the shares, give me the Bitcoin, and they'll exchange. So that's a big, and the fact that that was purposely left out of the past administration just shows you they were really wanting it to be a cash settled market so that it could be compromised, just like the gold market's been compromised because it's cash settled and not physically settled. So things like that are refreshing. It doesn't mean that we're like out of the gate or that you can let your guard down, but that would be my argument for why we're not just, getting scammed.
I would say I would comment on the current cycle. In developed markets, I think it's institutional bull market, right? We don't see many retail in developed markets, obviously, but in developing markets, it's actually a retail bull market. So I think that, yeah, the beginning was BlackRock ETF, and before that it was Michael Saylor. So if we look at the longer cycle, then 2020, I think Michael bought first something Bitcoin. I don't remember the amount.
It was 500 million in 2020, yeah.
Yeah, and that kick-started, but it took 4 years for other companies to understand the purpose and to like Bitcoin treasury thing, and it's only after 4 years now we're seeing, 5 years actually, we see that every day there's like new treasury company coming in, which is kind of unhealthy as well at this point, but I mean, it's part of the game.
It was a year ago when I interviewed Saylor and I asked him, are any other CEOs approaching you to try and copy your playbook? And he was like, maybe one here or there. It wasn't happening in June last year. And in 1 year, look where we are at. It's crazy, the acceleration of this phenomena. Okay, so the institutionals that are now stacking, are they furthering Bitcoin's mission or are they capturing it? I know you said, Preston, that it's not so much scamming us right now, but where do you think it's leading us?
Well, on the treasury thing, I think the reason that it's taken off so much just in the past 6 months is because I think that there was a massive realization by Michael and MicroStrategy that using preferred stock is very different than using convertible debt. And so like what's so different about that is you really never have to pay back. You don't have to pay back the face value if it's not convertible. So he's raising, he just did a new issuance the other day and he's raising $4.2 billion. He immediately sweeps that into Bitcoin that benefits the common shareholder, but he never has to pay back the face value of the $4.2 billion like you do if it was a bond. And even if it's convertible, if it was a convertible bond, that face value is dilutive to the common shareholders after 5 years. So even if the convertible debt was running, he still gets that massive dilution factor. So I think that they kind of cracked into something that was really big, which is when you use preferred stock, you get very different economics, that you're still servicing the fixed income space in the way that they want, but you never have to pay back the face value. In preferred stock, it's called book value. And I think that was a big unlock. And so when the space saw that, you now have this big influx of Bitcoin treasury companies that are trying to do the same thing. Most of them don't even have access to the markets yet, which is an issue for all of them. But to Max's point, that there's concern there, and I agree, I share that concern when you have a Solana treasury company or you have an Ethereum treasury company, and you got, I mean, it's totally absurd what is coming to market, and it's going to be a lot of froth, and there's going to be a lot of dead bodies that kind of come out of it. But I do, with all that said, I do think that where it is healthy is in incentivizing more institutional custodians. Because right now, when you look at the ETFs, you could strongly make the argument that it is very captured with Coinbase being the custodian for almost all of these. And the whole reason that unfolded is the first one got through with the SEC and everybody was like, oh, well, let me look at their paper. Oh, they used Coinbase. Just use Coinbase and we'll get approved. So like everybody got Coinbase, but the Bitcoin treasury companies, like you had Adam back this morning on stage, he's getting ready to do one with, you know, a lot of Bitcoin in it. And if you think Adam's going to go to Coinbase, I have no idea where Adam's going, but if you think he's going to Coinbase, I would be blown away that he went to Coinbase for his institutional custody. So what you could do is you could make the argument that the Bitcoin treasury companies are actually going to help decentralize institutional custody, which is something that I think is really healthy. I think that, because if you think that these publicly traded companies are going to self-custody, you don't understand how the public companies work and how their auditing mechanisms work and how their reporting mechanisms work, it will be institutional custody. Whether people like these changes, I would help you go back to the visualization of the two galaxies coming together and they're colliding. And now there's just a different environment. We're operating in a different, as it grows up, things are going to change. And people might be comfortable with that. And other people are going to be looking at the old way that things were done and saying it needs to still be done like that. And I would argue things are changing. So,
Willie, your take on that?
I don't think centralization around Coinbase and that being hacked is the danger. I think it's really the nationalization path, which happened with gold, and it's happened before. And if the US dollar is structurally getting weak and China's coming in, I think it's a fair point that the US might do, an offer to all the treasury companies, incentivize that. It could be then put into a digital Fort Knox, create a new gold standard. You could then rug it like happened in 1971. It's all centralized around this digital Bitcoin. The whole history repeats again and we're back to fiat again. And then now we're in this position where we tried this Bitcoin thing, but that didn't work, so it makes the second attempt harder. I think that is the centralization risk when it comes to a very big and powerful nation state.
So do you think it's more probable, it's more probable that the US may acquire an existing company with a lot of Bitcoin and treasury rather than holding their own treasury?
Yeah, I think that if you were say you wanted to get, say, 4% of the, 4 million of the Bitcoins, you're going to buy it on the open market and drive the price to infinity, and, Michael Saylor becomes probably the richest person alive, and therefore, or let's say most powerful person alive, because it's common stock held. Or are you just going to do a share offer and effectively nationalize in a very free market fair way? You've got this big bag of X million by then Bitcoin. You haven't run up the price, and then everyone who's just sold their MicroStrategy stock, let's say, now has to buy back their Bitcoins, and then it runs up. I think that would be the smarter way to do it. But just thinking about the dynamics of how would you get a big bag of Bitcoin and then create dollars trading off it, or backed by it, and then how do you rug that into fiat? I think that's a path that's been done before.
If you want to try to predict the future, you start with the incentives and you try to deeply understand how the incentives are going to interact. So when I look at every developed nation state in the world right now, they've got a massive addiction. And that addiction is to spend way more than they actually bring in or the value that they add. And that trend is only accelerating. It is only becoming more popular to promise a bunch of money. Hey, I know you went to college and you made these decisions and you were going to pay back this debt, but don't worry about it. We're going to just print some money. We're going to pay off that debt for you, even though people that went to school 5 years ago paid for their debts, right? Because they want the political vote. So that trend against Bitcoin is a massive issue. Because where this is going to go is they're going to be so in debt up to their eyeballs, and more importantly, their collective cognitive decision-making is to just get more votes by wishing away more printing, right? And you're up against this thing that is immutable. And so once the politicians eventually get to the point where they realize, oh, no, like it's literally an oh shit moment that's on the horizon. And that oh shit moment is going to be, well, who can we rob? Okay, where can we get the Bitcoin to rob? And this is thinking through their incentives. How does a politician think? How can I get the most amount of Bitcoin with impacting the least amount of people possible? And what I would argue is, number one on that list is a private entity that has a lot of Bitcoin. That's like number one on the list. Okay, because you can scrape that Bitcoin and you might have made 20 people upset. But when you're doing it with a public company, now you have to ask yourself, is that public company in the S&P 500? And how many people in the S&P 500 own it? And I'm not saying that they won't rug it. It might be the first place they go. You never know. But I'm thinking through the incentives of the politician, and the politicians they're going to rug somebody. I can tell you that right now. They're going to take the Bitcoin because it's going to have an institutional custodian that does not want to go to jail. So that's their incentives. I don't want to go to jail. So yes, I'll give you the Bitcoin. Okay? And then after they give you the Bitcoin, you know what they're going to do? They're going to jam dollar bills down your throat. And Bitcoin's going to be moving like that. Okay? And the Bitcoin's gone, but you got the dollar bills and you got them here, and now they're that compared to Bitcoin. So there's a lot of people that are going to have a really, and so when we talk about treasury companies, and this goes back to what I said this morning, can they outperform Bitcoin? Yes. Do they come with more risk? Yes. Are you accounting for the nationalization of a treasury company in your risk assessment of your position size of Bitcoin versus owning a treasury company? I would argue most aren't. And that's why from a sizing standpoint, I think the sizing should be pretty minimal, relatively speaking, if you want to try to outperform Bitcoin. At least today, because we just, like, all the incentives are pointing to what Willie just described. And I would tell you, I think that's a very probable event. It's just how it actually unfolds is the question. And we might be 5 years, we might be 10 years. I don't know when that happens. But based on the incentives that I'm looking at and how they're going to interact, it leads there pretty quickly.
No words of wisdom to add to that.
Nothing to add.
I get you. Saylor's model is debt-fueled Bitcoin stacking. Is this innovation or risk to Bitcoin's fundamentals?
I don't see it any different than borrowing and lending for the individual. Only it's happening at an institutional level. So if he's over-collateralizing Bitcoin by 5x, and he can kind of peg it between like 4x and 5x, if you go and you want to take out a loan and you put Bitcoin on deposit, the LTV on it, right, and it's, you know, you're depositing $200 worth of Bitcoin to borrow 100, that's over-collateralization, you know, of 2. And he's over-collateralizing at a 5, but he's doing it at an institutional like size. Like the sizing's just different. And for a lot of people that don't understand the financial terminology, they just can't wrap their head around like what he's doing. But when we say these ratios, like he's over collateralized 5-to-1, what else I think is really interesting is those dividend payments are denominated in fiat. If you run the power law, let's just say power law is valid. We had Mr. Mezinskiks up here earlier today talking to you about the power law and the R-squared values and all that. If we take that model and we take the dividends on preferred stock and you model it out for the next 10 years, those dividends that you know, if it's issued at 100 and he's paying a $10 dividend annually, do you know what that $10 looks like 10 years later if you swept all the book value into Bitcoin? It's almost zero in relative value. He's still paying the $10 per share. But you know what the value is in Bitcoin terms? It's almost zero. After the first year, it's like $6. It's not $10, it's $6. So there's something to be said for a person who understands the idea of stacking your assets in Bitcoin and denominating your liabilities in fiat. It's a very powerful concept if you really understand it, and I would argue it's maybe even, and this is very controversial, but I'll say it anyway. I would argue that the backing is better than 5-to-1 simply because he's of this assets or Bitcoin liabilities are fiat.
Right. Willie, do you want to add something?
Well, you know, strategy is probably the most robust of these companies. And you see in this cycle, everyone's following the model, but it's not the exact model. You know, we have to be careful of the risks that are being taken. Strategy, originally when they were doing the convertible debt, was I think it was a 5-year out debt, And so, you know, I think MicroStrategy might have been close to liquidation in the last bear market had the debt not been pushed out 5 years. So I see a lot of these companies now have quite short-dated debt using the older model of convertibles, where strategy went to 8 to 12 years, and now they're doing the preferred stock. You look at Metaplanet, and they're doing this sort of hedge fund play where there's a hedge fund. They're doing a back and forth to simulate a at-the-market offering, to effectively simulate the ATMs that MicroStrategy are doing, but they're taking big tranches of debt, 300 million at a time, and then selling that into the market to replenish, to then pay off the debt. If the market turns on that at the wrong time and they cannot do this market operation, you're going to get liquidated. And it's not 4-year debt, it's not 8-year debt, it's immediate debt. And so you really need to look at the copycats and look at the dangers in the debt structuring and the liquidation risk. And, you know, my opinion of Metaplanet is that they are quite expert at timing the market. Maybe that's the game that they played. They absolutely bought the bottom wick of the last major dip and unloaded almost 300 million in that one buy. So maybe they're proving they can time the market, but that's what you're buying. You're buying a treasury that has opted to time the market, and they think they can unwind the debt at the top from the looks of how they've structured things. And, you know, there's a lot of these treasury companies, a lot of paperwork to work through. You want to know what you're buying. There's risks in it. MicroStrategy is the blue chip. Very, very robust. Still risks, obviously, with everything. My concern is the copycats that aren't doing it at the same level or have, you know, how many of these guys can offer preferred stock? What are their options? They, you know, a lot of the latest vogue is to really start small and run up the leverage, get the yield right up and grow fast. So, you know, we're tail end of a bull market right now. So I think a lot of people are going to get hurt, and we'll have massive MNAV compression. We're going to have liquidations of some of the weakest treasury companies, and we'll see who's you know, who's going to survive and what's going to break over the next bear market. And I'm wondering about what the commentary from TradFi will be as I look at those Bitcoin or crypto people, look what they did there and look what broke, and, you know, another cycle of jokes on us.
Yep, there'll be survival of the fittest and a lot of FUD around that, right? So in terms of adoption, Willie, you've estimated 1 billion Bitcoin users by 2030. Do you see treasury companies and corporate adoption accelerate this pace?
I'm not sure, to be honest. I'm not even sure if that projection will... it's very hard to count, like... What do you call an adopter? Like, do I, you know?
Today, it's hard to
well,
say.
To your point, it's like if strategy gets included into the S&P 500,
exactly.
How many people own SPY index?
Exactly.
If de facto they have Bitcoin through.
You called it surrogate, right?
Yeah, so it's very blurry right now. You know, we own a lot of assets. Everyone pretty much has exposure to the S&P 500. Even if it's in a pension fund and you're saving for retirement, you don't know what you're owning, but it's going to be the S&P 500 in there. So that means Bitcoin's in there. So I think these metrics become a little bit more clouded. I was tracking self-custody and exchange custody. So, but it's growing at a decent clip. Almost 5% of the world population has exposure to this asset, excluding this sort of S&P 500 pattern. So, yeah, and given that it's still quite early, I think it's still quite early. Yeah,
we're still early.
We're still early. I think I'm thinking in terms of generational sort of times. We're 16 years into this asset, and it's only $2 trillion. I mean, it's probably got 100x to grow, and it's probably going to take decades to get there.
What about longer term projections? Because I've heard you speak about thousands of years from now, like 10,000 years. I've heard you give really long projections about Bitcoin.
Well, I value long-term thinking, that's for sure. And we are trapped inside, I think, inside this fiat world in 1971 to now. And I think of that as a paperization of a liquidity crisis. And we had gold and silver as money for 6,000 years. And it spanned the agrarian age, the industrial age. We're in the digital age. And I think the fiat will blow up eventually. The only thing that's special about now is the whole world got rugged all at once. So, you know, we're all sort of debasing ourselves to oblivion where, you know, when one kingdom debased, they blew up really quick because, you know, everyone ran to the gold-backed kingdoms. So this will blow up. And then what replaces gold? And it's not going to be gold again because you can't get... It's no longer scarce, not in 100 years, not 1,000 years. I mean, gosh, who knows what technology we'll have then? And it's only a few decades away to mine asteroids, given the pace of that technology. So you have to secure the scarcity, the ledger, with something that grows with technology, and that's energy. And Bitcoin's had the 5% adoption. It's very hard to catch something like that. For money, there's only two properties of money. One is it's accepted, and number two, it's secure and robust, and that was the scarcity element of gold. And all the other stuff was just people thinking about gold. It should be divisible, it should be durable, and that was us using atoms to secure the ledger, but that doesn't apply anymore. And so you pan this forward 1,000 years of technology, it's got to be an energy coin, and we've got one, and it's reached, you know, hundreds of millions of people already, soon to be 1 billion.
Just something that I've noticed recently on the future and Bitcoin adoption. Has anybody noticed Grok is an absolute hardcore Bitcoin maxi? Has anybody else noticed that? Like, I really mean it. So much so that, like, you see the typical TradeFi people that just don't understand Bitcoin. They've been, you know, around for eons, and it seems like every day there's more of them. And, you know, I remember in the early days I would go in and I would reply. I would take my time trying to explain it and all that. And nowadays it's just like, hey, Grok, tell this person why they're wrong. And just like, I'm gone. Like, I just don't have time to like sit there. And what's amazing is Grok just like lays it all out. And then what's really funny is then the person starts arguing with Grok, and Grok is coming back and just kind of just hammering the next point and the next point. And then other people are chiming in, and it's turned into like this array of just Grok orange pilling everybody in the thread. And the reason why I think that this is, we're just on the cusp of something really, really big, which is today we look at the AI and we're like, it's usually right. It's pretty good, right? 5 years from now, if you're arguing with an AI, I think you're just going to kind of be stupid for the most part, unless you're just like a leading expert in something that's like really deep. You might have a keen insight that's better than the AI, which gets into this whole idea of like localized intelligence is the thing that really kind of discovers new things. But for a person who's just kind of like a casual observer or somebody who doesn't really understand a topic, and they're interacting with AI, and AI is giving them these answers, and they thought Bitcoin was a Ponzi scheme in their mind, and this AI is just like lighting them up. And then all the crowd and everybody's laughing at them as they're interacting with the AI. I mean, I literally saw this with Jim Chanos, who's like one of the, you know, he literally made his name in shorting Enron. I mean, he's the real deal. And he's shorting MicroStrategy right now. And Grok was in there, and he's there arguing with Grok, and Grok is just tearing him apart. So I think this is a big, important thing that's going to help in the education process, because people at a certain point are just going to say, okay, well, this thing's like really smart, and here I am arguing with it, so I must be wrong. And it's going to be a little bit different because you know you're dealing with something that's of super intelligence. You're not just dealing with this guy who's, you know, got a mohawk, who's got all these followers, and you're like, yeah, he's probably stupid.
I mean, to continue on the AI topic, I think there's a good synergy between AI and Bitcoin, because if you think about it, what kind of money AI will use in the future, AI agents. It's not only about educating, but also like working capital, et cetera, et cetera. obviously it's Bitcoin. There's no other option, because it's like digital agents, digital minds working with digital money. So that's a very powerful thing that a lot of Bitcoiners even don't understand yet. Whether there will be bear market, bull market, whatever, it's a very bright future in a way that we have a huge opportunity. We don't know actually yet the full capabilities of AI, and they're going to use digital form of money, and it's definitely not going to be a fiat.
Why won't it be ultrasound money, Ethereum?
No way. I think if Grok got it, so I mean the rest of AI will get it as well.
So here's a question that's like close to my heart, because I like covering this topic of CBDCs. So are you with me on this camp, thinking that those states and governments and global organizations are going to be running around trying to implement those CBDCs in different countries around the world in the next few years, while Bitcoin continues to do what it does, while the US has taken the lead on integrating that into the traditional finance? And those two things are going to be happening in parallel around the world. And whether they like it or not, all their experimentation is going to fail because Bitcoin's going to prevail. Are you with me on that? Or do you see it going any other way?
It's not only because of Bitcoin, because the private sector actually gets stable coins and does stable coins better. So it's not CBDC it's not Bitcoin versus CBDC. It's like Tether versus CBDC or any other private entity that works with stable coins, because it's already like a huge market, huge amount of liquidity there, and it's really hard to outperform like something like Tether that has 160 billion worth of stable coin, and it's like the adoption is increasing, people are using it, and I guess there's no way for them to capture that market as well. But Bitcoin plus private stable coins, I think, unbeatable in a way.
I would just, you talk to people that look at Tether or any large stable coin and they just say it's a de facto CBDC. If they need to stop a transaction, Tether or Circle or whoever can get a tap on the shoulder from the US government and they can say, hey, we didn't like that transaction, we want you to reverse it. And if you don't think that they would reverse it, you're really naive. I mean, it's just an extension of the dollar system is all it is. And so, like, why is the CBDC always going to fail against Bitcoin? Well, it's always going to fail against Bitcoin because at the core of what that stable coin represents, it's just a manifestation of government overspending and expanding the money supply and needing to pay for their taxes by continuing to expand the M2 at 10% a year. So, like, that's what that representation is. Whether they can peer into whatever as far down as the gnat's ass detail, I have no idea. But I think anybody using one of those should just assume that they are. I mean.
Well, I think it's ironic because the bank shut down banking for the exchanges back in early days in 2013, 14, roughly when Tether came to be, because there was no banking to be had, so they were the de facto banking, and they got so big that they're now on track to displace China's buying of treasuries when Bitcoin hits $1 million, and therefore the US government becomes dependent on Bitcoin. Because how it works is there's an order book on the exchange. You got Bitcoin on one side, you've got US dollars on the other side, but it wasn't US dollars, it was Tether. So as the liquidity increases, there's more and more expansion of Tether to trade for it. And now, it's at the point where it's displacing the largest nation states to buy the US treasuries. It's quite it's ironic.
They were tripping over themselves to pass the Genius Act. And you have to ask yourself, why? Why were these politicians tripping over themselves to get this thing passed? And the answer is really simple. They needed a buyer for all their debt. And the buyer is the stablecoin issuers. And it's really kind of interesting to see how that all really transpired and really kind of came to a head is, the government had to start issuing shorter and shorter duration paper because there was no buyers for anything that was long duration because there was so much inflation risk. So they're down there like issuing like 1 month money. And it's like, well, who's going to buy all this 1 month money? Well, you know what? the stablecoin issuers literally, like, they love that because they can back everything. They can gobble up all this new issuance. They don't have the inflation risk that if they were buying 30-year paper, they don't want that inflation risk because they don't know if it's going to be fully backed, right? Or they'd have to keep rolling it to try to, like, manage that. But if it's really short duration, it's actually perfect for them. And then the really smart ones, what are they going to do with all the coupons that they're receiving? They're just going to sweep it into Bitcoin. And then it's really backed because that thing's going up at 40 to 50% annualized. It's like extra over collateralized. What I find so interesting with all of this is you literally have BlackRock and all these other banks that are playing a fractional reserve game. They don't even have what they're issuing in the vault. But yet you have a company that's fully collateralized with extra Bitcoin in the vault, and they're making more profit than the ones that are playing the Ponzi game. And they're getting the issue, like, literally from thin air, and they're making more money than them. If that doesn't show you, like, the natural market forces that nature is trying to heal itself, I don't know what does. Because it's miraculous to me that you can have something that's over-collateralized just whipping the pants off of the ones that are literally cheating as if it's a total Ponzi scheme.
Anything? Okay. So wrapping up and going back to our initial question of whether this institutional phase is a Trojan horse or tipping point, what are your last thoughts about this? Where are we going to see Bitcoin going over the next couple of years to 5 years? How do you see that evolving?
I think the institutional phase is just a logical step in evolution of Bitcoin. You cannot avoid that. So whether you like it or not, I mean, there's a saying that Bitcoin is good because even your enemies can use that. So.
And I'll add to that. And what's an advice you would give the plebs, us that are watching this unfolding?
No, just educate yourself. That's the best advice. I mean, do your own research, educate yourself. Self-custody, I mean, always about that. But yeah, sorry. I mean, I don't like paper Bitcoin, but I do understand that it's a path. It's just a phase in the market. So, and I guess institutions going there and buying more and more Bitcoin, in the end, it's like better for us as well because, you know, first it's ETF, then it's treasury companies, then it's banks, and banks serve the end customers, which we are. So at some point, I just envisioned that as soon as banks will get comfortable with Bitcoin, you will be able to go into your local bank and, I mean, borrow against your Bitcoin. I don't know, trade it, sell it, buy it. So I think the institutional adoption is inevitable, and it's happening already, but hopefully it's happening for good.
When I just look at if you would talk to a Bitcoiner, you know, back in 2015, and you say, all right, take us 20, 30 years into the future. How do you see this? They would say, well, I think Bitcoin's the new medium of exchange. It's the store of value. The whole world is using it. People, businesses, governments, like that's like the utopia is Bitcoin has completely supplanted the dollar. So when we're at this moment in time and institutions are starting to use it, governments are playing around with it, having a strategic reserve, and they're all upset and all up in arms, I'm looking at them saying, okay, like how in the world did you ever think we were going to go from there to here? And so it doesn't mean it's safe. It doesn't mean that everything is going exactly like it should. I'm not trying to imply that. I'm just saying if we're going from nothing to the whole world using this as the unit to settle all exchange, like at some point the institutions are going to start coming. At some point the governments are going to start using it. And the one thing that I've learned through the years in the space is there's going to be some that do it really well, and there's going to be some that do it really stupidly, and they're going to blow up and they're going to hurt a bunch of people. And you know what? That's a free market. That's a free market. We want free markets. We're Bitcoiners. We want free markets. When we were up on stage earlier, Max, in Switzerland, the gentleman from Switzerland, he was talking about how everything has to be, you know, over collateralized in borrowing and lending. That's how I'm looking at it. I'm saying there's a country that gets it. That doesn't mean every country in the world is going to get it. But with all that said, my advice to the crowd is, if you just take self-custody of Bitcoin, if you have the technical competence to do that, you are going to do very, very well based on where I think all of this is heading. And you don't have to, like, as long as you don't have like a really lavish lifestyle, that should be good enough, right? If you want to get fancy and you want to do all this, sure, buy a treasury company. Just make sure it's not a lot. Like, just be smart about it. If you want to have fun or whatever, I don't know, but yeah, self-custody Bitcoin is all there is to it.
Yeah, I don't think anything's changed really. It's the self-custody, hold your own keys. Everything else has been just on-ramps, more and more capital coming in, and now it's institutional phase, meaning bigger capital is coming in, and just please make Bitcoin unruggable, which means self-custody. If we're not self-custodying, then it's totally ruggable, and what we just talked about earlier in the bad path. Bitcoin can be rugged if everyone's starting to put everything into institutions. So keep it simple, self-custody. Nothing's changed. The on-ramps are bigger, that's all. It's complicated little stuff around the edges. Every cycle there's complicated stuff that you can get rugged on. Things to digest, we can learn, but nothing's really changed. Self-custody.
Willie, Preston, Max, stay open, stay curious, stay humble, stack sats. Thank you.
Thank you, guys. Excellent, excellent panel. And I was just in the wings here, actually asking Grok some questions to test Preston's theory. So I asked it, oh, it's just gone. I did ask it. Yeah, okay. I asked Grok, can you list for me the top 5 Bitcoin sayings? So let's see how well they did. Number 1, hodl. Encourages holding Bitcoin through market volatility originating from 2013 forum post typo. It's got this right. It's a rallying cry for long-term belief in Bitcoin's value. Number 2, to the moon. Expresses optimism for Bitcoin's price soaring, often used humorously in bullish market sentiment. It's got that right. Number 3, not your keys, not your coins. Stresses the importance of controlling private keys to ensure true ownership of Bitcoin, emphasizing security. 3 out of 3. Number 4, Bitcoin fixes this. Suggests Bitcoin is a solution to centralized financial system flaws, popular among advocates for decentralization. 4 out of 4. Number 5, stack sats. Refers to accumulating small Bitcoin units, Satoshis, over time, promoting steady investment. So, round of applause for all you guys for your shit posting on Twitter that is educating Grok on the best points of Bitcoin. And Preston picked up on that, so well done. Then I asked, what are the top 5 Bitcoin arguments? Because we've got the unpopular opinion panel coming up. And I wanted to know whether it's been listening to us yelling and shitposting to each other. But you just get the usual stuff. Bitcoin has no intrinsic value. It's probably listening to Peter Schiff. Bitcoin is too volatile. Bitcoin wastes energy. Listening to Greenpeace, which was funded by $5 million of XRP and their goons. Bitcoin is used for illicit activities, yada, yada, yada. Bitcoin is a bubble. So, keep shitposting, people. That's what you've got to do to educate Grok. So we're going to bring up the panel for unpopular opinion, and that's going to be hosted by Nico, who's come all the way from the US, host of Simply Bitcoin. Nico Moran, please come up, mate. Take your place here. We don't have any pictures. Next up, I see Peter. Peter's ready. Come on, Peter. Peter Todd, core developer. Sergey, I see you're sitting there as well. Thank you. Come on up. And who else am I missing? Giacomo. Giacomo's back. Of course, we got Giacomo and Ambroid. Thank you very much, guys. I was thinking about dropping a grenade on this one, but I'm just going to hand it over to Nico, man. You're going to...
Yo! What's up, everybody? We got to turn up the energy. I did fly out from Miami. I'm still suffering from jet lag. But it's a fantastic panel. Unpopular opinion. So obviously, I'm assuming everybody in the crowd has a similar opinion about Bitcoin, about self-custody. My job is to spice it up a little bit. If I get boos in the crowd, that's a good thing. That means I'm doing my job.
Just
So-
give the mic to Peter and he will immediately.
So I'm going to start off with my unpopular opinion, and you let me know what you guys think. Giacomo is the sexiest Italian man alive.
Popular opinion.
You can do better.
Yeah, I got, all right. Giacomo is the unsexiest Italian man alive. Perfection. Okay. All right, everybody. Well, I'm super happy to be here. This is my first time in Latvia. It's fucking beautiful. I was watching the show Vikings to prepare, and it wasn't like that whatsoever. But anyways, I'm going to start it off with you, Giacomo. Did you guys know that Giacomo is the official ambassador for Bitcoin for the IMF?
I think that's the reference to some other very controversial things I accepted to do. So in Lugano, they wanted to establish a formal relationship between the city of Lugano and the government of El Salvador. So they asked me for real 2 years ago to become the honorary consul for El Salvador in Switzerland. So I say that for 1 degree of separation, what you're saying is basically true.
Well, I was trying to make it a joke, but you kind of ruined it.
I have a real one. Right?
Anyways,
that's controversial. Many of my friends told me you shouldn't because you're legitimizing nation states. But then I ask, do you pay me? No. Can I still shit post on Twitter about nation states being bad? Yes. Do we have consular protection? Kind of. We have to talk with the police and say, okay, I'm sold.
All right, ladies and gentlemen, I'm going to start it off with the trigger, and then I'm going to ask all these fine gentlemen what their unpopular opinions on Bitcoin are. I'm going to start it off with Bitcoin treasury companies are the ICOs of this cycle. Silence. Do you agree?
ICO and treasury companies got nothing to do with each other.
Nothing?
Yeah.
Except for the pumps and the dumps.
I mean, treasury companies, the mechanism is very different with a very different market. You know, the ICO stuff tended to be like much more like stupid retail. Treasury companies are much broader and often much more corporate type of investment base. And like the fundamental idea, I think, of why the treasury company hype has really happened is because it's not really hype. It's that it's actually taking advantage of regulatory arbitrage. You know, there's all this money that genuinely can't go directly in Bitcoin, so you go in one step removed. And as dumb as that is, you know, the people being involved in this, they're not getting fooled. They're smart people. They understand what the risks are, and they're making, for the most part, a reasonable return on it. Now, will this come to an end? Hopefully, because hopefully the regulations will get sane. But, you know, this is nothing compared to like ICOs, which were just genuine, utter garbage nearly all the time.
So I agree with the top treasury companies. Like, of course, Strategy isn't going anywhere, right? 21 isn't going anywhere.
Well, I think they are going something. They're gonna be obsoleted in the future.
What I'm trying to say is that they're not going to implode. But I think like the lower you go down the list, I think some of them will implode.
Eventually, it gets to stuff which is meme stocks.
Are they not the same?
Well, Bitcoin's a better meme than most.
Moving on. What do you agree? Do you disagree?
Yeah,
Are Bitcoin treasury companies the ICOs of this cycle?
Look, sure, you know, I mean, I would say shitcoins, but...
Did you just call them shitcoins?
Yes. I would say this.
Is Bitterfield accepting MicroStrategy shares anytime soon for payment?
Exactly. If it quacks like a duck, and it walks like a duck, and it sounds like a duck, then at least you can acknowledge that it has duck-like properties. Then some guy is going to be, well, actually, you know, and yes, well, actually, you know, it's not entirely the same thing, obviously, but it's, you know, when you're seeing people like launching the 65th, like literally like 4-character ticker that people are investing to, it's like it's not entirely different to like what was going on in the like in the ordinal space a month ago when people or a year ago when people are minting some 4-character combination and it's gonna pump and then it's gonna dump and so on. And I think it is what it is a little bit. I'm not saying that it's, but I think a lot of things in this industry are it is what it is. It's all kind of, you know, it's all created by Bitcoin. Like, like you know how Stephan said that like Ethereum's the mother asshole from which like no, Bitcoin is like we have to be honest. Like it all came from Bitcoin. That's an unpopular opinion, but like there's a lot of bad things or whatever dynamics that come out of it, and we're just figuring it out.
Every asshole is connected to a heart. So Bitcoin is the heart, and then you need the actual asshole. So it's still the same process, upstreams.
Giacomo, though, I have a very important question for you. Now that RGB is in production, when tokenized MicroStrategy on RGB?
Full circle. So you have Bitcoin, you have paper Bitcoin, then you tokenize paper Bitcoin on chain. That will be a beautiful way. That's the next cycle. So when paper Bitcoin are over in February, and then we wait for 3 years, and then we will have tokenization on RGB of treasury companies. Now, my only issue with what Peter said is twofold, actually. First, it's not entirely true that in order to sell garbage to people, you need them to be stupid, and if people are smart, they will not buy it. The people that are buying now treasury companies, Bitcoin treasury companies, are the same people that were buying mortgages wrapped up in other... Yes. Okay, yeah, right. The same people buying the subprime stuff in 2007. It's not that they are not smart. They are smart, but they're following incentives. And fiat incentives are corrupted and perverse, and so they will leverage easy liquidity coming out of the next Fed wave in order to basically throw a lot of liquidity at this. And the second point is that I don't think the treasury companies may be the next ICO in the sense of collapse, because the model itself is not sustainable. The model is just borrow fiat to buy Bitcoin, so it's kind of sustainable. I think the problem is actually self-custody. Most of these companies are not really keeping Bitcoin. They are keeping Bitcoin credit inside of very few underdeveloped and mismanaged companies like Coinbase. So one of the worst companies in the Bitcoin ecosystem, managed by people that don't understand Bitcoin, hate Bitcoin, always try in any way to earn Bitcoin, are keeping the keys of everything which is built on top of this castle, including ETFs. So I think that it's not the mechanism itself that is going to basically get stuck, but possibly some nice, I don't know, if we discover that Coinbase was actually Mt. Gox style insolvent since 3 years, which may very well be the case, is it big enough to be bailed out by the next TARP or not? And if not,
or the next hard fork.
Yeah.
How long until we find out Coinbase has 23 million Bitcoin? So my question to you, Giacomo, is you touched on something which I think all Bitcoiners are really paying attention to, which is this centralization of the custody of Bitcoin. I think it's like 11 out of the 12 ETFs, they're all with Coinbase. All the Bitcoin, I know Sailor's Bitcoin strategy, they custody their Bitcoin with Coinbase. Is there paper Bitcoin right now? Go ahead.
Metaplanet is the only one.
Metaplanet as well. So my question to you, Giacomo, and then I'm going to pass it on to you, is there paper Bitcoin right now? Are we living through paper Bitcoin summer?
Well, I mean, some...
And where's your tan?
It's toilet paper Bitcoin.
I'm not a price expert. I have many trader friends, so I'm not against it, but I don't know anything about that. But it seems like the level of demand is not matching price dynamics perfectly. So I would assume that there is some supply shenanigan going on here. And the fact that this paper company may not be entirely, I don't know exactly the details, but you just need a very small conversion factor. You just need the factor between the treasury company and the actual capitalization need, and then from that to Coinbase, and then Coinbase maybe being in fractional reserve, and you can easily go 10x with the supply compared to real redeemable Bitcoin. So I will just hold my keys just in case.
It takes self-custody at the end of the day. It boils down to that. You, my friend, are the Bitcoin treasury companies. Again, this is not my opinion. I'm trying to piss everyone off and rattle a cage a little bit. But are the Bitcoin treasury companies the ICOs of this cycle?
Yeah, so I'll come back to what Peter said, because it was intriguing, where he just called ICO buyers the stupid retail. So you're just trading stupid retail for greedy institutions instead. And it comes out to the same thing, just in a different scale. And like, can I get like a show of hands? Do you think Bitcoin treasury companies are net positive for the industry or for Bitcoin? Was like 20% in the crowd? So Shit, I was about to be unpopular, but I'm not. I think this financialization of Bitcoin is net negative for Bitcoin itself. And we are just celebrating this short-term price appreciation that's happening. And all of this bundling of Bitcoin into a stonk, into a bond, into credit, into toilet paper is just hugely net negative. And it will impact us long-term from the cypherpunk ethos and the privacy and internet money ethos, right?
Gotcha. Okay. All right. Let's spice it. Let's take it up a notch. Let's take it up a notch. Okay. This is obviously, I believe, fundamentally, I think most people in the crowd agree as well, is you got to take self-custody of your Bitcoin, right? I think that's basic fundamentals 101. But in my lived experience, what I've noticed, what I've seen from people is that what I want to be reality is not what I'm actually seeing. What I think is self-custody is unfeasible for most people just because they're used to the convenience of the legacy financial system. They're used to the convenience of custodians, and they're addicted to that convenience. Now, that doesn't mean it's right, but that's my unpopular opinion. Peter.
My unpopular opinion will be, I think if you don't just talk about people, but you go talk about people in the legal sense, and of course expand it to corporations, self-custody is something that's fundamentally impossible for a big chunk of the what's legally defined as a person, namely your average corporation. Because when you look at something like on the scale, say Microsoft is not any one person. Their C-level employees are not Microsoft. You can't even have a multi-sig among them and expect to get self-custody in the sense that incentives are aligned. So for a company like Microsoft to say, fuck it, let's just have Coinbase do it. That's not crazy. That's just accepting the nature of what a corporation actually is. And even if you're not talking about Microsoft, there's so many entities like this where self-custody doesn't really make sense. And you can probably do it better with some kind of other scheme. Now, when you talk about people, and I forget who that guy heard it from, but it was earlier today, someone made this great point about how to learn how to drive, you actually need to go learn. And that's just an accepted skill. Like every single person in this room nearly has probably learned how to go drive, and they probably spent the equivalent to 2-3 weeks worth of full-time work doing this ultimately. It's fine to say, yeah, this is a necessary life skill, you're just going to have to learn it. Yeah, it's not necessarily easy or intuitive, but fuck you, if you want to be an adult, just do it. And yeah, in the future, maybe that will be part of self-custody of Bitcoin. And it'll probably be 3 days worth of work to learn for any reasonably intelligent adult. People like to take shortcuts, but we may end up in a future where that happens.
So again, the aspect is, yes, I completely agree with you. You take the time, you learn how to take self-custody. At the end of the day, I think self-custody is easier than sending a wire transfer. Like sending a wire transfer seems archaic, especially if it's above a certain amount. You have to go into the branch. They put a rod up your ass and say, where is this going from? What are the source of the funds? But from my lived experience, just not people that are in the Bitcoin world, not people that are watching Bitcoin content, people that are just living day to day, they could not care less, right?
Emphasis on they couldn't care less, but they were certainly capable of it.
They're capable of it, but they're lazy.
Yeah, I think that's a real story we've got going on here.
I think it's perfectly normal to be lazy about this. You cannot split your focus on everything, right? There are certain things that you just don't have the mental and emotional capacity to care about. And using money is one of them, and you just use it,
In much the same way, some people are quite lazy and will probably go use self-driving cars.
Giacomo.
I totally agree in this case, so it's maybe not so unpopular. So if people cannot just drive cars, but even read and write. Reading and writing is hard. You take years to do it. And remembering 12 words is not that hard. The point is that they don't have any incentives to do it because for now, in most of the world, if you just trust an external party, it goes well. Up until it doesn't. Like if you are a Canadian trucker, then maybe it doesn't work anymore. If you are from a country that is problematic, that doesn't work anymore. So it works until it doesn't. So the problem is of incentives, not of capability. From a point of view of capability, memorizing 12 words with BIP 88, 85 is trivial. The problem is that why doing so? I disagree with Peter on something, though. Microsoft is not the C-levels of Microsoft, but at the same level, Coinbase is not the C-level of Coinbase. So in a way, we still have to do to solve technically some corporation ownership at the technical level for intermediaries like Coinbase. So at this point, what is the pressure for Microsoft to add an intermediary in the loop, if not as a legal excuse?
Because the difference is an entity like Coinbase can specialize it. And
Specialization.
they can go and do the hard work to make this mismatch less of an issue. Of course, the alternate argument there is, well, if we just all go custody at Coinbase, we'll just do a hard fork when they lose all their money.
Yes.
Can I introduce an unpopular opinion to this?
Absolutely, that's the whole point.
I think.
Do you think Giacomo's hot?
That would be unpopular. I think. One of the core unpopular opinions is that Bitcoiners, we end up telling people what to do a lot, and that's contradictory to the goal of Bitcoin being, for everyone, for everything, and so on. Yes, there are certain core properties. There's things to advise about, and we need to be mindful of what is advice. But it's like Bitcoiners very often, like, there's always this tension, right? And many of our debates and popular opinions always come down to the goal of like, well, is Bitcoin for everyone and everything, or is Bitcoin supposed to be this pure? Many variants, and so like, yeah, it is what it is. Like, I think a core property of Bitcoin is you can do whatever the fuck you want with it. It's my favorite property of Bitcoin. Personally, I think you should have self-custody, but like, it is what it is,
But wouldn't you guys say that Bitcoin has failed? Because wouldn't it turn into the same situation that gold is in, right? Like the whole reason that gold, quote unquote, failed was because of the centralization of the custody of gold. You can make the argument that it was because of gold's physical characteristics, but Bitcoin...
Failed at which goal? It's very important because there's different goals for Bitcoin.
Who said gold failed?
Yes. Is that unpopular?
I wouldn't say gold has failed at what the people who hold it generally want it for. They like the fact it is a store of value that's very decoupled from other stores of value. And in terms of custody, it seems to go work well enough for the main customers of it, which are central banks.
It hasn't failed, it just become obsolete for modern use cases.
It failed to compete with fiats for payments and for normal finance. It didn't fail to become a plan B for treasury.
So
But also mostly it failed to compete with fiats in the political sense, not because gold didn't do what gold promised to do, but rather because people would rather have something else, namely something they can go inflate.
So let me rephrase the question. Will Bitcoin have failed if most people on planet Earth are outsourcing the custody of their Bitcoin to an institution rather than taking self-custody themselves?
No.
Are they still using an internet money wallet in which they're signing transactions, but not with Bitcoin?
I did not understand what you said, dude. I'm sorry.
In that example, in which all Bitcoin is stored with institutions, are people still using cryptographic wallets with some other type of internet money?
That's a caveat, though.
But everything is
Custody by itself is not the important thing about Bitcoin. It is the general set of properties that you wind up getting. So if all it was that the majority of people were using Bitcoin through third parties, I would not say it has failed. In particular, because the way that could happen could be something actually kind of boring, like, well, yeah, we got to 10 billion people, and we scaled by having like half those billion people run really simple non-self-custody things on their dumb feature phones, because actually the majority of people on the planet don't even have smartphones to begin with.
So can I
it
dumb
depends
this
on
down?
how you measure this, and just the self-custody thing is not necessarily important. Also, in reality, how self-custody are we really with our phones when this whole software stack is produced by other people and what's actually relatively proprietary systems? I mean, there are degrees of self-custody.
So how about this point of view? Self-custody of gold failed historically. it turned into paper gold, right? Therefore, over a long period, gold itself failed. Can we? No?
I would agree with that.
If you had an ounce of gold, you could buy a nice tunic in ancient Rome. If you manage to self-custody that through all the craziness and gold standard and Bretton Woods and 71, you can still buy a nice dress now. So if you manage to self-custody, you succeeded. The point is that the point is how graceful it fails when it fails. So in the case of gold, being that so many people were using it through custodians, when Roosevelt wanted to scoop it out, to steal it, it was very easy to steal most of it. With Bitcoin, we have to be in a situation in which the failure of the centralization is just more graceful. Because maybe, I think the right question is not most of the people will do self-custody, but most of the volumes, the money. So game theory is not a democracy. If 6 billion people have self-custody or not doesn't really matter for a possible contentious fork. The point is how big merchants are doing and where the big volumes are. It's a matter of how much and how much volume you are receiving as payment. So economic nodes, as they say. So I think that as long as that is not super easy to capture into imposing new rules to Bitcoin, I would say that it will fail in the same sense that, like, did Noah's Ark fail? Well, not for Noah, but for the other people that didn't get on board. Yes, they just stayed down, they didn't want to join, and they droned. I mean, sorry.
But wouldn't you say we're heading in the wrong direction, Giacomo, since the introduction of the ETFs?
No, I would disagree. I think that that's inevitable. So it was inevitable. Now, so we have basically two teams playing here for Bitcoin education. One is Bitcoiners trying to educate others, which could be a little bit preachy, and Sergey is right. The other is governments doing their job and censor and print the shit out of everybody. If they do their job correctly, people will just abandon ETFs because the first time the first time that your ETFs are cancelled because you are on the wrong geopolitical list, then the education effect of that will be better than any Bitcoin course we can do. We just have to wait for the adversary to do properly their job, which is to print and censor. And we just prepare the arc, and we just say people come on board. If they want to stay down, we wait. But the point is that we are not making it rain.
Interesting. Okay. All right.
Okay, you can clap. But
I hear no boost. That's the problem.
It was a shy clap, so this is still controversial to some degree. Maybe yes. Okay.
It was a respectful clap.
Okay. How about this? Is Bitcoin heading in the wrong direction with the ETFs? I don't know. I think that we have much less control of the direction of Bitcoin than we would like to think, and that Bitcoin is just a thing, and things happen, and people use it, and so on. I would say that, you know, Bitcoin has unlocked a lot of things that we couldn't do before. Probably we're learning that Bitcoin might not be the end-all, be-all for all things, everythings. Maybe that's okay. Maybe people are doing with stuff with Bitcoin that we don't like. That's part of the design, you know, like. So yeah, it is what it is, and it has created a world in which if you don't like what it is, well, you can try to build something else.
Well, concretely, from a technical point of view, you know, as we all know, Bitcoin soft forks are activated by wearing hats. And how does an ETF wear a hat?
Right, so it's not proper, it's against the standard. But I think something Peter said...
a fork, actually.
I think Peter said something controversial, which we could pile on, which is true. Real self-custody was never tried. Like you said most people cannot self-custody, and we say no, they can. But it's true, nobody can really self-custody in the sense that at least at the hardware level, we are still trusting some central points of failure. So it's really not black or white. That doesn't mean we have to get or nihilist and just say, okay, since it's impossible to be perfectly trustless, so let's just go on Coinbase. But it's true that if we are striving for something which is impossible, we are never reaching the goal. So objectively, people can memorize a key, but then we still need to struggle for hardware that will not keylog the keys, like they are proposing right now in the European Union and other Soviet places. And we have to basically still keep fighting to have the maximum possible level of autonomy, which is an eternal struggle, is never over. So real self-custody is impossible. Just like perfect health is impossible. We have some kind, we always have something, some cell, which is dying in our body. That's necessary. But we still strive for the maximum possible health. Self-custody and censorship resistance is the same. We cannot achieve perfection, ever, but we have to keep curing it and curing the disease and making the failures graceful in.
So it's a constant war. It's not black and white. There's layers of gray. So I'm going to pass it on to Giacomo. Giacomo, what is your unpopular take on Bitcoin?
So now I'm shy because I'm
trying to put you on the spot.
So I think that the things that I try to push about Bitcoin that always fade is to try to rename the Lightning Network, not in the Lightning. So I have this point here. People are saying the Lightning Network is obsolete because now we have Arc, we have Spark with the state chain, we have Liquid to some degree with the swap. And I'm trying to play a semantic trick by saying that the Lightning Network is actually the network of swaps and hopes, and the channel, the Lightning channel, is irrelevant. That was a failure. I'm trying to push this narrative with Roy, I think he's around here. But so far, people are saying, oh, don't use Lightning, use Liquid, use Spark, use Arc. So it's a very nerdy kind of unpopular opinion, but I will keep fighting because I think that's a very good marketing.
I'll be nice to you and say, yeah, that's just a stupid idea.
Yeah, of course, I was counting on that.
Sergey, what do you think?
About that?
Never mind. Peter.
Yeah, I would say this. I think, here's my unpopular opinion. I think Bitcoiners spend too much time fighting with each other and arguing, and that is like probably a key factor in preventing Bitcoin in terms of transactional, wallets and all of that stuff.
He said while arguing with other Bitcoiners on stage.
Of course, but yeah, sure. I mean, there's supposed to be an unpopular opinion, and I mean, like
we're forcing it.
But my point is that, like, again, if we want Bitcoin to be for everyone, and then like even this small group, like today, I mean, I found out that there's 2 ARCs and 1 Spark. There's 2 RGBs and a test. Like guys, come on! Like, and all of these are like things that are like don't have any users yet. Yeah, and there's like already like a bunch of different stuff. And like, yes, sure, we need to try and build stuff, but there's also like a lot of energy going out on, it's not true Scotsman. It's not real. It's not real socialism. If it's not from the EU region of socialism or whatever. Like, come on. At some point, I think we need to figure out that the minimalist vision of Bitcoin, which is, well, what are the consensus? What are the small subset of things that we actually care about, and the rest is just like whatever. You guys do whatever you want, and kind of accept that, because like looking from the outside in, it looks like we're fighting a lot about things that most people don't understand or care about.
Peter, what is your unpopular opinion that will trigger or instigate Sergey, Giacomo, and dude, I'm sorry, bro, I don't know how to pronounce your
Ambroid.
name. Yeah, Ambroid.
It's fine.
Yeah. What is your unpopular opinion?
Well, I could do the popular thing and give the popular opinion they might be thinking I'm going to say, but that kind of defeats the purpose, doesn't it?
You have to trigger them. That's the whole point.
Go unpopular.
Ooh, let's see. What's the best strategy?
If you
for
guys
this?
start fighting, like I'll get invited back, type of thing.
I mean, it's the audience you're supposed to trigger, not us. Us is it.
Yeah.
I mean, we're friends, but when you put this fucking wizard hat on, I hate you a little bit, so you know how to trigger me.
Yeah, but I mean, they had free drinks there.
Okay. Point
like, I mean, it's a beautiful thing about like Taproot Wizards. Like, they get all this money coming in, probably actually from BSVers to go destroy Bitcoin, and then they throw great parties.
I'm triggered, Nico.
Plus, also, I mean, is RGB really good for Bitcoin? Although we're kind of on the same side there, because like I invented the tech, and then you kind of made it happen, and other people made it happen. So like that's not
actually.
Yeah.
He invented the tech. I just repeated it, and other people made it up.
Yeah.
But we're happy. Like, we spent 7 years with 0 production-ready implementations, and now finally we have 2 incompatible implementations in a few days. So congrats, guys. I'm super happy about that. And anyway, I think they will be made interoperable by swapping. So I don't care.
So how about this? Bitcoin has become a cult, and everyone in this room is part of this cult.
But that's a popular opinion.
No, hold on.
I love our cult, bro.
Hold on,
This
I'm
is how
following
we
up.
get confidence.
Wait.
Rich, dude.
Wait. The fact that this has happened and the perception of it worldwide is holding Bitcoin back, and therefore it will not gain the adoption that it should gain.
Bro, there's
because
a
of the perception of a cult.
There's a literal pyramid with an eye on the back of the dollar bill. Is that not a fucking cult?
Hang on. I've been to a lot of places in the world where cryptocurrencies are actually pretty widely used. Now, one of them being El Salvador, which is kind of a special case. But the other one, places like Eastern Europe. I mean, Ukraine's an example.
Where specifically in Eastern Europe?
Well, Ukraine is one example. Macedonia is another example. There's a bunch of examples like this. And just as an example, you can go to Kiev, you can go to many laptop stores, buy a laptop, and pay with USDT. Now, they like this because it's a nice, efficient way to go move money around to their suppliers and so on. Do they give a crap about Bitcoin? Well,
let me twist it.
No, well, hang on. So I'll say they don't give a crap about that. But the catch with this is that because Bitcoin has this weird cultish, weird disagreements and all this, it's much better able to get mind share among store of value stuff, whereas these laptop guys, they may not actually give a damn about cryptocurrency. They just want another way to pay. And this is why USDT on Tron is very popular. It just works instantly. Yeah, they'll probably at one point lose all their money when it fails, but they don't keep enough on there to matter. They're not custodying.
Okay, but everything you're saying is irrelevant to Bitcoin.
He's saying the tool may use the cult as an additional marketing tool on top of the actual pragmatical tool. But I will twist with
because we hold Bitcoin, which is the very big difference between so many of these other things. You kind of need a bit of cult to make
they don't
the
have the
holding
cult.
work.
They just have the tool, and the tool is pragmatic. But let me twist it. I will say that Bitcoin is not enough cultish. Because,
I agree with you 100%.
Okay, we can do better, guys. For example, we needed some signatures for the statue Lugano and stuff like that, and we posted, and we get 300 in a day. That's not how a cult behaves. If cult leaders are asking you to give money, to sign petition, you should just go and do it. That's what a cult should do. So this is a cult of free thinkers. Yeah, but they have my opinions. Slay your heroes. I don't really understand why. Stop thinking. Be more cultish, guys. We need you.
Slaying heroes is not a Bitcoin unique cult property.
Giacomo, if you were to nominate one person to be the cult leader, who would it be?
Thank you for the promotion. I accept it reluctantly, but no, actually, I made a presentation in Mexico a few years ago about Bitcoin not being cultish enough because we are very bad at leaders. We are, of course, I'm ironic. It's a good thing. We took the Slay your heroes thing pretty literally. Maybe even, okay, let me switch again. Maybe even too much, in the sense that right now the game theory of leadership in Bitcoin is a little bit off. So whenever you become relevant, you get attacked immediately by principle because Bitcoiners hate any kind of authority. So when you actually sway off and you start shitcoining or you scam people or you launch an ICO or whatever, Bitcoiners will turn against you, but you don't care much because they were already shitting on you all the time anyway. So I think that maybe we could be nicer with popular figures until they really fuck up, so that when we turn against them, it's more relevant because at least they lose something. We give them something to lose. So wait to shit on people until they really screw up would be my request.
Fantastic advice. But I'm going to reject your framing, dude. I don't think Bitcoin's a cult. I don't think Bitcoin's a cult, because if Bitcoin is a cult, then what the fuck is fiat? That shit's the most cultish thing in the world, man.
Now, hold on. I'm talking about the perception of the cult.
But it's a cult. Dude, it's still a cult, bro.
No, it is a set of incentives by people imposing it on you. They are not a cult. They're just imposing something on you for their own good.
In a way, maybe fiat is closer to global religions because you may repeat some rituals without even being a theologian. You just don't think about it. You repeat it. So people will trust the figures on the dollars, but it's not considered a cult because it's majority, it's popular, it's what everybody does. The cult by nature is a little bit more contrarian, so it's connected to a subculture, and Bitcoin fits that better than fiat. Fiat is the delusion that everybody follows already as default. So it's like a fake, well, actually, nation states are a fake religion, quite literally from the history of religion point of view. So fiat is a ritual of the biggest fake religion of the world, which is the nation state.
That
Can I
sounds
have another
popular.
shy applause? Okay, thank you.
It's supposed to be unpopular opinions.
I know.
This is kind of hard, bro.
All right, I can say something that might actually be unpopular here, which is that nation states are actually pretty damn effective. And
yes,
unfortunately, once you start getting into things like war, you really don't have much choice to go create nation states or if you want to go win. Like it or not, power comes in groups of very large numbers of people. And it is very hard to go replace that. And I think like a lot of sort of libertarian ideology around Bitcoin, you know, I would call myself a small L libertarian. And that's a very important distinction. Because I quite happily accept that, yeah, we're going to wind up with government. And we're going to wind up with pretty large governments. We would like it to do less than the natural bureaucracy wants it to. But the reality is it's still going to do a whole lot in society, or we're just not going to have a society that works because some other fucker is going to go create a government and then go attack us or subvert us or something. And unfortunately, you need scale to defend yourself and also to make industrial society work.
Effectiveness is not an excuse for unethical behavior. If you have to repopulate a nation, a mass rape is very effective, but it's still something you shouldn't do, and other people should stop you from doing. It's sometimes like atomic bombs. Oh, let's not touch that with you. But let's say there are many things that are very effective, but still unethical, and it's better to lose ethically than to win unethically. Otherwise, why the fuck even take an ethical mission in the first place?
Would you like to lose ethically if you die in the process?
Well, that's the whole point of doing the different choice. Otherwise, we just follow like animals. We follow the easiest path, and that's something you can live like that.
No, I'll disagree there because you can win unethically and then go back to your original ways now that your enemy's dead.
Usually that is tricky because it creates the wrong incentive. So to try to be criminal just for now and then to switch back to non-criminal behavior tends to be hard to do. Just like, I mean, the founding fathers tried to create this kind of special case of ethical state, ethical nation state, and then now it didn't exactly went the way they expected.
But it did work pretty damn well.
It worked.
Like,
it worked until
the
the
U.S.
central
is
bank.
still very free.
Yeah, but in 300 years, it really deteriorated a lot in terms of freedom. While the Brehon law in medieval Ireland, it went on for 1,000 years because it was very decentralized, not a nation state. So by comparison, it did fail pretty fast. So the point is that when you have something bad, you accept that you may not be able to eradicate it, just like cancer, like a sickness. I may not be able to destroy cancer, but I don't want to just say, okay, there is a minimum level of cancer that we should all have and strive for and defend. No, the least, the better.
It's like the old saying about that libertarians are like house cats. You know, they're mean and irreverent and completely oblivious to the system on which they are completely dependent.
Well, to a degree.
That is very true.
So yeah, maybe here's another. Okay, I guess it's unpopular when I agree with Peter. We're not supposed to do that. Maybe it's the case that like libertarian values cannot only be defended by libertarian values alone.
Well, I mean, I picked this T-shirt for a very good reason. I mean, of course, it's some Ukrainian fundraiser for yet another military organization buying drones. And the irony there is you simultaneously have a massive military organization, government-run, but then it's doing decentralized crowdfunding, and the actual production process for all that stuff is about as decentralized as you can go get. So you get all three things, and everyone can hate it in a different way.
Also, it's pink, so it's a little bit woke leading, LGBT stuff.
Yeah, nice brick pink.
Hey, dude, war is okay as long as it's woke. Peter, question for you, though. Going back to what you were talking about the United States, it being free, I would say that really, like, the freedom aspect of the United States and, like, the original vision of the Founding Fathers, I think it stayed intact, really, until 1913, until the establishment of the Federal Reserve, which happens to be the same year that the federal income tax was established as well.
No, I think it stayed intact well beyond that, compared to any other place in the world. Like, having taxation is not a major impediment on freedom. Being controlled and what you're allowed to do, that's where things really start to take a big turn. And that's the difference between a place like the US and a place like the UK, which is saying, well, you know, not only do you want some of your money so that we can have a government that actually works, we also are going to say that, well, you can't do that, you can't do that, you can't do that. In fact, you know what? Ask us permission before you come up with something new to do.
One thing leads to the other, because when you, if you want armed goons to show up at people's house to arrest them for opinions, you need to pay them. In order to pay them, you have to, since you don't have a real job because you're a government, so you're not producing wealth or services, you are just robbing other people. So the key of everything is robbing. The point is that with the Federal Reserve and the fiat money, they engineerize the way to rob people without even showing up with a gun, which is inflation under legal tender. So now I guess that they have infinite amount of money to pay for the armed goons. But I would say that economic exploitation is really at the root of infringing on property rights, because if you don't have the money to pay for the goons, for the henchmen, you cannot really enforce a lot of bad practices.
No.
The UK could not send you cops if they don't pay them.
The problem with that idea, though, is you may go say it's at the root of it, but it's sort of like saying like oxygen is at the root of evil. Well, yeah, all right, technically we take away the oxygen, we're going to get rid of the evil just because everyone dies, but that's not a useful way to go put it. Unfortunately, the reality is if you go take away enough taxation, you're going to wind up with a bunch of disjoint people who don't have collective self-defense, and the bigger tribe next door is just going to go take their shit.
I don't think Taliban's or Viet Cong's has a very strong income tax system. They managed to defend themselves pretty well. Decentralized defense is inefficient.
The USSR backing it with communism. That's not a good example.
Yeah, there was the Soviet Union sending money. But like to Taliban, not even that much. So it's
No, Taliban was funded by like Iran, again through taxation.
We can still accept donations from our statist friends. The point is that we should not rob people directly.
So you're saying that a country can't defend itself without a centralized taxation system?
Against another country with a centralized taxation system that wants to attack them, that seems to be how technology works. Now, I'm not going to make the claim that it's utterly impossible that maybe a technological change changes this. And it's probably true that maybe 1,000 years ago this would have been a different discussion because war worked at a different scale. But currently, the nature of how war works in large-scale conflict is that there is no such thing as defenses that work. They can always go and breach your defenses and destroy you locally. You have to organize at such a scale that you fight back. And that does not seem to be possible with the current type of technologies we have. Again, things could change. I'm not going to rule out completely radical tech that changes all this, but that's just not how it works today.
All right, last question, gentlemen, while we wrap up. Peter, starting with you. Does Bitcoin end war? I think you already gave an answer for that.
Not only does Bitcoin not end war, like cryptocurrencies are used right now in Ukraine for military procurement precisely because it makes the banking bullshit easier to deal with. Like, it's a great way to go pay for this stuff. And I would say more generally, it's just orthogonal. You know, Bitcoin does not get rid of taxation because you can still have reasonable levels of taxation that people wind up paying regardless of how they transact. And people often voluntarily choose to fight. You know, that is one of your biggest problems. Like when you look at a place like Gaza, yeah, that war is actually pretty popular. Taxation is not the issue here. It's what people believe in.
It's a weird question because Bitcoin just doesn't care about war, right? It could be used there or it just isn't. It depends on where it happens.
Let me rephrase.
Black holes prevent war because they suck everything into a black void and we all die. Bitcoin can't do that.
Let me rephrase it for Sergey. Sergey, does Bitcoin end endless wars?
No, I think wars are an element of human nature, but I think Bitcoin is still useful in that in situations of war, it can help individuals. Yeah, and I think that that's what Bitcoin is about.
And ending it with our dear cult leader, Giacomo, does... Round of applause, please.
Before I even...
Giacomo, does Bitcoin end endless wars?
No, it ends modern warfare, which is only possible due to the fiat incentives. That doesn't mean that the conflicts will end. Conflicts were part of the human nature forever, but they were centralized to a scale that was impossible without the fiat machine. So funding wars without debt is impossible, and creating infinite debt without fiat is impossible. So I think that it re-decentralized warfare to a level which is different, which may seem the same, but it was not the same. Until Napoleon, it was basically unheard of to enlist civilians, and well, occasionally you have the pillage of the village.
Giacomo, this is complete bullshit. Come on.
No, it's not. So
it is. Like, throughout the entire human history, there have been constant conflicts, constant wars.
That's what I'm saying.
The scale just increases with industrialization.
Dude, you can't disagree with the cult leader, bro.
It will be just burned at stake later, but... No, you have my pardon because it was the panel, so you can hear. But no, my point is that there is war, but there is even more. So in the first week of American Civil War, you had more gunfire causalities than in most of the Wild West gunfires. So which one was more violent? Of course, in the old Wild West, you have a lot of people shooting each other, but there are small local conflicts, and you have a lot of psychological effects because you read about 1 million conflicts. With one civil war, you have a scale which will create more.
Okay, and how does that equate to fiat? Because there was still gold standard during American Civil War. Am I wrong?
That's a very good point.
I mean, speaking of the gold standard, Russia literally was shipping plane loads full of gold off to Iran to go pay for drones. They were not paying for this by debt. They were paying for this by stuff. And they bought a whole lot of stuff with a whole lot of other stuff.
Not Bitcoin? And how do you feel about that?
Well, they
had a pile of gold in vaults, so why not?
When you had gold, so fiat is not something new. Fiat didn't start with 71. Fiat started with a process. First you have physical gold. Then you have the coins, they may be debased. Then you have the banknotes, they may be fractional reserved. Then you have the banknotes without the backing in 71. And then we have CBDC. So each step in the fiatization of money increase the scale of government debt and government workforce spending. So it's not like a magical solution, but getting back in the scale, we reduce the centralization
You're
incentives.
just mixing up causality there, I think.
Beautiful.
Yeah.
All right, gentlemen, we are...
All right, I'll just
final
say,
thoughts.
I think you are treating fiat as magical. From an economic point of view, the reality is, reality can't be fooled. This is why fiat turns into inflation, which turns into real economic effects. Thinking that, you know, this stuff can actually be used for all this stuff is actually making a cult of fiat, whereas a more sane thing to accept is, no, how you do the counting isn't that important. What matters, if you want to go fight a war or fight whatever the hell you want to do or spend money for whatever, you have to actually have the production capacity and the ability to convince people to go and use the resources they have to go pay you. That is what matters. How things are counted is not.
Well, the means is not is more important than the end. If you want to be different from your enemy, you should be different from your enemy. Otherwise, the most effective way to win the war is just join the enemy if you are identical to him, ethically speaking.
Beautiful. The whole point of this panel was to trigger them. That succeeded. Guys, this was Unpopular Bitcoin Opinions. My name's Nico. Give a round of applause to our dear leader, Giacomo.
Blessing.
Thank you, guys. Excellent panel. And thank you to our new high priest. So we're officially a cult. Thanks, Nico, for flying over and making us into a cult over here in Europe. We are now, that's the end of the day. So this will all kick off again tomorrow at 10 a.m. But announcement, the bar here will be open. This area will be open for the next hour or so. So there's no need for you to rush off. And from 6 o'clock, at the basement pub key bar, and you can find that if you go to the Honeybadger website, that's baltichoneybadger.com, you'll be able to scroll down and find the address for pub key and basement after party. And the pin is there for you to go and find that. That will be open from 6 o'clock, but like the official party will be on from like 9 o'clock. And we'll have a bunch of cocktails and whatever else. And everybody is welcome to go there and join in. So thank you, everybody. That was an excellent first day, and I'll see you all tomorrow.